only shopping we are doing is just doing some balancing here or there. That too, large cap stocks, that's it, banks, IT companies, stocks like Larsen and Tobro, that too for incremental capital coming into our portfolio management scheme or cash flows coming in from business. So the tilt is more and more towards large cap stocks.
In banks, you want to tell us what you've bought recently and even in IT?
Usual disclosures, of course. Banks, of course, Axis Bank appears to be the most attractive and in terms of valuation, and it's been an underperformer, but that should do very well according to us going forward. There is scope to narrow the valuation gap between Axis Bank and other peer group banks like HDFC, ICICI, Kotak. And within the software, I think the larger ones, TCS, Infosys, but these are purely, just to keep the money invested in some stock or the other, not be in cash, because we are in the midst of a absolute raging bull market, and there's only so much cash you can keep on your books. So whenever the cash levels cross a particular level, you just go and buy one of the large cap stocks, index stocks, and hope that those work out well for you.
Okay, well, Reliance was the one that participated yesterday and suddenly, has found itself a new set of wings. Dipan, hi, good morning. Any thoughts here? I mean, do you think Reliance could now play catch up, and is there more to go?
See, I think, Sonia, it's a well-discovered story, and all that is left for investors to figure out in Reliance is how the listing of the two subsidiaries, Retail and Reliance Jio, is going to take place, whether it's going to be a pure IPO, whether they're going to split the company. I think that's the only question which is to be asked. But it's just Reliance is playing catch-up with what is happening in other stocks. Mid-cap stocks have rallied significantly. So in a way, large-cap stocks are just about catching up with mid-cap stocks. So that the valuation gap, which is much higher for mid-cap stocks, that valuation gap is gradually being closed with large-cap stocks now rallying.
Okay, so you're saying that Reliance is a well-discovered story, right? What according to you, is a story where there is enough and more scope now from here on? I mean, I take your point entirely. Valuations are looking a bit sticky across most large caps. So in the mid and small cap space, anything that stands out for you where retail investors can look at?
Yeah, I think that banks are interesting space to be in. And I heard Lata about the inclusion in the bond index. That's positive for banks. It may help them gain some trading profits on the bond trading, which they do. Secondly, I think interest rates have completely been capped, and from here they can only go down. And as liquidity improves, then the stress on raising deposits can go down for the banks, and that may enable them to increase their net interest margins. Also, on the whole, economy is doing well. Real economy is also doing pretty well. So demand for credit should be pretty decent. So from that point of view, even in the mid cap, like look at a bank like Federal Bank, it's quoting at, I think, single digit type of price to earnings multiple, I think 10 times max if I remember correctly. And it's a business as a bank, it can easily grow at 14-15% on a compounded basis for the next several years, given its size and given its kind of structure and its brand and its tech platform. So I think that incremental money should be looked at putting into large cap banks or mid cap banks, banks like say IDFC First, smaller banks, CSB, so on. There are so many of these smaller banks. Of course, our preference is for the private sector banks rather than the PSU bank, but PSU banks also should do equally well. So when you're coming to zero in on mid-cap stocks, I think the best space to be in are the banks, private as well as public.
No, absolutely. Stay with us, Deepan, coming to you with more questions. But Anuj is here with a quick look at the trade setup. Anuj, good morning. What do you have?
Morning, Prashant. Well, the market's been quite strong, and today could be a bit of a test because it looks like for some odd reasons that the GIFT Nifty is showing a bit of a downtick. But anyway, the Nifty has been making higher lows. And not just the fact that it's been making higher lows, but the fact that those lows are coming in the first hour itself, in most cases in the first 15 minutes. If you look at the last 3 days, for example, on June 24th, the low was 23,350. We closed at 23,537, almost 200 points higher. Next day, the low was 23,562. We closed at 23,721. And then yesterday's low was 23,670, and we closed at 23,868. So in that sense, it's a market in which almost every day it's giving you an opportunity in the first 15 minutes, and then the market's ending at day's high. Could today be a fourth day in a row? Who knows? There's also leadership from big stocks. We spoke about HDFC Bank earlier. Yesterday, there was 1,700 crores of delivery buying in Reliance, and that hit a fresh all-time high. If you look at the long-short exposure of the FIIs, what's interesting is now that the Bank Nifty's expiry is out of the way, It will be interesting to see how many of these 2 lakh contracts get rolled over on the long side, on the Nifty. I mean, the Bank Nifty rollover is done. Now, we started with 3 lakh shorts. We are at 2 lakh longs. What you don't want as a bull is that you start the series with, say, 1 lakh long contracts, because that can be a bit of a problem, but then we'll find out once the expiry is done. One good thing which happened in yesterday's trade was the put-call ratio cooled off a bit from the highs of 1.38 to 1.31. Coming to levels then, on the Nifty, the first support that I'm watching out for is 23,750 to 23,800 based on the options. And then, of course, yesterday's low around 23,670 thereabout. On the upside, 23,850 to 23,900, yesterday's high zone. And then on the option side, 23,950 to 24,027. And my gut feel is that if you start to cross 24,027, you could see another up move perhaps in the market. On the Bank Nifty, it's very extremely overstretched now and perhaps needs some consolidation. Just to give you a perspective, the 5-day exponential moving average is 52,100 and 10 days at 51,400, which means that the Bank Nifty could fall 1,200 points and still be in an uptrend. That's the kind of move that we have seen in the Bank Nifty. I've converted my charts to hourly charts to look at the support levels on the Bank Nifty. The first support is 52,650 to 52,700, the 10-period moving average, and then 52,400 to 52,450, the 20-period moving average on hourly charts. The resistance comes in at 52,950 to 53,000, the all-time high, and then 53,100 to 53,300 based on the pivots. As always, I leave you with the quote of the day, and this one comes from Stephen Covey. The key is not to prioritize what's on your schedule, but to schedule your priorities.
Okay, so schedule your priorities, guys. Schedule your vacation, schedule your holidays. Don't miss out on any of that, okay? Anuj, thanks a lot. Thanks a lot for joining in, talking about the markets and some life lessons.
In our parlance, not Stephen Covey's, but our parlance, it's called Rumal Dalna. Schedule your priorities.
Okay, well, let's do one thing. Let us get straight to J&K India. The company has secured mega orders from Reliance worth almost 350 to 500 crores for gas cracker unit projects in Maharashtra. To discuss more on this order win, Deepak Bharuka, who's the whole-time director and chief executive officer at J&K India, joins in now. Deepak, thanks a lot for joining in. Tell us a little bit about the order wins. And, I want to understand from you, what does this mean? I mean, your Q4 numbers were very strong. Your top line more than doubled year on year. So tell us this order that you've won from IOC and a couple of others as well. What does this mean for your revenue trajectory? Where do you see FY25 in terms of growth?
Thank you. Good morning, and thank you. Nice to come on the CNBC in second time in last 2 months. Yes, this order book from Reliance means a lot for us. This is one of the highest value order. Actually, we own 2 orders, one for Maharashtra, other for Gujarat for their Dahej plant, as we have declared on our declaration. So exactly, this is the first time we'll be doing the cracker in India. We, as a J&K, we have done a lot of cracking furnaces over the globe. But then in India, we'll be doing, so this is the entry into this sector for us in the Indian market. And that's what it means a lot for us, considering our, of course, revenue is likely to grow 25 to 30% in this year. That's what we are expecting, and this order will be executed in over the next 21 months. So we expect all this revenue to come in our book over the next 2 years period.
Is this the first order from Reliance Industries for you? And what does it take your order book to? Because even your order wins in the current quarter, because you won an order from IOC too. So first, from Reliance Industries, how big a client is it? Can we expect more orders? And 2, tell us the order wins and what the current order book is.
See, this is third order. This is like third and fourth order. In the past, we executed 2 orders for the Reliance. So this is not the first order, but value-wise, they were quite small in like double-digit orders, what we executed in the past. Of course, we expect many orders from Reliance. As we see after election, a lot of these end users are increasing their investment in their capex in this segment, particularly in the petrochem segment. Not only Reliance, you also know that BPCL has announced the cracking plant. Then GAIL has also announced. Now IOCL Paradip also is coming up with a big cracking plant. So all this will give a huge amount of opportunities for us going forward for the period of next 6 months to 12 months.
Okay. So when you talk about opportunities, right, what does this mean for you in terms of your balance sheet? Because I do notice that your working capital days have spiked up. There's been an increase in your receivables as well. I just want to understand what is the receivable situation, what is the working capital days that we're looking at over the next, say, 12 to 18 months?
See, the only primary reason why we have gone for the IPO was for the working capital. That's what we mentioned in our RHP also. And we are anticipating the orders of this size, and we are anticipating more orders from domestic and international market of similar size. And that is why we have gone for the IPO 2 months back. And we expect this receivable situation will be more or less same. We are trying to reduce the number of days receivable we have, but still it is around 100 plus we have. And because of the nature of business we are into, receivable more or less will remain on the similar trajectory.
A similar trajectory, by that, what do you mean? I mean, what kind of receivables are we at currently, and how much do you expect it to be over the next 1 year?
Currently, we have like approximately 200 crore plus receivable from the market, and we expect as we move forward, it will be in the similar range. Actually, receivable largely depends on the nature of contracts we are into. It's like last year, most of the contracts were from the PSUs, where your payment terms are not so favorable when we work with the PSUs like IFCL, NRL, BPCL, all these. Their payment terms are a little stringent, and which puts a lot of pressure on the receivable. Whereas when we work with the private companies like Reliance or SR or any other companies, their payment terms are much, much better, and we don't expect the receivable situations to be as bad as we had in the last year. So we expect some improvement, but not largely, mainly because of the nature of business we are into.
All right. We'll leave it there, sir. Thank you very much. And I hope we look forward to the third interaction soon.
Thank you.
Good speaking. Well, we'll take a break here. We are back. We'll connect with our technical experts, Mitesh and Sudarshan, to join us. We'll ask them specific trading ideas as we start today's session. Stay with us.
But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment, or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
Service by way of hostel accommodation is presently investing.
Okay, welcome back. There's 8 minutes to go for the pre-open session. Mitesh and Sudarshan are with us with what they're making of things. Mitesh, how would you look at things? Getting a little maybe sort of overstretched on one side now, a bit of consolidation needed, and how would you trade it?
So, Prashant, yesterday also we had a bullish view, and Reliance kind of helped the markets move up. And the first time, I think, I would say that there could be some slight pressure in case we don't fill the gap down immediately. So I think, I think a pullback to about 23,600, 650 zones will happen, but doesn't look like a market which might turn on the negative side. So the idea is that see how it plays out. If we fill the gap immediately, then I think all should be well. If not, then we might see some more profit booking at decline and will give us an entry at a better level. So I think that's the way we're approaching it. But yeah, stock specific wise, there is still more to trade on the long side. We'll cover it in the next segment.
Okay. All right, gentlemen, just stay with us because we want to get a quick comment in on the news which is breaking at the bottom of the screen as well. So there is a very large block deal which has happened this morning. The block window is of course from 8:45 to 9 o'clock, and there's a 6 crore block deal which has happened as far as India Cements is concerned. What we understand from sources is that Ultratech is essentially looking to buy a meaningful stake in India Cements. And this is of course source-based information. We will try and get you an update on the specifics in terms of who the buyer and seller really here is. But there are two large cohorts of shareholders in India Cements. There is of course the promoters of Mr. Srinivasan, who owns about 28% stake in the company, 28.4% stake in the company, and the other cohort, large cohort, single block of shareholders is Mr. Damani, Mr. Radhakrishnan Damani, and sort of his entities, which own about 21%, 20.78% stake. This is essentially the shareholding bit of India Cements. Nearly 29% with promoters, about 21% with Mr. R.K. Damani. And what we are picking up right now is that there is a block deal which has happened, which is which is roughly I think about 5-6%, 6 crore shares, which is about 5-6% of the sort of equity capital shareholding of India Cements. So that is essentially what we are what we understand. We've been of course trying to reach out to Ultratech for a comment, but we've been unable to get a comment with respect to specific sort of story. And we will see how this really develops. But we should have more information over the next sort of many minutes and in the next 10-15 minutes about exactly who's really been on either sides of this trade, because the deal has happened in the block window and that really has gone through. I think Nimesh should also be with us to sort of take us through what he's picking up from on the institutional side in terms of the transaction which has happened. And we'll try and put that up as well. But as we said, the shareholding is pretty clear. It's been sort of out there for the potential and the buzz and the sort of talk, etc., has been out there. Remember, Mr. R.K. Damani bought in at about 70 rupees a share. His purchase price was about 70. And of course, after yesterday's nearly 15% move, the stock ended at about 262, 263 odd rupees or so. So that is essentially what is coming through right now with India Cements. Sorry,
I was just trying to, I mean, of course, India Cements is now up almost 14.5%.
Yeah.
But if you look at the trajectory,
that's yesterday's, that's yesterday's rate. Because the pre-open is not yet started.
There's no pre-opening rate right now. So that's yesterday's rate, correct. But if you look at, Prashant, the trajectory or the commentary that Ultratech Cement has made over the last many weeks and months, they've been looking to expand their grinding capacity, right? And get into regions like Maharashtra. In fact, I was just going through a report where they said that they're looking to expand their grinding capacity in Padli by 1.2 million tons per annum. They were looking at an investment as well. So with this particular deal, if and when it goes through, in all likelihood it will, they will go ahead and expand their capacity, and they will strengthen their presence. The Maharashtra markets are also growing rapidly in the cement space. So this makes sense for them as well.
Absolutely, and all good points. As I said, we will have more in terms of the specificities of who's involved on both sides of the transaction as we go along. But that's essentially the deal which has gone through, and of course the CNBC-TV18 exclusive, which is that Ultratech is looking to buy a meaningful stake in India Cements. Are they really on one side of the trade? Have they really bought in? I mean, I think we should be able to have that confirmation for you as we go along. We'll take a quick commercial break here. We are back. We have the pre-open rates, which will start to come up in about 3 minutes or so. Mitesh and Sudarshan are with us. We'll ask them about India Cements, but of course, their specific trades, etc. as well. Stay tuned.
which are being provided for students if they are outside of educational institutions. Am I right? If they're within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly...
Okay, welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio. There has been a large trade in India Cements, in case you missed that. So that's definitely going to be the stock in focus today. But we have a whole market to trade as well. Sudarshan Sukhani and Mitesh Thakkar are still with us. So let's get straight to that. Sudarshan, I wanted your thoughts on individual stocks. What are you looking at as we head into a brand new day of trade?
Well, I'll quickly tell you about the Nifty. My own view is that the Nifty and the Bank Nifty are likely to be in a consolidation. We have seen big run-ups. So there is really no trade in the index. Focus on individual stocks, which you asked for. Bajaj Auto is an intraday short. Short selling should be done only intraday. Stop above 10,000. Indus Towers is a buying opportunity with a stop under 321. Colgate is another intraday short with a stop above 29.55. I again warn that intraday shorts should only be taken if the context is correct and only intraday. BPCL is a buying opportunity with a stop under 291.
Got that. Mitesh, good morning. What would your stock calls be?
I have a buy on Britannia and Godrej Consumer from the FMC side. I think that's one index which is looking interesting. So Britannia, keep a stop below 53.70, look for targets of 55.30. Godrej Consumer, keep a stop below 13.90, look for targets of 14.70. A sell on Dixon if it starts trading below 11.300. Then keep a stop at 11,415, look for targets of 11,050. And a buy on Abbott with a stop at 27,390 for targets of 28,250.
Okay, all right. Thanks very much, guys. We'll come back to you for more a little later. But the big story, which is breaking at the bottom of the screen, is now is this confirmation now that 20% equity of India Cements has changed hands. We just put out while that block window was open from 8:45 to 9 o'clock when the deal was going through, we put out information that it is Ultratech which was looking to buy a meaningful stake in India Cements. Now, 20% of the equity has changed hands, and that is almost exactly what Mr. Radhakrishnan Damani owns in India Cements. And it is, in all likelihood, he who is the seller who's actually gotten out. On the other side of the trade, it is Ultratech, which is now bought in. So the confirmation coming through, and I think we should stick with the story because it is a really big one in this cement space, which is coming through. Actually, for a bunch of reasons. Of course, I mean, Ultratech has been, most cement companies have been on a sort of capacity addition spree. There has been there's been the Birla Group, there has been the Adani Group, and there has really been a scramble and race for assets. So in this case, Ultratech seems to have picked up and picked up that 20% odd, which the Damani family owns, which the RK Damani family owns. The other 29%, of course, is with the promoters of India Cements. What we are also given to understand that, from here on, over a period of time, there may be an open offer which may be made for India Cements. Ultratech may make an open offer to acquire additional stake in the company. Could be an additional sort of 26% which they could look to acquire in the company, and we should be able to, over the next many days, start to get details of that as well. We've been, of course, trying to get a response from Ultratech, which we've not been able to really get to. But I think what we know for sure at this point, at this stage, is that Mr. R.K. Damani has sold its stake. His average price when he got in was about 70 rupees a share. Stock's at about 270. And so essentially he's up 4x and he's getting out, and Ultratech is the buyer in this particular block deal. On the other side, gone through in the block window, no leakage in terms of the shares, one-on-one, no real bankers, etc. involved. Most likely it's a seller to buyer kind of transaction executed, and it is basically coming through at this point in time. Nimesh, I think, is joining in. He's been working the phones as well to pinpoint more specifics. Nimesh, it's come through. We sort of it's a big one this morning.
Well, absolutely. We worked all of last night to figure out whether we should flash it or not. But finally, it's done deal, and thankfully, it's done in the block window. So, as you rightly pointed out, absolutely no leakage. A single buyer and a single seller. So, we understand that RKD was a seller in today's block, and Ultratech, as you rightly pointed out, was a likely buyer in today's block. Now, what will be interesting is whether this follows with an open offer as well. Remember, the compulsory open offer has to be about 25%, but the sense is that maybe there could be a voluntary open offer for other shareholders to participate after they've bought this 20%. So that's something to track as far as India Cement is concerned. Remember, the stock is in F&O ban, and also it's getting excluded from the F&O from the August series. But consolidation has been the theme for the cement sector, and a lot of brokerages have been writing about it. Today, interestingly, there are two reports today. Jefferies put out a note today morning, and they believe that, and actually they're saying that they like the consolidators. So they are not very bullish on the target companies, but they're more bullish on the large cap names who are actually consolidating and buying out the smaller players. So that's been the key message from the Jefferies note. In fact, they spoke to some large investors, and they were very happy with the fact that Adani has been so aggressive, and they've liked the Adani strategy of buying smaller companies. And within the large caps, the top picks include ACC and Ultratech Cement. And Ultratech has been the most preferred stock for most of the brokerages as well. Similarly, Goldman put out a note today morning. They've actually they've done some upgrades and downgrades on few stocks. They've upgraded Shri Cement to neutral, and they've raised the target price now to 28,500. They've downgraded ACC, but Ultratech remains their preferred pick within the cement pack. Even Goldman has written that the top 4 players have consolidated the market big time in the last 5 years, and the overall market share has gone up from 49 to 58%, and they believe that that's likely to continue, and there will be more consolidations given the fact that the large 4-5 players are very strong in terms of balance sheet. So it's a very large deal in the cement space. India Cement finally seeing a new buyer, hopefully, and that looks like they're going to be a new buyer now. We need to see what happens with the existing promoter of India Cements. Not sure whether they're going to participate or not, but and as rightly pointed out, Prashant, it's a done deal. 20% equity got changed hands. Looks like RKD was a seller and Ultratech was a buyer.
Just one more thing, Nimesh. There is, what we are still saying, which has not happened, but what we are saying, and as you said, we've been sort of working through the night to try and get a handle on things and trying to get a response from Ultratech, which, of course, I think through the course of the day we will get. Now that the transaction has gone through. But the other bit now in the future, as you said, we don't know what the promoters will do, and because there has been a fair bit of buzz that what they will, whether they will sell or not. But it is likely that Ultratech, beyond this 20%, is going to look to further increase their stake. And the other big block in India Cements is the promoters who own nearly 29% of the company, right? That's one big chunk. So, and of course, then there are other shareholders, public at large, etc. But this is something which we will hear about from Ultratech, hopefully in the coming days and weeks, about an open offer to further raise their stake. And they've gone in with a chunky 20%, but I think they'd like to do more. That is, of course,
Prashant,
still a source space which needs to be confirmed.
There is a flash going on, Prashant, if I read it correctly. I think Ultratech has confirmed that they've bought nearly 7 crore shares, which is 21% or 22% of India.
That is excellent. That is excellent,
Super.
Right?
So
getting
you were bang on
confirmed.
in terms of the news.
No, I think we've all you and I worked.
So, Prashant,
the phones
now that there is a confirmation, there is a confirmation on Ultratech buying out this 7 crore shares. You know, the entire cement region will be in focus, right? Two consolidations in just 15 days. Adani Group went on and bought one small unlisted player, and now India Cement is getting bought by Ultratech. So the entire South cement pack would be quite interesting to watch out for how the stocks react in today's market. You know, Aramco is a big player there, so that's something to track. And there are some smaller KCP is another name which has seen some bit of traction of late. So all the South-based cement companies will clearly be in focus today. But of course, Ultratech and India Cement will be two big stocks to watch out in terms of the which is done.
No, absolutely. Stay there. Stay right there, Nimesh, and we'll keep coming back to you. I just want to read out, right, exactly what Ultratech is saying. The board has approved acquisition of 7.06%, 7.06 crore shares, which is 20%, a little over 20% of India Cement's equity. So that is basically what is 23% of equity of India Cement. That's at 267 rupees per share, which is maybe at a slight discount or around basically where it left off yesterday. This morning, the pre-open has started. Okay, yeah, 23%. In the pre-open, the stock is up 8.5% after yesterday's 14.5% move, because it's not just about the price now in terms of what they're willing to pay for this 20% of what the block is done. I mean, essentially, what the market will now try to figure is how much this is now going to be if Ultratech decides to do an open offer, etc., and try to get their shareholding up and get a majority stake, etc., which is most likely what they're likely to do. And we said this around the time that the block was happening, it's going to become an Ultratech company. And I think if you look at the valuation multiples, etc., for what India Cement trades at as compared to what an Ultratech trades at, I think there would be a big difference. Let's actually welcome in Uttam Kumar as well. He's Senior Research Analyst, Cement and Infra at Axis Securities. Uttam, great to have you with us here. Good morning. Appreciate your time. So the transaction has gone through, and it's great that you can join us. Just the basics first. What is the capacity of India Cements? What is the capacity of Ultratech? What does it go up to? Do you think Ultratech would like to own this now beyond the 20% block which has got done today? So an open offer likely. And that point about valuation, where does India Cement trade at and what does Ultratech trade at? And if this becomes an Ultratech company, what is the potential for re-rating? Go on.
Currently Ultratech has a capacity of around 150 million ton, and India Cement is around 15 million ton. So Ultratech has already acquired 1 million ton in the Maharashtra few times back of India Cement. So with this acquisition, Ultratech will be a dominant player in South, because it has already acquired Keshoram earlier. And I believe that India Cement valuation will be around $60-70 USD ton. So which is reasonable compared to the replacement cost. And over a period of time, once Ultratech goes for open offer and acquire the remaining shares, so it will be a majority shareholder in the company. And after that, Ultratech will do all the necessary things to utilize the capacity of India Cement, because India Cement is currently not underutilized, because it will not be able to utilize its capacity fully. So I believe that over a period of time, it is a good over a period of time. This synergy will play out with Ultratech acquiring India Cement. Yeah.
Got it. No, of course, the larger overarching theme is this, that there is huge consolidation that's happening in the industry, right? Large players are looking to aggressively add capacity, both organically and inorganically. And this was a deal that was perhaps brewing for a while now. Ultratech has expressed its intent to raise its capacity as well. So I want to understand, Uttam, from you, that what does this mean for the industry overall? This aggression from larger players, what does it mean both for the industry in terms of growth and for an Ultratech Cement shareholder? What is your view now over the next 12 to 18 months?
See, consolidation has accelerated in the last few months. Recently, Adani has acquired Penna Cement, and now Ultratech acquiring 20% shares of India Cement. So moving ahead, we can see more consolidation in the industry. And as mentioned earlier, these all 5 players if you see top 5 players now having around 58% of the cement capacity, and going forward, I think this consolidation phase will further increase. And moving ahead, these 5 players will have more than 65 to 70% capacity in their PT of overall cement sector. And with this consolidation, I believe large players having a strong balance sheet, they are going to be more. They are going to be more. There will be more benefit for them, as they can have benefit of economies of scale, logistic efficiencies, and other things. That will be that will basically benefit all these large companies having a strong balance sheet. Yeah.
Right. No, absolutely. Just stay with us. Nimesh is still with us. Nimesh, some more details. Nimesh, go on.
No, Prashant. So, the fact that UltraTech has announced that they've bought this at 267 rupees per share, now what it means is at least the floor price for the open offer cannot be beyond that price, right? So, because the promoters have bought at 267, though, if there's an open offer from UltraTech, it has to be either 267 or higher than 267. So, need to see what the UltraTech game plan is and at what price they make the open offer. So that's one bit. The second thing is, while you spoke about the South-based cement companies will be in focus, also remember there are a couple of other Birla Group companies which can be potential target for UltraTech going forward. So there could be further consolidation from the within the Birla Group companies as well, is the feedback that I got up from some analysts as well. So two things. One, the floor price for open offer looks like cannot be beyond 267. And watch out for the other Birla Group companies as well, because now the anticipation is that maybe we'll see further consolidation within that group as well.
No, absolutely, and I think it's a large transaction which has gone through. It's a big one, and market opening is just around the corner, a minute away, and we'll have more experts join us as we go along. Prakash is still with us. Prakash, you want to just quickly weigh in on first thoughts?
So, Prashant, in the immediate short term, it's the open offer that will give a lot of buoyancy to the price, the India cement price. And eventually, you'll have to then look at UltraTech. This is an amazing foothold that they get. People forget that India cement might just be 10% of UltraTech's current capacity, but the kind of distribution reach and brand salience that they have is superb. So, there is going to be benefit for both. Great transaction.
Okay, Prakash, we'll come back to you. The market is opening, so let's just quickly get those rates in as well before heading back to the big story of the day. For now, the first tick on the index is a tad bit in the red, down about 40 odd points. Makes sense to see what both UltraTech and India Cements are doing at the moment. UltraTech Cements is up, but not too much. It's up almost about 1%, I think 1.5% as we speak. India Cements, remember, was a big mover yesterday. It was up 14%. Another 10% rally in trade this morning. So that clearly is the stock that has to be on everyone's radar. All right, apart from UltraTech Cement, that is the top Nifty gainer right now. It's banks that are once again, some of them at least, that are charging ahead. So keep an eye out on Axis Bank, which is your big gainer, up about 2 odd %. You have ICICI Bank, which is up 0.8%, and a couple of other banking names also trending in the green. Bajaj Auto, Power Grid, Adani Ports, and Hindalco are some of the other big gainers in trade this morning. What's not looking good is IT stocks. TCS, Wipro, Tech Mahindra, HCL Tech are all in the red. Not too much, by about half odd %. So once again on the back foot. And some of these hospital companies have been under pressure. Some pharma names have been under pressure. Apollo Hospitals, Dr. Reddy's, etc. a tad bit in the red right now. But otherwise, it is really the cement space, not just UltraTech and India Cements, but some of the smaller cement companies in the broader markets also looking good. Remember, this is the big news for the cement sector overall. There is a lot of consolidation happening where large players are getting more aggressive, buying capacity in the cement sector. So this could change the dynamics of the cement sector as well over the next 1 to 2 years. India Cement's now up almost about 10% or so.
We'll just take a look at some of the other smaller and mid-cap cement companies, and they too are moving up. So KCP is up 4.5%. Digvijay Cement has a gain of 3%. Sagar Cement, Heidelberg, Ramco, Prism Johnson, JK Lakshmi, JK Cement, Nuvoco Vistas. Across the board, the cement stocks is very, very active in terms of gains. And early in the morning, they've risen up on very large volumes. And now India Cements is locked in an upper circuit. Only buyers, no sellers. And the stock is gained close to about 10 odd %, adding on to yesterday's big rally. Outside of cement, some of the notable gainers include CSB Bank. There was this large block deal of 9.7%, which took place in the morning. And CSB has a gain of close to about 6%. Catholic Syrian Bank. EMS Limited has won an order worth about 119 crore rupees from UP Jal Nigam Rural. So that's pushed up the stock. JSW Energy is in focus. Eureka Forbes, where there was an investor meet, they're talking about creating new categories related to water, premiumization. Eureka Forbes, 2.5% on opening tick. PI Industries has made an acquisition of a plant-based, a plant healthcare company for 346 crore rupees. It's a loss-making acquisition, but the stock has opened up with a gain of close to about 2.5%. On the way down, Archean Chemicals, again a block deal, supply overhang. The stock is down nearly about 3%.
So it's a the index level. It's a bit of a consolidatory kind of session. But I think it's all about individual stocks, right? And today, this morning, there is a sort of deal to boot which has taken place, and it has been a CNBC-TV18 exclusive. Ultratech is up 5%, India Cements is up 10%, but that's not just those two names. There is a rub-off effect happening across the board, in the entire cement space as well. With consolidation, the name of the game. The larger guys are getting bigger. Some of the smaller marginal players are sort of, getting bought out. And this is the latest in that sort of enduring story, which we have been reporting with so many other deals in the past. But this is, of course, a marquee asset, cement asset in South India. 8.5% higher on India Cements. 284. Yesterday was up 14-15%. And today it's another big winner, which is coming through at this stage. I think we have, sorry.
I know, you were saying the larger cement guys are getting bigger, right? I was just looking at some of the data. In the past 7 years, there have been 13 mergers and acquisitions in the cement sector overall. I mean, so it's not something that's recent. I mean,
and so many
the last 5 to 7 years, people are the larger guys. We just heard about Adani Group also planning to consolidate all their cement companies under one head in the medium term. So there is a massive change that's happening in the sector.
And even Ultratech has made so many acquisitions. Burnpur, Kesoram, JP, Century Cement, Banani Cement. So in the last 7-8 years, Ultratech itself has been building on its heft and capacity. And now India Cement. But just one word, Prashant. If you read the release, they're talking about saying that we have approved making a financial investment. They're not using the word it's a strategic investment. They're saying it's a financial investment, and this non-controlling financial investment constitutes to about 23%. So, just putting that caveat out there.
Yeah, no, absolutely. Let's get Sunil Kaul with us. He's APAC equity strategist at Goldman Sachs. He's joining us right now. He's our market master of the day. Sunil, great to have you with us here. Thank you for your time. I'm sure you have a view on cement. Not this deal specifically, but it just so happens that the deal's gone through today. So I've got to start with that. What do you make of it, and what does it mean for the largest cement company, Ultratech, post this, and the sector in general?
I mean, look, I think Prashant, thanks for having me. Look, on cement, we generally are positive on the broader infra space, including cement. Obviously, it plays into both the housing and the manufacturing sector. Sequentially, there could be a bit of softness in there because of the construction activity slowing down and the monsoons and all. But I think in general, we still like the sector. What I would say, when you look at the real estate cycle, also, if you throw that in the equation, obviously cement plays into that as well. But within the broader real estate sector and the sort of pivot back to cement, I would say our more preference lies in terms of manufacturing over cement. And we also think the real estate cycle is best actually played by some of the building material guys. So you can sort of pick within that broader cohort. Even though we like cement, I would say some of the building material stocks, which includes kind of the pipes and ceramics and adhesives, there's probably a better play on the broader real estate and the infra story than the cement, especially given the near-term softness in the numbers due to slowdown in activity.
It's interesting, right, Sunil? I wanted a little more nuanced view on how this is going to change the dynamics of the sector. Because if large players are consolidating, buying a lot of the smaller players, then they would look to sort of push market share, gain more volumes that could come perhaps at the cost of margins. I want to just understand how the dynamics of the cement sector are going to change, and why is it that despite all of this action in the cement sector, you are still not that bullish on the space. You prefer building materials as an investment.
Yeah, that's a relative call, Sonia. I mean, again, without getting into single names in here, we still like the largest cement player within our coverage in terms of our buy rating. We have sort of more neutral risk rating on the rest of the names. So we do think that with the consolidation going on, the bigger players should benefit, and we are constructive on the stock in particular. But as I said, within the broader sort of building materials and infra space, that's where our pecking order lies. And the main thesis there is that we do think, as you obviously would know, that a lot of the supply has come in terms of, for example, real estate in the last couple of years. And there are obviously question marks into whether that cycle sustains or not. But we think, given a lot of these sort of projects will have to come up for completion, therefore the demand for the late cycle property building materials should be strong. So there is a much higher demand visibility on some of these building materials, to put it that way, rather than cement, which is why we have a relative preference there for those.
Sunil, morning. What's the call on the market now from here on? The expectation was this is going to be, 2024 is going to be a year of consolidation. Don't expect too much by way of returns. That's what consensus was when we started the year, but we seem to have front-loaded, and in June, markets have been on a roll. How do you expect the next 6 months to pan out, and what would be the best portfolio bet?
I mean, great question. Look, I mean, to be honest, our market views haven't changed much. I think post the elections, I mean, we remain constructive on the market. Obviously, as we all know, given all the key ministries have been retained, there is broad policy continuity, right? I mean, the macro continues to be stable. Earnings are coming through. We are finally seeing foreign money coming back into the market, which was our view. So I think we overall remain constructive on Indian equities. We have it as an overweight allocation. In terms of the upside from here on, we are looking for 26,000 on Nifty by June, sort of in roughly 12 months. So that's about, sort of in round numbers, 10% upside from the current level. So I would say sort of moderate upside given the strong gains, but largely driven by the underlying earnings, which we are expecting around 15% this year and next.
Sunil, just a quick word on some of the new emerging sort of areas, right? And if you are looking at, by the way, you guys have been very busy with initiations, right, Sunil? You had MapMyIndia, TBO Tech lately, and stocks have all zoomed past the initiations. What's driving this? Is it demand from specific? Is it specific sort of demands from investors who want to go in, and because these are relatively smaller companies in that sense, right? TBO Tech, of course, is about 17,000-18,000 crores in market cap. MapMyIndia, Infosystems is even smaller. So just wanted your thoughts.
No, I think, Prashant, as you said, look, I mean, like many of the other larger foreign houses, we obviously do have coverage on pretty much most of the MSCI India large cap universe, right? And so I think it's just an effort to kind of ramp up coverage on some of the sort of mid cap names, where obviously, as we all know, activity has been pretty strong over the last couple of years. And I think that's just ramping up coverage on some of the sort of not so covered names before that. And as you said, obviously, the main reason for that is the end investor demand, and obviously there's a huge demand for some of these smaller sort of mid cap names beyond the large caps. I think, having said that, just to sort of bring that back to the market view, the fact that we are seeing foreign flows come back into the market after the election, it's now like 12, 13 trading days in a row where foreign flows have been positive, maybe barring yesterday, but sort of close to 4 billion foreign inflows have come back into the market, right? And so I think what that also means that on the margin, you could see some of the large cap names and maybe some of the quality mid caps, which are kind of a little bit more larger in size, do much better than some of the smaller micro caps here.
Okay. Well, for now, it's really a party out there in the broader cement space. So Burnpur Cement is up almost 13%. But remember, a lot of these companies, have not had amazing track record. So just be a bit wary. I mean, Burnpur Cement is an 8 rupee stock. Orient Cement is up 10%. India Cement, of course, is up 6.5%. And a couple of other names also looking pretty good. But Sunil, I wanted your thoughts on some of the other spaces that have once again come back into action, right? Whether it is something like defense, whether it's power, railways, any of these spaces that you see more traction going forward?
Yeah, I think if you, for example, look at what the government focus has been, I think we still think that they will, for example, continue to sort of focus on infrastructure as an example, Although at the margin, I think things that are kind of more labor intensive could get a little bit more push. What that means is, I think, for example, railways, as you pointed out, Sonia, I think we still think that the railways is a sector that could continue to benefit here. There has been a lot of focus on railways in the manifesto as well. So we do think just sort of broader companies exposed to the railway segment should do well. Defense is another area which I think is not just a theme in India, but I think a broad theme across the region in terms of everybody becoming a little bit more self-sufficient and self-reliant. And so we do think that defense can continue to do well, especially I think, as we all know, we continue to see more news flow in terms of contracts being awarded, including sort of in the recent few days. And so I think as long as those kind of contracts come through, which are much more lumpy in nature and improve the profitability for many of these stocks, we think there is still kind of that fundamental underpinning for many of the defense stocks. So we do like the railway segment, we do like the defense. So these are some of the sort of broader themes which we like within the market, within the sort of broader market.
Sunil, I remember Goldman also liked telecom stocks, particularly, the large ones over there. But now a stock like, say, Bharti, which is the largest pure play telecom story in India, is up 40% this year. Do you think all the potential positive triggers, like, say, a tariff hike, an impending tariff hike, is already priced in, or is there still upside?
Look, I think the core view behind telcos was twofold. One of them was the fact that you have seen bulk of the capex in terms of the 4G, 5G sort of behind us, and so you should start to see cash flows inflecting and better cash flows going forward. And so I think that's kind of the fundamental view behind that. And then there were some expectations of tariff hikes. I think to your point, Sonia, despite the fact that the sector has done well, we still think that the cash flows kind of support the overall sort of more higher, and if there is any sort of positive news flow on the tariffs, that could mean the sector should do better. I think keep in mind, I think investors are also when we started the conversation, people are also kind of thinking that from here on, if there is much more moderate upside on the markets in aggregate, then maybe it makes sense to be a little bit more towards the defensive pockets of the market. And so telcos is one which checks that box. So is insurance at the margin. So I think some of these sectors can actually do decently well over the next 3 to 6 months.
Okay. By the way, just stay on, Sunil, for a bit, right? Uttam Kumar of Axis Securities is still with us to discuss the view on the cement sector now that, this big deal has taken place. Uttam, we are seeing a lot of broader markets, smaller cement names as well rally at the moment. From an retail investor standpoint, just wanted your view. How should one approach it now? How do you capitalize on the fact that there is huge consolidation happening in the sector? And, how to make sure you don't burn your fingers by just looking at any of these broader market names?
Basically, Sonia, this deal has created a lot of buzz with smaller cement companies, and they are also prices have also have increased for the smaller cement companies, considering the current deal. So what I see over this with this consolidation, this buying of India Cement, many more companies will be in play for consolidation. But from retail perspective, I think people should utilize and see the valuation where the current cement companies, the smaller cement companies are trading, and accordingly they should trade in these smaller companies.
The top 4, the large cement players, control how much of the capacity now?
It's around 60%, top 4 or 5 players. Yeah. And that can accelerate over a period of time, considering the current acquisition. Yeah.
Okay. And if Ultratech goes and acquires a controlling stake in India Cement, what would the number go up to?
So this will be because India Cement has only 15%, 15 million ton of capacity, which is only around 10% of Ultratech Cement. So that will not increase much in terms of percentage. But over a period of time, once the consolidation happens and more companies are acquired, so there will be a substantial increase in the over percentage of these 5 large companies moving in.
So while the top 4, we are saying, controls about 60% of the capacity, in that the dominant players are the Birla Groups and the Adanis, right? So what would their holding be?
So currently, Ultratech is around 28 to 30%, and Adani Cement will be around 16 to 17%.
Got it. So is there a risk that the CCI, the Competition Commission of India, says that these two players have become too big and they play spoil sport for at least the Birla Group and the Adani going ahead and acquiring more companies and, further increasing their market share?
Yeah, there can be some legal tangles with regard to the CCI approval and all that. But I think both the companies might have looked into this also, and accordingly they will go for the acquisition and all.
Okay, thanks a lot, Uttam, for that. Well, Sunil Kaul is still with us. Uttam, stay on. We'll come back to you as we, watch this entire story unfold. But Sunil, getting back to the markets, the next big thing that the street is watching out for is the union budget. Most probably it'll be the end of July. This has been a very strong market, but is there anything in the budget that can come through which could sort of further, increase momentum in the markets?
Most of the investors we speak, Sonia, I mean, they're obviously focused on a few things in the budget. One is obviously the path of fiscal consolidation, right? We still think that the government will adhere to the fiscal consolidation. They're sort of targeting 5.1 by the end of the fiscal. So I think that still comes through. So there should not be too much surprise on that front. Obviously, the other bit is how the expenditure comes through in terms of how much capex versus kind of the more sort of welfare and subsidies. There again, we do think that it's not going to be a pivot away from infra spending to welfare spending, but they will continue to do infra. Maybe at the margin, some of this could become off balance sheet as opposed to kind of on balance sheet, but there could be slightly higher allocations towards some of the consumption categories. And so one of the sectoral changes we made after the elections was that even though we like the broader manufacturing sector, we were underweight staples, so we actually neutralized staples to market weight, and we obviously are market weight also the consumer, retail, and discretionary bits. So at the margin, seems like consumer could also do a bit better. So I think that those two would be the main focus from investors. One in terms of fiscal consolidation part, and B in terms of how the spending mix comes through from the budget.
Yeah, no, absolutely. I just want to step back a little bit and take a look at the broader market as well, right? And just quickly tell our viewers what's happening, because there is a lot happening. The Nifty is down 50 points now, but market breadth is still positive. 1,300 stocks are higher and about 975 stocks are lower at this stage. The biggest volume-led gainers are India Cements and Ultratech. So clearly, they are the stars of today, 11 and 6% respectively on India Cements and Ultratech. Then we go down the list. Irida is up 4.5%, if you can have some of these names up. Titagarh went up 11% at close. We had the management on this show yesterday at 9:30. Titagarh 11% and today 4%. Again, very large volumes on this one. Orient Cement is up, 10%, 10.5%, 279 on Orient Cement. So it's a big one. Whirlpool is up about 10%. Stocks at about 2019 now on Whirlpool. It's a 10% gain. I mean, it's a big one. I think Whirlpool, even from the point where the promoter sold stake, is up quite a bit. And that today's gain only adds to that. Look at the volumes, 700,000 shares. KEC is up about 5%, 909 on KEC. 361 was up. It was a big mover yesterday. There's a wealth management firm, about 4.5%, 5% there. Max Healthcare is up about 4%. Really, I mean, you could just completely ignore the index because there is the single stock action is so vibrant that it just doesn't matter beyond a point about the index really is doing. Exicom is up about 6.5%. This is a fairly recent listing. There is Gabriel India, which is up 5%. Stocks at about 508. CSB Bank, that block went through in the morning. We told you 371 on CSB Bank. So it's just kind of moved past after that. Sort of almost no discount, by the way, for the block to take place. Aadhar Housing Finance is up another 3.5%. There is Stylum Industries, right? That initiation from Investec yesterday. Stylum was up, I think, about 14-15% yesterday. It's up another 5% this morning. And I could go on. Mangalam Cement is another smaller cement company, which is up 4%. Ramki is up about 4.6, 4.7%. JK Lakshmi is up, 6% or so. So it's turning out to be, a lot of cement, but it's certainly not just cement, but a fair bit of stuff which is happening in the sort of broader market as well. Sunil, just one last point before we sort of let you go. Your very quick thoughts on some of these, not banks and sort of NBFCs, but other financials, capital market players, especially wealth management firms. If you've initiated coverage recently on any of these, some believe it's a big, real secular story, maybe even better than AMCs since you own the customer. Your thoughts?
Look, Prashant, unfortunately, we don't have coverage on any of the names, but I think to echo your point, we do think the broad sort of financialization of savings is a theme which is there to stay, and we all see that in terms of sort of equity market flows and SIPs and all of that. So we do think, therefore, as a structural play, I think some of the AMCs and companies that are kind of involved in the brokerage business and are able to capture some of the flow are great businesses to be in. There seems to be kind of secular tailwinds behind this. So we do like them in general as a cohort, in addition to being liking some of the pockets of the financials within our sort of portfolio allocations.
By the way, apart from, the market of course is flat, but the mid-cap index is doing very well right now. So almost 0.5% gains is what you're seeing on the mid-cap index, and many individual stocks are in focus. Sunil, before we let you go, for anyone who's perhaps missed out on your view on the cement sector, since it is the flavor of the moment right now, after that big deal that came through, UltraTech acquiring 23% stake in India Cements, just finally, if you want to end with, your view on how the cement sector could shape up. I understand that you're relatively looking at things like building materials, etc. But do you see a structural upcycle in the cement sector play out now that demand has improved across sectors like infrastructure, real estate, the government spending has gone up, and now we have large players that are, adding on huge capacities. So are we looking at a structural upcycle here?
Yeah, undoubtedly. That remains our view, Sonia. We like cement at the over a medium term. We do think it sort of plays, as you mentioned, it plays into multiple themes. There is the real estate recovery cycle, which all of us know. There is a focus on infrastructure. So cement continues to be one of the sectors we like from a medium-term perspective. But I was mentioning that at the current juncture, we're kind of much more selective there, and we like the larger players more than the smaller players. It is our core view. But if someone is taking a more medium-term view on the sector, we absolutely think that it's a structural play.
Okay. All right. Got it. Sunil, appreciate your time here on CNBC TV18, and thank you for commenting on the big breaking news of the day, which is UltraTech Cement going and buying 23% stake in India Cements. Big move in the cement sector. But Amara Raja Batteries is the other stock on our radar. The stock has been buzzing. It's hit record highs on the back of the technology licensing pact with Slovakia's GIB Energy for lithium-ion cells. To discuss more on this, we have Vikramaditya Gurneni, who is the Executive Director at Amara Raja Batteries. Vikramaditya, thank you for joining in and taking the time out to speak to CNBC TV18. I just wanted to understand a little more about this licensing pact with GIB. What does it bring to the table for Amara Raja Batteries, and what do you see as the way forward now in this space?
So thank you for having me. I'm happy to answer this question. The licensing pact that we have with GIB, it's a pretty comprehensive relationship. It starts with licensing, cell technology, IP on the product itself, helping us to lay out our factory, equipment design, complete, industrialization of the product, plugging into their global supply chain ecosystem, and then a little bit of help also on, customer side engagement, engineering support. So it's kind of a pretty end-to-end. It helps us to get these products into the market and, support a lot with getting the early day customers.
So you're saying this will help you tap into their global supply chain ecosystem. You recently invested 20 million euros for an additional 9.3% stake in Innobat. Do you plan to put some more money to work there? And what would this mean in terms of business potential, with your collaboration with Innobat?
We don't have any further plans to invest at this time. I think the getting into Innobat right now was to kind of help enable us to be part of that ecosystem. What we liked about GIB, the Goshen and Innobat coming together, Goshen is a pretty progressive company. They know that, I think they identified pretty early that they cannot be limited to China. So they've been investing all over the world, having a pretty global outlook. But also, they have from mining to the cell making, battery, upstream, downstream, the entire battery value chain. They've invested not only in China, but now they're doing localization all over the world. And we're part of that localization platform, and we're helping to bring this technology into India. So we'll continue to have a pretty close association with Goshen Innobat through the European entity, but probably further investment at this time is not something I have in my plan. Most of our investment is going to be strictly limited to India.
Vikramaditya, hi, morning. Prashant here. I had two questions. One is, this is, is it a broad kind of license, or is it, because it says it grants the license to manufacture LFP battery technology cells with cylindrical and prismatic form factors. I mean, is it it's technical. I'm just saying that, is it, I mean, does the agreement allow for any, for you to collaborate on any future sort of technological changes, etc.? Because it's a fast evolving space, or this is a very specific thing for a specific process to make these batteries.
So it leaves the door open for a lot of future collaboration, but for now we've sat across the table, identified specifically which cells we need for our local conditions. And of course, Goshen being a leader in LFP technology, we are working on LFP chemistry with them. But right now we have a very specific phasing of products we want to bring into the market. And as and when further upgradation is happening through the period of this agreement, any upgradation on those products will be freely available to us. And thereafter, I think as new chemistries, new breakthroughs come in, we always have a chance to sit across the table and talk about that as well.
Just to press on that point, very simply for our viewers, can you tell us, is this the dominant technology which is likely to sort of continue as the primary route for these cells? The agreement, that's a specific agreement that you have in here for. And the other thing is, it's it says Goshen, which is the Chinese company, battery manufacturer, which is about a 2% share in EV battery market, is backed by Volkswagen. And could you sort of elaborate on that as well? So, and of course, it's got lots of other customers: Geely, Chery, Leap Motors, Winfast, etc. So, do you get access to these sort of these customers, and if yes, in what way? Because Goshen would already be sort of supplying to these companies, right?
That's correct. So your first question, LFP is what we believe will be the predominant chemistry in India. Of course, we have areas where we're attempting to cater with other chemistries like NMC for very specific applications like two-wheeler, where size and form factor have a little bit of, they lack, it's a small form factor, you need a little bit more energy density. But overall, we do believe that especially the Indian automotive market in EV is going to be largely dominated by LFP technology. So I think it's very apt which products, which chemistry we've tied up with Goshen. On the second thing, of course, Goshen has VW as its largest shareholder, but that doesn't necessarily mean that their customers abroad will automatically become our customers here in India. We have to convince them that a localization plan is the best route forward. But we are planning to collaborate for specific customers, and we've already begun to do that. There are some customers that Goshen already supplies in India. I think we're not attempting to, go and knock them out of that. We have, we'll discuss on a case-to-case basis, but I think we're excited that bringing a good technology, proven technology, we'll be able to give quite a compelling offer to our OEM customers, and many of them have already started to reach out with a good deal of curiosity and optimism.
So can you share your plans about the lithium-ion cell manufacturing? When do you start operations? How much do you plan to manufacture in phase one?
So phase one, it's actually independent of this technology license. Yeah. That's with NMC Chemistry. We've already begun the factory planning, and we should start construction probably in the next 2 to 3 months. That production of 2 gigawatt-hour would be up and running probably at sometime early in 2027. And this production, I guess, and again, we'll start the technology transfer immediately with Goshen. And probably over the next 3 to 4 months, we'll finalize all factory designs, master planning, and then get down to construction on that as well. Optimistically speaking, once you start construction, it's 2 years to get a factory up and running. But that's more looking at established ecosystems like China. maybe 2 to 2.5 years is what we're aiming for, having a strong partner that can help us accelerate these efforts.
Okay, so you're saying realistically it'll take you 2 to 2.5 years to put that lithium ion cell manufacturing capacity completely on board, right, to execute it?
That's correct.
Okay, got that. Your international business growth has suddenly shot up. I mean, in Q4, you saw 30% growth. It was also driven by expansion in a lot of the new markets, whether it's Africa, North America, etc. But I want to understand from you, going forward, what kind of realistic growth do you see in the international business, and what will the contribution look like between international and domestic for you?
I think I'll refrain from commenting too deeply on this. It's looked after by a different team, headed by another executive director, Harsha, on our team. But the international business, we do believe that it'll continue to have quite a good runway for growth for us. And in the past, we have commented that the type of margin profile we see in international is as good as the Indian aftermarket, if not a little bit better for select markets. But we've definitely taken international as a strategic imperative. When we talk about this Amaraja 3.0, part of it is catered by investing in new technologies like we've done with the recent announcement, but also in globalization. We believe that the type of products, the type of technology we already have in our portfolio has the ability to globalize and has global competitiveness. And you'll find that in the international business outside of India, we're #1 in Singapore, we're #1 in Malaysia. That list is only growing. So Southeast Asia, this entire Indian Ocean rim, we're quite a dominant player, but we've also started to export batteries into North America, into the United States, into Europe, into South America. And the number of countries and the presence we have in those countries will grow considerably.
Okay. Just coming back to this technology pact with GIB, since, you are, your focus area is now developing new technology, getting into some of these newer spaces. Any other companies, any other geographies where you're looking to sign technology pacts, any other focus area for you over the next 12 to 18 months?
I think for the immediate future, we have, now that we have the cell the cell technology partnerships in hand, the bulk of our capex is always planned to be spent on cell making. So nothing specific in terms of that. But eventually, we have to start looking at, backwards integrating, looking at how to at least have some level of strategic interest in our supply chain. That's where we're, it's one of the major reasons that we're drawn to Gotion, because Gotion has developed their, end-to-end battery value chain and all of its in-house. So they have they not only have that in China today, but now they're expanding that localization of raw material all over the world. So GIB specifically, just this past 1 to 2 weeks, they've announced a localization in Slovakia, of course. They've announced in Morocco. They've announced in Nigeria, and they're expanding that even further. So some of those are for cell making, but many of those are also for battery value chain, so battery materials. And we hope that we can be plugged into, multiple supply chains, but eventually also start building some level of ecosystem for the Indian market.
Okay, and would you be looking to expand your capacity in battery pack and charger manufacturing further? Because that space as well has seen a big growth of 30% in Q4. So are there any capacity expansions planned over there?
So there are. The first, large commercial pack facility, ultimately it'll have a capacity of 5 gigawatt-hour. This is part of our Telangana project. Since we announced it about a year ago, the factory is already up. The line is being commissioned, debugged. We have an entire workforce of local youth that we've hired and we're training. That production should be starting in the next month or so, and then we'll keep expanding that capacity until we reach 5 gigawatt-hour as announced. On the charger, we're in the process of getting into mass production of a localized charger. This is an off-board charger for two-wheeler, three-wheeler, and a light mobility application. And over a period of time, we're going to add a lot more to that portfolio, like DC fast chargers, swapping stations, other parts of the vehicle as well. So all of that is currently undergoing the mass production process.
Thank you very much for joining in, and wish you all the very best. By the way, now back in the green, the Nifty is recovered from the lows. It was down about 50-60 points when we started trade, and now it's up nearly 10 points. And Reliance Industries has been a big mover yet again. After a near 4.5% gain yesterday, Reliance Industries is now up 1.3%. So that's channeling the intraday recovery, the pullback that we've seen. Banks continue to remain flat and mid-caps continue to gain ground. The mid-cap index is up 0.7%. We'll get into a very short break. We'll come back and focus on the big story of the day, and that's cement. So stay with us. Welcome back. Manappuram Finance is also a big mover in the broader markets, rising on very large volumes, 6% up, a fresh high, and now it's adding on to the gains from yesterday. DEE Development, the company which got listed on the Lal Street yesterday, has also opened up in the green. PSUs, particularly in the railway sector, IREDA, Texmaco Rail, continue to be up and about. And keep your eye on Raymond. Remember, there is an AGM today where the shareholders will decide whether Gautam Singhania stays on as the MD and CEO, Chairman and MD. Mitesh Thakkar is now back with us on the show. Mitesh, the morning dip has been bought into. Now it's flat on the benchmark indices and Reliance continues to fire. What have you made of the action in the morning?
See, the gap down was bought into, I think, primarily because Reliance was making days high, and a disclaimer that we have some positions over there, so there's vested interest. But that apart, the stock which is really caught my eye is Manappuram. You're just mentioning that, and that's one of the buy call which I have. Keep a stop at about 202, look for a target of 220, and maybe even higher levels because the stock is breaking all-time high. So there is a good chance that the target which we have on charts will be exceeded on the upside. And the second one is buy on Dr. Reddy's. That's a buy with a stop at about 61.45 and a target of around 63.20 in the next few days can be.
Okay, well, let's get back to the focus on the cement space and the big deal that has taken place in UltraTech Cements. We have two gentlemen joining in. Remember, UltraTech will acquire 23% stake in India Cements, and there's huge consolidation happening in the cement sector. What does this mean for the ecosystem, for the dynamics of the cement sector? Gurmeet Chadda, Managing Partner and CIO, Complete Circle Consultants, and Rohit Srivastava, Founder and Strategist at IndiaCharts.com, join in. Gentlemen, morning to both of you. Gurmeet, I want to understand how to approach the sector from here on, because large players are coming in, not just UltraTech, not just the Birla Group, but also, Adani Group, etc., coming in, consolidating, getting a larger chunk of the assets. What does this mean for the dynamics of the sector, and how does a retail investor approach it now?
Thanks for having me, Sonia. And having started my career as a cement guy, it's heartening to see some consolidation now. Finally, it was a very scattered industry. And I think that's where it's headed now. They acquired their Parli unit, if you remember, in April for 300 odd crores of India Cement. UltraTech has massive plans. They've actually announced 200 MTPA, in one of their annual meetings. They're already at about 147, and the capex they have announced will take it up to 160. And they have been acquiring companies in the past. In fact, post Adani taking over Ambuja ACC, they have acquired a couple of names, including Sanghi, including Penna. Penna, they actually paid almost $80 a ton. Sanghi was also at around $95. This particular stake also is not very inexpensive. So what this could do now is there could be other smaller players which could gain focus. And, without taking names, I've been speaking to some of them. There's a lot of due diligence happening, both by Ultratech and, the Adani Group on a lot of smaller names also. So there are a couple of names where probably the valuations are still cheap, like $50-60 a ton, which is below the replacement cost. So few names like, for example, Sagar Cement, the valuations are like $55-60 a ton. Today, if you want to set up a new greenfield plant, it's between $90 to $100. So I think a lot of smaller players will gain in focus, and this will continue, in my view, for next couple of years, where these two large blocks will emerge. And mind you, Ultratech is already about the third largest cement player in terms of grey cement capacity in the world. So I see consolidation, and with consolidation, I think at some point of time, some pricing power will come. But for now, in larger names, there may not be much juice left as far as the current valuations are concerned.
No, got that. Gurmeet, good to speak with you. Thanks. Thanks for your time. Now, if you look at it in the south, from what we understand, the numbers, so there is Kesoram as well. But even without Kesoram, Ultratech has a capacity in the south of about 20.5 million tons per annum.
Yeah.
With India Cements and Kesoram, capacity goes up to some 45 million tons. That's about 22% regional share from the current 10%. This is only the southern markets, right? And cement largely is, you don't move cement from south to north. The freight, etc., is very high, so it's largely regional, looked at regionally. But are there any issues from a competition angle? Sort of a CCI perspective as well, etc., or you think it's okay? Or you think that will be something to watch out for if they try to go all in India Cements beyond this current 23% which they've picked up?
Prashant, I don't think so. They've currently picked up, as you rightly said, 23%. It will go up, and once you cross, I think 27 probably needs a CCI approval. And there are more players in South. And if you see, for example, in India level, India's capacity is 600 million tons. We are producing about 390, 400. So we are moving inching towards better capacity utilization. But in South, if you see, it's more at about 50-60%. And that's where the price hikes have been a bit of a challenge. We were speaking to the Sagar Cements guys post, this new government coming in Telangana. And there's a lot of buzz around, infra and capex picking up in South with, new governments in place, especially in Telangana and, even Tamil Nadu trying to do that. And cement is, as you rightly said, is on an FOR basis. Logistics is a very important cost, and your proximity to the geographies you share is very important. Second is your power efficiency, right? So a lot of acquisition will happen where, you have a captive power, because that's another important cost. So my sense is you will see probably more names coming in. Already Sagar is up today 4% as your screen flashes. And there are some marquee investors who have entered in some of these smaller names in anticipation that there'll be consolidation. So I think the juice lies in picking up good smaller names and see where you're getting it below replacement cost or much below replacement cost with power efficiency, with proximity to the market, and more sale of non-trade sales. You have a trade sale where you supply to infra projects where the pricing is always an issue. And then you have the trade and channel sales. So I think the names which are now coming like India Cements and Sagar, etc., they are now having more channel sales. And that's where I think the larger players will focus upon getting more reach and penetration.
Okay. Rohit is also with us. Rohit, weigh in on how the cement stocks look, and in the entire pack, which one is looking the best, the chart?
No, I think you're seeing some interesting breakouts, specifically as you all were talking. I was opening up India Cements itself because that's in the news. And it had been consolidating out of its first breakout for, I think, several months now. And what today's action does, it sets the stage for probably the next move higher. Now, I don't want to really put out targets. We can't do that because we are not an advisory. But what I would say is this is a good trigger given that you have infrastructure already in focus, you have real estate already in focus, and the immediate rub-off is cement, so because there is going to be demand if you're going to really be building up on that. And an event like this has sort of set the momentum in favor of that, in favor of those stocks. So that much is clear. Even if I just draw, like what we draw is a simple parallel channel around India Cements, the upper end of the channel will be, well above 400. So we then start thinking, okay, that's the next major resistance that we'll be watching over a period of time. None of this will happen, fast. But I think right now the momentum is there. It may not be over. So it's not like, okay, the news came in and, the party ends tomorrow. It's something that would probably last for a while.
In a name like Ultratech Cement, for example, it's been a big wealth creator, right, in the past. I mean, if you look at a 5-year chart of Ultratech Cement, it's only given great returns to shareholders. 5 years ago, the stock was, I think, at 4,000. Today, almost 12,000. So, Rohit, in the medium to longer term, is there still a lot more upside in a name like Ultratech Cement on the charts?
So I would think so. Like I said, this is a sector that indirectly, benefits from whatever is happening in infrastructure, real estate, the capex cycle, and so on. So it's an indirect beneficiary of any, boom bust cycle. But cement, over time, what it used to be, say, if you go all the way back to the 1990s, it used to be one of the hottest sectors. But that was more because of the controlled environment, licensing, Raj, etc., which we were coming out of. After that, subsequently, while cement stocks have done well, they've really not been the top performing sector. Unfortunately, we don't have a sector index to make a direct comparison, but they've really not been in the top end in terms of relative performance. So which is probably why we don't talk so much about it. But it will tend to move in that direction overall because of what is happening in the economy.
Gurmeet, you said not much juice is left in the large cap space, and you would focus on some of the smaller ones where the valuations are attractive, trading at lower than the replacement cost. Particularly talk about Ultratech Cement and this acquisition, because while it does boost their presence in South India, it's not done at cheap valuations. I think it's done at $90 EV to ton. So a 5% up move on Ultratech on this acquisition. Or not acquisition, but at least it's 23% stake. What is the street building in?
Rima, we are in a bull market. So any good news gets magnified. So does, so I'm not saying there's no juice left in Ultratech. What I meant was in terms of near term. Because I think near term, the focus will shift on smaller players. Because see, if the top 5 players now have a market share of more than 55%. This was 35%, in 2018 or something. So the top players are expanding market share. It's still a little scattered. So as the top 3 guys start commanding about 60-70% market share, that's when the pricing power comes in. It's not a fair comparison, but look at telecom now. You don't have the tariff wars which we have seen. And once you are doing aggressive capex and acquiring, the return ratios can be a little bit in the place. So I meant near term, I would probably focus on the smaller names, more power efficient names. And if you see out of, let's say, 300 odd plants in India, 78 are in just in 3 states. So it's very concentrated, right? In terms of it's AP, it is, a bit of it in MP. And so I think South has been one area where capacity utilization has struggled to cross 55-60%. And any acquisition there may not yield immediate benefits. Once the overall capacity utilization picks up, more consolidation happens, I think the pricing power will come in. So long term, obviously, I think I'm all in for Ultratech and Ambuja. Near term, probably more focus on some value plays in smaller names.
No, absolutely. Stay with us, gentlemen. We continue to sort of, talk about this deal as when we come back. I have to take a quick commercial break here. The markets now, look at the index, 80 points higher. If I got that right, 23,948, 23,950 plus. So we started 50 points down and is now 80 points higher. So that's the kind of market we're in. I was saying, well, there is enough happening with single stocks, so index can do what, but the index is not being left behind at all. So more on markets as well. We are back with both Rohit and Gurmeet on the other side. Stay with us.
NVIDIA come from to the layperson? I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Unifor, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Unifor?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic.
Testing.
Okay, welcome back. So yeah, it's a good-looking screen, good-looking market. Gurmeet and Rohit are with us. Gurmeet, I'm going to come to you in just a bit, but Rohit, I wanted to your thoughts on the index itself, the market, which is zooming and how? It's been a terrific week. Last week, it was looking like last week was turning into a bit of a consolidation. We were entering a consolidation zone, but nothing doing. We're up there. So just your brief view near term, because there is an important budget event as well, right? Because for the first time, we will hear about what the government really wants to lay out in terms of a vision for the next 5 years under the changed circumstances, changed political equation in that sense, whatever it may be. So just your thoughts, Rohit.
Yeah, so see, what you saw last week is typically what we see in the week prior to expiry, because a lot of these stock options start hitting margins Friday, Monday, Tuesday, and then you get some selling rollover and all. And I think that sort of got over on Monday. So after that, what we are really seeing is the start of the next leg higher. And this next leg higher, then it's likely to continue, maybe not just into the budget, but beyond the budget. Because the market is really front-running more of a macro theme, which is that the investment cycle essentially is going to continue. And on the other hand, with a lot of things coming in place, I think we are slowly setting the stage for a period where interest rates will significantly go lower, which sort of then further adds as a trigger to all the existing themes, whether it's infrastructure, real estate, autos, consumption, and banking, which is the new kid on the block, because banking was underperforming most of 23. And now I think post this election result, you're actually seeing serious outperformance by the banking sector, especially in the private sector, NBFCs and so on. So I think that part is the new trend, which is likely to continue, banks, leading from the front. So a lot of the interest rate sensitives, I think, are something to really focus on.
Okay. I just had one last question for Gurmeet before we let you go on this entire cement space, right? Now that this deal has happened, or rather the 23% stake has been bought, Gurmeet, what happens to the other smaller South-based cement players? If you do own, shares in some of these companies, what do you do?
So, Sonia, we picked up some exposure in Sagar Cement, close to at around 200 odd levels, again as a special situation, because at that point of time it was available at $40 a ton. And if you take these recent acquisitions, they have been done at between $80 to $100 a ton. So there is a case there. Then they acquired Andhra Cement, and they were, so they were building more capacity there. Then they are also amongst one of the lowest cost producers. They're extremely power efficient. Very good OPC and PPC mix. OPC is basically ordinary Portland cement, and PPC is where you mix fly ash, which is so the right mix. They're just the right mix, like 50-50. Doing well, turning it around. It was loss making. Now they've broken even, reducing debt a little bit. So that's something we bought as a special situation, and so far it's up. The screen shows you what it is up. It's still at about $55-60. So we are looking at that, and we will look at now more names. May not be just focused on South, as I said, because this will happen across. And I think eventually you will see probably the two blocks, which is Ultratech and Adani ACC Ambuja, owning almost 60-70%. This will happen over the next couple of years. So we'll try and focus on few more names, especially in North and East also, ones which have dominance in Central, North and East. So that is where the capacity utilization has been a little better, a shade over 75%. and there has been moderate price hikes of 2 to 3 rupees bag frequently.
Okay, all right. We'll leave it there. Good perspectives, Gurmeet, as always. Great chat, Rohit. Thank you very much for joining us. Both of you, appreciate it as always here on CNBC TV 18. Well, so that's the big story for this Thursday morning. Ultratech buying into India Cements, and perhaps there is more coming there. Stocks are flying. Cement space is doing well. Markets, of course, on a very steady footing after an initial lower opening. I think we're going to take a quick commercial break here. On the other side, our special segment, Indianomics. My colleague Lata will get chatting with a host of experts to discuss the implications of India government bonds entering the JP Morgan Global Emerging Market Index. Stay tuned. That's coming up.
In every board meeting in a publicly traded company, Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at NVIDIA today. And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with NVIDIA becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So.
Hello and welcome. This is not Indianomics. We would rather call it The Name is Bond. And I'll tell you why. June 28 is an important day for India's bond markets, for rupee, interest rates, and indeed the Indian economy. Starting June 28, Indian government bonds enter JPM's Global Bond Index for Emerging Markets, or GBIEM as they are called. Indian bonds are to have a weight of 10% in the index. The inclusion will, however, be phased out, with 1% weight getting added every month until the full weight of 10% is reached in March 2025. In addition, Indian bonds also enter the Bloomberg Local Currency Bond Index, which will see a flow of about $3 to $4 billion next year. The start date is January 2025. These index inclusions are likely to have far-reaching impact. $35 billion or nearly 3 trillion rupees of Indian bonds could be bought in a space of a little over 1 year. Dollars have rushed in and will continue to. Government borrowing cost could fall. So will that of corporates, perhaps. Some of this has perhaps already happened. $10 billion, we are told, have already come in ahead of the index inclusion. And we have seen, of course, Indian yields fall a bit since last September. Going forward, how does the grammar of markets and of the Indian economy change? To understand this, I have with me an elite panel. Kenneth Akintewe, the head of Asian sovereign debt at Aberdeen Investments, Samiran Chakrabarti, chief economist of Citi India, and Kaushik Das, chief economist, Deutsche India. Gentlemen, thank you very much indeed for your time. Kenneth, you will find more questions coming your way simply because you represent the buying community and the market expert. So first up, what should we expect next week, post June 28? Can there be big movement in terms of inflows, or will it be more like business as usual?
So there's a few things going on. First of all, hi to you and the fellow panelists. There's a lot of things going on at the moment. First of all, for a lot of these new investors that will be coming into the India markets, before they can buy bonds in India, they obviously need to register as FPIs. And while this process has improved, some maybe are still struggling with it. So there may be actually some investors who are not yet ready to access the market, which means that their flows may be drawn out a little bit later. But we're clearly seeing a pickup in flows. The data over the last 2 months has been quite clear. It looks like June is going to be a strong month for FPI bond flows. And so the expectation is that as more and more of these new FPIs get registered, we will begin to see those flows picking up more strongly over the coming months. Another thing that is pretty important has been the performance of the India bond market relative to the rest of the local currency market. Obviously, it's been a very challenging year this year. It's not just India going through elections. Many of the emerging market economies are going through elections as well. And in those cases, many of those cases, they have, like in Mexico, they haven't gone so well. And there's a tremendous amount of market volatility happening in the rest of the EM basket. So performance of the other emerging market, local currency markets hasn't been great this year. That is probably going to encourage investment managers managing local currency funds to want to allocate more into India. So it may not be just the case of building indexed inclusions. They may actually want to get ahead of the 1% a month and build a bigger position in India. So that could encourage stronger flows to come into the bond markets as well.
Okay. Well, Kenneth, to persist with this point, the mechanics of the market, I heard 2 points of view. One, that investors into Indian bonds will still prefer the non-government bond route. That is, they'll go through the TRS route or through Supra bonds. Is that right? And that this will not be necessarily the most attractive way to take an India exposure? Or the other thing I hear is not just the people who follow the GBI EM index, but even other active funds will actually realize that, oh, India is in the index, so it's worth taking an exposure. Which is the correct explanation?
Probably lies somewhere in between. The supranational bond market does have advantages. So first of all, yields have been trading in line with the domestic bond market, but you don't pay tax on those bonds. So on a net of tax basis, it's quite an attractive market. Here's the issue, though. It's nowhere near as big as the domestic bond market. You just haven't got the liquidity. So if you suddenly need a whole host, there's about $300 billion or more that track the GBI EM index alone, let alone the other global investors who maybe want to access the market. The supranational market is not big enough to accommodate all those flows. The other thing is that market hasn't been tested out. So one of the advantages of buying domestic Indian bonds is the fact that foreign investors honestly don't matter. Even once you go through this index inclusion, we will still basically not matter in the scheme of the overall market. It's a $1.5 trillion government bond market, right? So the tens of billions of dollars that are going in largely passive allocations, this is about, a large part of the money that will go in is simply tracking an index, so it won't necessarily be actively traded. So in terms of the active flow, it's not really going to have a meaningful impact on the overall market. By far, the most important investors are the domestic investors, the domestic banks, insurance companies. They are the ones that drive the stability and performance of this market. And when we sell, we get to sell to the LICs and the onshore banks. Okay. Supranational market is very different. It's basically only foreign investors that are going to own that market. And so if there's some kind of shock that causes foreign investors to want to reduce risk, it's possible that those supranational bonds will also be included in the assets that need to get sold, and liquidity could disappear very quickly. So from a risk management perspective, you'd want to be careful about how much you put in supranational debt. For all those benefits that we get from investing in Indian bonds, the low volatility, the low correlation to other asset classes, the reasons that it makes it such a great diversifier in a global bond portfolio, you really need to be having a healthy allocation to the actual domestic bond market.
Actually, you answered partly my next question, which was, what makes India attractive to you, irrespective of the bond inclusion. So I'll come to you for your other, foreign fund perception of India. But let me come to Samiran and Kaushik next. Samiran, do you see this as a big structural move? One big investor coming in, global recognition. What can this mean that even the corporate bond market gets a leg up? What are the structural changes?
So, Lata, to start with, we have to understand that India is still a capital deficient country. Our saving investment balance is such that we have more investment than savings, which means any form of foreign capital is welcome. And in the pecking order of that, we have typically favored FDI and FPI flows into equity, and somehow thought that FPI flows into bonds is quote unquote a bad thing. Now that perception is changing, and we are finding another avenue to fund this saving investment gap, which technically should mean that structurally we should be looking at a lower interest rate to bridge this saving investment gap. The second macro advantage over the longer term is that this induces a certain amount of fiscal discipline, because now you are not just funding your fiscal deficit through the captive buyers of banks and insurance companies, etc., who are almost forced to buy these bonds, but also the foreign investors who would be very closely scrutinizing every bit of the fiscal data. So that fiscal discipline is also, to me, a very important structural positive. And the third one is that a whole new set of investors, in some sense, when it starts looking at India closely, India's position in the global market itself gets much more elevated. So there are a lot of these rub-on effects on investment from other geographies. We are already noticing that some of the geographies from which we did not used to receive that much of inflows are inquiring about India a lot more. Once you are part of that index, then you are not really someone which is an entity which people have not known about. Now everybody will be researching India, and that itself, apart from the passive inflow part, could bring in a lot more of the active inflows, not just for bonds, but even for equities.
Okay. Oh, that's good to hear, because that makes it a more medium-term story, maybe long-term story. Kaushik, let me come back to the markets. Should we expect this event and the more ecosystem impact that both Kenneth and Samiran are talking about getting noticed, India getting noticed, becoming attractive? Do you think this helps bond yields? Do you have a view that yields will come down? If yes, to what? Likewise, the rupee, do you see it appreciating because of a possible reception of more flows?
So, Lata, I agree to all the points that Ken and Samiran made, and I think it's a big shift in the way domestic bond markets will kind of behave going forward in the next several years. And my view is this is not the last index inclusion that India will see. I think there will be more index inclusion taking place. Barclays, Bloomberg, Global Ag, at some point of time will probably include India, and this will have further legs. It's not just a one financial year story and over. So I think over the next 4 or 5 years, you'll see a lot of flows coming into Indian bond markets. And as it happens, the demand side of the bond dynamic improves quite a lot. And on the supply side, we know that the government is very, serious about fiscal consolidation, and they probably would keep on reducing the fiscal deficit lower and lower, and that will control the supply of bonds. So the demand-supply dynamic of bonds would improve, not just for this year, which has already happened, but going forward also that positive dynamic will remain. And if you think of it on the margin, bond yields have already reflected part of that improvement. 10-year bond yields today are sitting below 7%. This is at a time when US treasuries are still on the higher side, but still 10-year bond yields have come below 7%. Now the question is whether it will go down quickly to maybe 675, 680. Probably that will not happen, because for that to happen, you need another lever to take place, which is basically RBI monetary policy or expectations of rate cuts have to be there or brought forward for bond yields to kind of react positively. So at this stage, I think you are kind of at the fair level, maybe a little bit of more downside possible for bond yields, but the next trigger would be more in the form of the budget. We're expecting about, say, 5% fiscal deficit for this financial year. In the interim budget, they are given 5.1% fiscal deficit target. We think it can be better. But if it is better than 5%, somewhere around 4.9 or something like that, then bond yields can react positively and can fall even more. But one thing you should remember that we are expecting about 2.5 billion kind of flows every month because of the bond index inclusion. And if you think of it, every week we have about 4 billion kind of auctions that take place. So in the bigger scheme of things, you're going to have 2.5 billion of inflows from foreign investors, but about 16 billion of auctions that happen each month. So it's not going to change or reduce bond yields drastically or quickly, but over a period of time, as Ken said, as the flows keep on accumulating and people show more interest in India, on the margin, definitely the cost of capital would reduce and the financial repression on the banks will reduce. So it's a very, very healthy development in my view. And even after this inclusion, India's foreign investors holding of local currency bonds probably would go up to 4%. So it will still be a domestic oriented fixed income market, but on the margin, definitely price discovery will take place and bond yields are probably going to be lower from where we are 6 months or 9 months down the line.
Got it. Actually, I must ask my director to bring up that table since all of you are alluding to it. Indian banks, the government bond ownership structure, if we can get that table, Indian banks own 40%, insurance 28%, Reserve Bank 13%, pension funds 5%, foreign investors 3% as of now. And as you all say, probably it may go up to 4 or 5%. Very quickly, one question before I take the break. Ken, what's your view of the rupee? Do you see it appreciating? I mean, 2024.
Yeah, the rupee is like the most important, at least for a foreign investor, the rupee is, the characteristics of the rupee is one of the most important things when thinking about investing in the market. And that is because in most local currency markets, not just in EM, but developed markets as well, currency risk is typically what gets you into a lot of trouble. So you can see the depreciation pressure now on the euro, certainly in terms of EM currencies, the Mexican peso, South African rand, and so on. So even when you have high yields, it's very easy for currency depreciation to wipe those yields out. So for the rupee, we don't actually need it to necessarily appreciate strongly. We just need it to be stable. Because what happens is in a risk-off environment, when you're experiencing a lot of volatility in other markets and other currencies are selling off, the rupee is stable. And so it allows you to still earn the income from the underlying bonds without having that income eroded by currency depreciation. And bearing in mind as well, many investors into the Indian bond market, they're not going to be coming from base currencies that's US dollars. It could be like where I am in Singapore, Singapore dollars, or European investors with the euro. And this trade, the investment into the Indian bond market, typically works even better against those currencies. The euro depreciating against India means European investors actually make a currency gain on top of 7% yields. So all the strong fundamental structural characteristics, the smaller current account deficit, pretty resilient foreign direct investment, inflows, very strong equity performance, all these things that are supporting the rupee on top of the $650+ billion that the Reserve Bank of India has, which many other central banks around the world don't have, that they can use to defend the currency. This puts the rupee in a very, very strong position. But again, I don't say strong position necessarily expecting strong appreciation. To be honest, we think this year against the dollar, it will be relatively flat, but that means it could perform quite well against other currencies in EM and G10.
Oh, that's most useful for investors who are listening to it. I think the way you have described the performance of the Reserve Bank and the Indian rupee, the Indian government may give you a Padma Award for this. Gentlemen, hold on. I have to take a break. I will continue my conversation with Kenneth, Kaushik and Samiran. But for Bazaar viewers, it's time for Chartbusters after a break.
Changing the way you work, live, learn, and play. When I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now NVIDIA is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast NVIDIA is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI and if you haven't got a good AI strategy and well implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you know, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, you know, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, you know, it's something that we will address, but we certainly believe that we have been flexible. You know, we offer customer choice, and we're completely transparent about this. You know, when you subscribe to the plan, it's
You're watching us here on Chartbusters. It's been a very busy morning when it comes to the deal space, especially in the cement sector. All those are the stocks which were buzzing in today's trading session, leading, of course, with Ultratech and India Cements with that big deal. I'm Manglam Malu, with me, Hormaz Fatakia. But while we were talking about all of that, Hormaz, you know, the market has surreptitiously moved higher. The Nifty opened with a gap down, and thereafter we saw an up move. Now all the indices are in the green, with the mid-cap index leading the charge.
Almost 25 points, the Nifty fell shy of the 24,000 mark. The 23,976 is the high that the index has made this morning. It's also the monthly expiry for the Nifty, and what a month, what an expiry, what a series this has been for the index. Almost 1,400 points in the June series, the best since December of last year. So a fantastic move on the index. Now slightly off the highs of the day, facing some bit of resistance at that mark of 24,000. But the Nifty Bank is flat in today's session, as it has been since it's moved a lot. It's moved quite a bit all through last week and this week as well. But the broader markets are doing well. The metals index is seeing a bit of a rebound after a sell-off over the last two trading sessions. But the market overall, it's been a good recovery from the lows.
It's been a good recovery from the lows. You spoke about the market moving a little off highs and the Nifty Bank not doing too well, right? So just pull up the chart of HDFC Bank. That really has been something that has dragged the Nifty from the highs. Nifty Bank as well from the highs. And that is something that continued, you know, yesterday as well. In yesterday's trading session, the HDFC Bank stock was in the red for most part of the trading session, saw a bit of a recovery from the lows, but, you know, kept the Nifty Bank's gains in check. In fact, the Nifty Bank's expiry was supposed to be around the 53,000 mark, and that's where the lid was. It seems like for the Nifty, that mark is 24,000, where, you know, there is some sort of congestion or some sort of ceiling for today. And maybe the street is playing that via HDFC Bank, where every time the Nifty makes an attempt towards that 24,000 mark, we have the HDFC Bank stock, which underperforms currently at the low point of trade. But in the broader markets, we have Manappuram Finance, which is doing extremely well. Muthoot Finance, the gold financier, is doing extremely well. Piramal Enterprises as well has seen a sharp surge. So along, you know, the market lines, we're seeing decent traction. A name like Whirlpool as well, up 11%. There's global news around it where, Reuters has reported that maybe Bosch will make an offer for Whirlpool's international parent, and that has a rub-off in the listed company out here. So we'll keep an eye out on Whirlpool and a bunch of stocks. But the big news of the day has been, what we here at CNBC-TV18 have confirmed. In further consolidation in the cement sector, Ultratech has picked up 23% stake in India Cements. Prashant, who broke the story, joins in with this big break, and now CNBC-TV18's stamp of confirmation coming in. Prashant.
Well, thanks very much for that. So yeah, it's a big one, and it's come in early this morning. And the way it's happened is interesting, right? It happened in the block window. Ultratech is bought into India Cements. The basic transaction details are on your screen. They've basically picked up a 23% stake. The price at which they've bought is about 267 rupees per share, and that basically the deal value for now amounts to 1,870 odd crores, 1,870 crores. So, just to run you through the details of what this essentially means, India Cements right now has an overall cement capacity of about 14.45 million tons per annum. And of course, it's majorly present in the southern markets, South India cement markets. At 267 rupees per share, Ultratech's equity investment is valued at about $85 per ton on an EV by ton basis. Now, remember, if you look at what they put in money recently, they bought Kesoram's assets, right? And that happened slightly under the $100 per ton mark. So as compared to a recent deals at about 85, this perhaps may be a little lower, but if you take a slightly longer sweep of deals, this would largely be in line with what we've seen recently. Now, Ultratech has a capacity in southern India markets of about 20.5 million tons. This is, of course, excluding Kesoram's capacity. Now, with the investment in India Cements, and Kesoram, Ultratech's total capacity in the southern markets will double to 45 million tons per annum. Yeah, so it's a pretty large ramp up that we're going to see. It would indicate that Ultratech will have a 22% share of that regional market, southern markets, as compared to the 10% share that they have at this point in time. The top two players, which is Ultratech and Ambuja in the south markets, will combined now are expected to control about 35% of the total capacity in the southern region. Just two other points. India Cements has got large land reserves, land bank, and there is, of course, that automatically always sort of indicates strong growth optionality, etc. India Cements also has renewable energy and some shipping assets, etc. as well, which Ultratech would like to leverage upon. Remember, Ultratech has got a pretty strong history of turning around some of these assets, right? India Cements' capacity utilization is low, operational efficiencies, etc. can be driven. We've seen Ultratech doing that, for example, with the Jayaprakash assets. We've seen them doing that, something similar with the Binani assets, which they acquired. So I think expectations are running high that they'll be able to do something similar here as well. Remember, there is also the potential open offer. Right now, they've picked up 23%. But Ultratech could launch a voluntary open offer as well and further consolidate their holding, increase their holding in India Cements. But of course, that is for, that's something which we will need to confirm with Ultratech as well. Back to you.
Absolutely, Prashant. Take that point. In fact, just to add to that, it's the second deal that has taken place in the cement space in South India in the last 2 weeks itself. On June 13th, remember, Adani Group bought Penna Cement for a little over 10,400 crores. And it's also the second deal that has taken place between Ultratech and India Cement itself over the course of this year. Remember, in April 2024, Ultratech went ahead and bought the grinding unit of India Cements in Maharashtra, 1.1 million ton capacity for about 315 odd crore rupees. So that is something that everyone will keep an eye out on. Ultratech's current capacity, 150 million tons. India Cements close to around 15.5. In the south, obviously, like Prashant pointed out as well, Ultratech about 20.5, India Cement 13. And if you look at Penna Cement, it's about 10 million tons, which is expanding expandable to about 14 million tons. So those are a couple of things that we'll watch out for. Ex of Kesoram, this investment enhances their capacity in South India by about 65%, and they also have organic expansion plans going forward. So they've already commissioned a 2.7 million ton capacity in FY25 already, with around 3.5 million tons coming by in the remainder of this financial year, and over the next 2 financial years there will be close to around 9 million tons which will be added by Ultratech in the southern part of the country. Jefferies this morning came out with a note as well, said that the market share of top 5 companies in South India currently stand at 42%. This is likely to increase to 49% over the course of next couple of years. So we need to watch out for a couple of things. One, likely synergies. Last year the India Cement EBITDA per ton was close to 172 rupees. Capacity utilization was a lot lower. Ultratech, on the other hand, was about 1,089. Valuations, the Ultratech trades at a little around $240 per ton as an EV. India Cement close to around $88. And the earlier deal, which was implied at around $85 per ton, that's what larger companies are trading at. So what is it that we need to track? Will there be an open offer coming in from Ultratech for India Cement? Secondly, what happens to the India Cement promoter family stake? And thirdly, most importantly, what happens to all the other south-based players? Will the larger players look at acquiring some of these other south-based players, or the large 2 players will, have dominance out there? So those are a couple of things we'll be watching out for.
And all good questions, Mangalam, and I think we'll track this. Let's actually quickly get in Rakesh Arora as well, who's joining us. He's needs no introduction, a really cement veteran. Rakesh, great to have you with us here. Thanks very much for your time. So just some of those points, right? Natural for them to launch an open offer, consolidate their holding. So Mr. Radhakrishnan Damani, an entity, is owned about a little over 20%, so that's out. Promoters own about 29% or so. So that's one large chunk. So would you expect that to happen in the coming days? That is one. And second, how is the deal valued at about $85 per ton? I was saying that the Kesoram transaction was just under about $100, if I remember correctly. So, but on a longer sort of timeline of deals, this could be in line or maybe slightly lower. What's the sense?
Okay, so first of all, Ultratech has classified this as a financial investment. So I don't think any open offer is coming. Otherwise, they would have said, it is a strategic investment. So I think number 2, I think that probably it is not the India Cement promoter who has sold. We need clarity on that. We think it is probably the other large shareholder who has sold, and Ultratech has got a foot into the door, maybe to preempt from their main competitor who recently acquired Penna and probably is looking to acquire a few more. So maybe it's a foot in the door to stop their main competitor from acquiring it. Number 3, I would say, is that this is no consolidation till the time Ultratech gets in the seat and is able to turn around this whole asset. Otherwise, it is a subpar asset, and $85 is a very, very fair price. I don't think there's any more to it which was possible. This is the best price. So I think it's a great opportunity for the minority shareholders of India Cement to lock in an exit till the time they get any kind of clarity, because I don't feel that the deal value would be any better, even if they were to go ahead and acquire the remaining stake and come out with an open offer and all that. So I think this is a good time for minority shareholders to actually exit.
But Rakesh, what you're saying is, from an Ultratech's perspective, minority shareholders, yes, you're saying they should lock in profits. But from an Ultratech perspective, it would make absolute sense for them to launch that open offer and consolidate it. And that's how they'd be able to drive a turnaround, operational efficiency, etc., right?
So Prashant, given the deal valuation, given the quality of assets, I don't expect Ultratech to pay any penny more for the remaining stake also. And so I think, even if they were to launch an open offer tomorrow, the stock will trade at a discount to the run-up to that open offer. And the upside to India Cement will be very limited. The only, remote probability is that Ultratech goes aggressive and does a hostile takeover. In that case, there's upside. But if that was the case, Ultratech would not have termed it as a financial investment. So I think that possibility is extremely, extremely low. So, and see, Ultratech is a sensible player. They are unlikely to do anything which is extravagant.
I'm just trying to figure out what Ultratech does with this financial investment itself. You're saying that, you know, the only way they can derive more value out of this acquisition is if they get the driver's seat or they get into the seat. Is there a possibility? I mean, how do you weigh Ultratech's next move here now that it's classified it as a financial investment?
So I think if, you know, I was thinking from Ultratech point of view, I would wait for, you know, this company to wear down a little bit more and then acquire it at a reasonable valuation. Today, probably Indian cement promoters are not willing to sell out. Otherwise, they would have acquired the whole thing at one go. So I think Indian cement is already under duress. In the last 2 years, they have made substantial losses. And this year is starting at now no better footing. So they are probably going to do losses even this year also. And so Ultratech has time on its side. They have put the foot in the door. They can wait for a year or two. And, you know, already you saw earlier this year, Ultratech, India Cement had to sell part of its assets to repay debt and, you know, service its interest costs. So I think it's just a matter of time that this company folds out and Ultratech will be able to acquire it at a much cheaper cost.
Now, Rakesh, you were just speaking yesterday afternoon when you spoken about more consolidation likely within the cement space. I know you've mentioned that they've classified this as a financial investment, as Ultratech, but there are plenty of such other cement companies down south which look potential acquisition targets, right? Sagar Cements just made an acquisition last year, which was Andhra Cements. But there are plenty of other such companies. Do you see this trend continuing within this space and particularly within the southern part of the country where the bigger players looking to acquire smaller players down south?
It is quite possible because, you know, southern companies are facing financial duress. And if they are willing to sell, probably there's a deal waiting to happen. But as I've been mentioning in my various interviews that the deal value would not be too far from $85 plus minus $10 here and there per ton. So for, you know, investors who are looking to play that theme, just make sure that you're not buying at a very high price. You know, you'll be left hanging, you know, with those kind of stocks.
Valuations and, you know, targets aside, what do you think this investment does to the market dynamics of the South? Because you recently had the big deal between, you know, Adani's and Penna Cement. Now this one gets a foot in the door. What happens to the existing players in the South with the presence of larger players now with these deals, etc.? What happens to the market dynamics there?
So market dynamics doesn't change at all because Ultratech is not calling shots on this asset. But, you know, some of the other players, as we were discussing, could get excited and might think that there's a possibility to exit. So consolidation might happen in southern India. Already the market share of top 5 is around 55%, not 42%, which you guys were reporting a little bit earlier from some other broker report. And if this deal was to happen fully, then maybe the top 5 would have 67%. So I think that's a decent consolidation. And if they can get few more, so 75-80%, you get pricing power and, you know, return ratios can improve.
Well, in that case, now that you're mentioning that this might just continue within the southern part of the country with companies that are facing financial stress over there, do you see this trend percolating to the other parts of the country as well? Because there are a lot of smaller players in the eastern part of the country, say the likes of a Star Cement, or in the northern part of the country, say Orient Cement. I know the management has mentioned that they are not on the block. But now that, considering the deals that are taking place right now, do you see the cement space getting more organized and becoming a more big player play going forward?
There are chances that in any case consolidation is happening because the top 2 companies are growing much faster than the smaller companies. Number 2, other region companies are not in duress. Their balance sheets are strong. They are doing good profitability. So they are in no pressure to sell at a cheap valuation, which these 2 companies are looking to acquire. So currently, South is the only place where there is a possibility of a deal happening because the valuation gap is not much between what the seller is expecting and what the buyer is willing to pay. But in other markets, maybe there could be a valuation gap. And there are not too many large capacities for these guys to go in. So they would rather go, you know, organic route, put up capacities themselves, which cost these days $70 to $80 per ton.
Final question then, a 2-part question. The first one is because it's a financial investment and, you know, any sort of strategic move has moved down the road. How should analysts value this in the overall scheme of Ultratech Cements? Largely because, there is a big gap in the valuations of the two. And were they to entirely acquire it, then maybe, the valuation of the acquired asset would increase. So how should analysts look at that? That's point number one. And secondly, what happens to the other players? I'm talking specifically about names like Shree Cement, etc., who were looking for acquisitions. Do they now scout? So how do you view Shree Cement, Ultratech Cement, and the others?
So first of all, in terms of valuing this asset, as an analyst, I would straight away do a 50% discount to whatever they spent. So 1870 crore they've spent. I would just, give a 50% discount to this investment. So the Ultratech stock is up, but the valuation, some of parts would actually go down. Number two, you're talking about other companies like Shree Cement, etc. Obviously, they also have to grow, but Shree has largely grown organically. They have been very efficient in putting up capacities. So unless they are changing their mode and they want to go very aggressive, they will continue with their organic growth plans.
All right, Rakesh, we leave it at that. Thanks a lot for joining in and sharing with us your views on this mega deal that took place within the cement space. Rakesh Arora there of Go India Advisors. But time for a short break here on Chartbusters. We'll get you more on the markets and specific stocks on the other side, barring cement, of course. Stay tuned. We'll be right back.
Monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs,
If FIs would buy, markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significant investing.
Welcome back. The market slipped into the red. The Nifty is now lower, largely because of HDFC Bank and some reduction from the highs on Ultratech Cement as well, as we heard from Rakesh Arora saying that this is just a financial investment as they've classified it. So maybe analysts will look at it as a holding company, discount of 50% of what they've spent already on this. So this is something we'll keep an eye out on going forward. But good time to get in Sachidanand to take her for a quick technical check on the market as well. Sachi, nearly 1,400 points this series. Where do you see the Nifty going today in terms of expiry and individual stock calls? Quickly.
Good morning, Mangalam. Mangalam, I think for the day, there's a clear resistance somewhere close to around 24,000 unless we don't see the Nifty surpassing that. The momentum on the higher side looks difficult. And on the lower side, there's a good substantial evidence that the Nifty may not even slip below that 23,800 mark. So I think the expiry could shape up somewhere close to around 23,900 is what the data is indicating as of now. So I think it can be a muted session. We may see this consolidation throughout the day. On the stock side, it's better to keep a long-short ratio. Something that we have recommended to our clients is buying HUL. Now, after a good steady decline for the last 3 weeks, the stock has again formed a base near its 200-day exponential moving average, which is placed somewhere close to around 2450 zone. Looks like a classic, rising 3 formation on the weekly scale, which is indicating a price pattern target somewhere close to around 2560, and that's why we have recommended, building long positions here in HUL, keeping a trading stop loss somewhere close to around 2430 on the lower side. And on the short side, we have been recommending short positions in Bharat Forge. The stock has consistently displayed a downtrend. It has been trading confidently below its 5-day exponential moving average. We are expecting that this particular fall may extend towards this 20-day exponential moving average, which is placed at around 1640.
Right.
So from a trading perspective, a stop loss can be placed at 1710.
Right. All right. Right, Sachidanand, we leave it at that. Thanks a lot for joining in, sharing with us your recommendations on specific stocks as well. Visuals coming in there from the Parliament. The President has arrived for the address to both the houses of Parliament. So visuals coming in there with the President's arrival being greeted by the Prime Minister as well as the Lok Sabha Speaker. But with that, it's a wrap on this edition of Chartbusters. Back on the other side with the President's address, and Trading Hour takes the action forward.
More expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain. documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonia Shenoy. Flatlining for the benchmark indices. It's gotten a bit choppy. In the morning, the Nifty opened with a cut of about 50 to 60 odd points. It turned flat at about 9:30, 9:45, courtesy a big move in Reliance Industries. Then there was an up move, and the Nifty actually went towards 24,000. Didn't touch 24,000, but it got pretty close to 24,000, and that's when the bank started performing. The Nifty Bank was up close to about 0.5%, but in the last 30 minutes, we've started seeing some profit booking, and the Nifty now is back flat again. On the Sensex as well, it's just a muted gain of close to about 77 points. The Nifty Bank is now absolutely flat, so it's come off from the day's high. The President, Draupadi Murmu, will be addressing the joint session of the Parliament. It's expected to start at 11 o'clock, and we will be cutting across to it as soon as it begins. I presume they're standing up for the national anthem right now. So the visuals are up for you on your screen, awaiting the speech by President. In terms of the markets, while we wait for that, autos are on the back foot today. So the Nifty Auto Index has seen a correction of close to about 0.5%. The CPSC Index too is in the red right now. On the gaining side, it's all about cement today. We don't have a sectoral cement index, but if we did, it would be flying high. So Ultratech Cement is the top Nifty gainer. It's again come off from the highs of the day, but it's still up close to about 3%. The other Birla Group company, Grasim, is up 3.5%. Reliance Industries continues to rally 1% today, and this week itself, Reliance Industries is up close to about 5%. As one of our experts pointed out, it's like, the giant has finally woken up, because Reliance Industries was consolidating. It didn't participate, but in the last 1 week, we've seen both HDFC Bank and Reliance Industries come back into the party, and that's what's helped India outperform this week. So on a week-to-date basis, if you look, the Nifty is up close to about 1.5%, and we've outperformed the global markets. But the President has begun speaking.
गौरवपूर्ण भूमिका के निर्वहन के लिए शुभकामनाएं देती हूं। उनके पास सार्वजनिक जीवन का बहुत व्यापक अनुभव है। मुझे विश्वास है कि वे लोकतांत्रिक परंपराओं को अपने कौशल से नई ऊंचाई से देने में सफल होंगे। माननीय सदस्यगण, मैं आज कोटि-कोटि देशवासियों की तरफ से भारत के चुनाव आयोग का भी आभार व्यक्त करती हूँ। ये दुनिया का सबसे बड़ा चुनाव था। करीब 64 करोड़ मतदाताओं ने उत्साह और उमंग के साथ अपना कर्तव्य निभाया है। इस बार भी महिलाओं ने बढ़ चढ़कर मतदान में हिस्सा लिया है। इस चुनाव की बहुत सुखद तस्वीर जम्मू कश्मीर में भी सामने आए हैं। कश्मीर घाटी में वोटिंग के अनेक दशकों के रिकॉर्ड टूटे हैं। बीते 4 दशकों में कश्मीर में हमने बंद और हड़ताल के बीच कम मतदान का दौर ही देखा था। भारत के दुश्मन इसको वैश्विक मंचों पर जम्मू कश्मीर की राय के रूप में दुष्प्रचारित करते रहे, लेकिन इस बार कश्मीर घाटी ने देश और दुनिया में ऐसे हार ताकत को करारा जवाब दिया है। पहली बार इस लोकसभा चुनाव में घर पर जाकर भी मतदान कराया गया है। मैं लोकसभा चुनाव से जुड़ी हर कर्मी को सराहना करती हूं और अभिनंदन करती हूं। माननीय सदस्यगण, 2024 के लोकसभा चुनाव की चर्चा आज पूरी दुनिया में हो रही है। दुनिया देख रही है कि भारत के लोगों में लगातार तीसरी बार स्थिर और स्पष्ट बहुमत की सरकार बनाई है। छह दशक बाद ऐसा हुआ है। ऐसा समय में जो भारत के लोगों की आकांक्षाएं सर्वोच्च स्तर पर है, लोगों ने मेरी सरकार पर लगातार तीसरी बार भरोसा जताया। भारत के लोगों को ये पूर्ण विश्वास है कि उनकी आकांक्षाएं सिर्फ मेरी सरकार ही पूरा कर सकती है। इसलिए 2024 का ये चुनाव नीति, नियत, निष्ठा और निर्णयों पर विश्वास का चुनाव रहा है। मजबूत और निर्णायक सरकार में विश्वास, सुशासन, स्थिरता और निरंतरता में विश्वास, ईमानदारी और कड़ी मेहनत में विश्वास, सुरक्षा और समृद्धि में विश्वास, सरकार की गारंटी और डिलीवरी पर विश्वास, विकसित भारत के संकल्प में विश्वास। मेरी सरकार ने 10 वर्षों से सेवा और सुशासन का जो मिशन चलाया है, ये उस पर मुहर है। ये जनादेश है कि भारत की विकसित बनाने का काम बिना रुके चलता रहे और भारत अपने लक्ष्यों की प्राप्ति करते रहे। माननीय सदस्यगण, 18वीं लोकसभा कई मायनों में एक ऐतिहासिक लोकसभा है। ये लोकसभा अमृतकाल के शुरुआती वर्षों में गठित हुई है। ये लोकसभा देश के संविधान को अपनाने के 75वें वर्षों की भी साक्षी बनेगी। मुझे विश्वास है कि इस लोकसभा में जन कल्याण के फसलों का नवीन अध्याय लिखा जाएगा। आगामी सत्रों में मेरी सरकार अपने इस कार्यकाल का पहला बजट पेश करने जा रही है। ये बजट सरकार की दूरगामी नीतियों और फ्यूचरिस्टिक विजन का एक प्रभावी दस्तावेज होगा। इस बजट में बड़े आर्थिक और सामाजिक निर्णयों के साथ ही अनेक ऐतिहासिक कदम भी देखने को मिलेंगे। भारत के तेज विकास की जन आकांक्षाओं का पूरा करने के लिए रिफॉर्म्स की गति अब और तेज की जाएगी। मेरी सरकार का मत है कि दुनिया भर में निवेशकों को आकर्षित करने के लिए राज्यों में स्वस्थ स्पर्धा हो। यही कॉम्पिटिटिव कोऑपरेटिव फेडरलिज्म की सच्ची स्पिरिट है। राज्यों के विकास से देश का विकास, इसी भावना के साथ हम आगे बढ़ते रहेंगे। माननीय सदस्यगण, रिफॉर्म, परफॉर्म और ट्रांसफॉर्म के संकल्प ने आज भारत को दुनिया की सबसे तेजी से बढ़ने वाली अर्थव्यवस्था बना दिया। 10 साल में भारत 11वें नंबर की अर्थव्यवस्था से ऊपर उठकर 5वें नंबर पर पहुंचा है। साल 2021 से लेकर साल 2024 के बीच भारत में औसतन 8% की रफ्तार से विकास किया है और ये ग्रोथ सामान्य समय में नहीं हुई है। बीती वर्षों में हमने 100 साल की सबसे बड़ी आपात देखी। वैश्विक महामारी के कालखंड और विश्व के अलग अलग कोने में चल रही संघर्षों के बावजूद भारत ने ये विकास दर हासिल की है। ये बीते 10 साल के रिफॉर्म्स और राष्ट्रहित में के लिए किए गए फैसला के कारण संभव है। आज भारत अकेले ही दुनिया की ग्रोथ में 15% का योगदान दे रही है। अब मेरी सरकार भारत को विश्व की तीसरे नंबर की इकोनॉमी बनाने में जुटी हुई है। इस लक्ष्य की प्राप्ति विकसित भारत की नींव को भी मजबूत करने में काम करेगी। माननीय सदस्यगण, मेरी सरकार अर्थव्यवस्था के तीनों स्तंभों मैन्युफैक्चरिंग, सर्विसेज और एग्रीकल्चर को बराबर महत्व दे रही है। PLI स्कीम्स और ईज ऑफ डूइंग बिजनेस से बड़े पैमाने पर निवेश और रोजगार के अवसर बढ़ रही है। पारंपरिक सेक्टर्स के साथ साथ सनराइज सेक्टर्स को भी मिशन मोड पर बढ़ावा दिया जा रहा है। चाहे सेमीकंडक्टर हो या सोलर हो, चाहे इलेक्ट्रिक व्हीकल हो या इलेक्ट्रॉनिक्स गुड्स हो, चाहे ग्रीन हाइड्रोजन हो या बैटरीज हो, चाहे एयरक्राफ्ट कैरियर्स हो या फाइटर जेट्स हो, भारत इन सब सेक्टर्स में अपना विस्तार कर रहा है। लॉजिस्टिक्स कॉस्ट को कम करने के लिए भी मेरी सरकार लगातार प्रयास कर रही है। सरकार सर्विस सेक्टर को भी मजबूत करने में जुटे हैं। आज IT से लेकर टूरिज्म तक, हेल्थ से लेकर वेलनेस तक हर सेक्टर में भारत लीडर बन रहा है और इससे बड़ी संख्या में रोजगार और स्वरोजगार के नए मौके बन रहे हैं। माननीय सदस्यगण, पिछले 10 वर्षों में मेरी सरकार द्वारा ग्रामीण अर्थव्यवस्था के हर पहलू पर बहुत जोर दिया गया है। गांव में कृषि आधारित उद्योगों, डेयरी और फिशरीज आधारित उद्योगों का विस्तार किया जा रहा है। इसमें भी सहकारिता को प्राथमिकता दी गई है। सरकार किसानों उत्पाद संघ, FPO और FEX जैसे सरकारी संगठनों का एक बड़ा नेटवर्क बना रही है। छोटे किसानों की बड़ी समस्या भंडारण से जुड़े होती है, इसलिए मेरी सरकार ने सहकारिता क्षेत्र में दुनिया की सबसे बड़ी भंडारण योजना पर काम शुरू कर चुकी है। किसान अपने छोटे खर्चे पूरे करने के लिए इसके लिए PM किसान सम्मान निधि के तहत उन्हें 3,20,000 करोड़ रुपये से ज्यादा राशि दे सकते। मेरी सरकार के नए
Okay, that is President addressing the joint sitting in Parliament. But let's get back to the markets now, which are looking pretty good. Once again, record highs for the market, as we've been telling you. And the best part is that the mid-cap index is really packing in a punch this morning, up almost 200 points and building onto its gains that we've seen over the past many days. Let's do one thing. Let's take a quick commercial break, but lots more news and updates continue on the other side. Do stay tuned in.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the testing.
Welcome back to Trading Hour on CNBC TV18. We're looking good for the market and plenty of stocks actually are moving around. So just wanted to mention some of them. The railway companies have come back into action in a big way. Texmaco Rail is now up 9%, putting on some more weight after the kind of traction that is seen over the last many days and weeks. And then a couple of these power names are looking pretty good as well. So not just something like a Suzlon, there's REC, there's IRDA in the allied spaces which are looking very good. So these are some names both in terms of volume and price action that are looking very good. But the 5G auction has come to a close after 7 rounds of bidding. The government has received bids worth 11,000 crore rupees. Bharti Airtel acquired spectrum worth almost 7,000 crore rupees, while Reliance acquired spectrum worth 970 crore rupees. We have Balaji Subramanian, the Vice President of IIFL Securities, to take some questions. Before that, Reema, any thoughts on this bidding that has played out?
Well, very muted. I think the street was expecting very limited bidding because most of the 5G related spectrum auction purchase already has taken place and the rollout is completed for all the companies. So it wasn't expected to be mega bidding, but I think 11,340 crore is still on the lower side. Jio, though, despite putting in the maximum earnest money deposit, their total outlay at less than 1,000 crore is much on the lower side. For Bharti, it's largely in line with expectations. They've purchased spectrum where some of their licenses were expiring and some top up to increase their capacity. Vodafone Idea is the only one, I think, which comes in as a surprise in terms of the total outlay at 3,500 crore rupees. But that said, the amount is not much and therefore it shouldn't hurt the company's financial position. But as promised, Balaji of IIFL Securities is now with us on the show. Balaji, first, your quick thoughts on what we've seen 1.5 days and concluded. We're used to much bigger blockbuster kind of auctions.
Hi. Good morning, Reema. Thanks for having me on the show. I expected the industry to spend close to 12.5, 13,000 crores in these auctions. So to that extent, it was not very far off from what my estimates were. I think the only big surprise was I didn't expect Vodafone to go and acquire spectrum worth 3,500 crores. I think what Vodafone has also done is that in many circles they have also topped up 900 megahertz. Maybe because they want to park some of their voice traffic, the 2G traffic, on the 900 band and harmonize some of their existing spectrum and reform it for 4G. Otherwise, I think what Jio and Bharti have done, that makes a lot of sense because in a few circles where they wanted to complete a full block of 5 megahertz, so that they go to a total holding of 10, 15 or 20 megahertz. They have made their purchases in a targeted manner, in an opportunistic manner. Largely I would say the limited bidding in these auctions were along expected lines, because if you look at what happened in 2022, all telcos, especially Bharti and Jio, had made significant purchases.
Okay. Got that. I wanted your thoughts particularly on Reliance Industries, how to approach it now, because there's a very interesting note from JP Morgan this morning where they believe that on the back of a fresh round of tariff hikes, there could be perhaps a re-rating for Reliance Industries as well. Particularly for Jio, what are your expectations going forward? And for the stock, how are you positioned now?
So as far as Jio is concerned, they have been gaining revenue market share fairly steadily, and they also have the highest low frequency spectrum holding, and they are well positioned to capture any upsides from an increase in 5G use cases. I think the key growth driver for them would come from tariff hikes, which should be taken by the industry in the very near future. At least that is what the expectation is. And that should be the biggest driver for the telecom business of Reliance, because that will result in a significant revenue uplift, which would also bring with it significant margin improvement, as well as an improvement in return ratios. I think in general, telecom stocks have been rallying in recent months based on expectations of a tariff hike, and that has also rubbed down on Reliance Industries stock. And maybe in the next 12 to 18 months, we could see some of the entities under Reliance, such as Jio and Reliance Retail, potentially going public. So, all those could be some of the triggers to look forward to.
Now all eyes are going to be on a potential tariff hike. Do you think budget is a consideration? Will it happen post-budget, or budget shouldn't be a factor when companies decide to go ahead and announce their tariff hike? And again, in terms of the quantum, in the past you'd spoken about, I think, a 20% tariff hike this year, followed by a 15% one in FY27, so 2 years later. Do you still maintain that? And is it in the price if we get a 20% tariff hike? Because stocks like Bharti have already rallied 40%.
Yeah, so I don't think budget has got to do anything with the timeline for the tariff hikes. And I still, maintain by my earlier view that one should probably see a 20% tariff hike in the near future, and somewhere around 15-20% tariff hike, maybe 18 to 24 months down the line. As far as the stock rally is concerned, I think the market is already factoring in, most of the upsides from the tariff hikes, going by, how all these stocks have performed in the last 2-3 months.
Okay, so Bharti Hexacom has, very unexpectedly acquired spectrum worth almost 1,000 crores, right, in the current auctions. How much do you think that could help augment its data services, and what kind of growth are you looking at over there? Any thoughts on the stock as well?
So on Hexacom, they have strengthened their spectrum holdings in both the circles that they operate in, and I would think that they would also stand to benefit from the tariff hikes almost in a proportionate manner as what one would see with the Bharti mobile segment itself. But considering the fact that the contribution from the India mobile business is almost 97-98% for Hexacom, versus a much lower number for Bharti, considering Bharti's own diversified revenue mix. I think Hexacom is probably, it's a pure play on the India mobile market recovery. But that said, I think the valuations that we see there, those, largely factor in most of the upsides.
Okay, thank you very much for that. Today you are seeing Bharti Hexacom under pressure, and I believe there is a downgrade which has come through from Jefferies. So Jefferies has downgraded Bharti Hexacom to a hold, and their target price is at 12.90. So a modest 100 rupee upside from the current level, because they go on to say Bharti Hexacom has unexpectedly acquired spectrum worth about 1,000 crore rupees in the current auction, which should augment them. But the stock has doubled since its IPO in April. It trades at 16 times EV to EBITDA, 20% premium to Bharti's India operations, and that valuation limits the upside for Bharti Hexacom. So after that, marvelous run-up, today there is some profit booking on the back of this Jefferies downgrade to a hold, limited upside due to valuations. Get into a break. On the other side, we throw the spotlight on the big cement deal. Stay tuned.
So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence it will be all about governance and earnings growth.
GST had certain advantages of avoiding multiplicity of taxes or tax on tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of India's, independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries.
Dr. Sanin, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth. And the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth.
Testing.
Welcome back. As promised, let's talk technicals. Vishal Malkan is with us on the show. Vishal, well above 23,900, didn't quite get to 24,000, but it doesn't seem to be, too far away. And banks and Reliance Industries, both of them have started moving up over the last couple of days. Your thoughts on the kind of run-up that we've seen, a bit excessive in the near term? What would the trade be? And your stock calls?
Yeah, I think the way markets are moving, especially more than Nifty, I would look at Bank Nifty, which is doing fantastic, and it has crossed those resistances of 50,000, 51,000, now almost near 53,000. So looking at Bank Nifty, I look at that markets are in a steady pose, and it's a strong bull phase which is going on, and we should be more sector specific. Of course, Bank Nifty performing, so banks would be the top sector. But apart from that, I would look at a couple of stocks which have on my radar. One is Canfin Home, which has broken about that resistance of 900. So I'll go with a buy on that with a stop of 890 for targets of around 1,000 plus in the next few trading weeks. And also the next stock which I look at is IEX, which is broken about that resistance of 175. And I will look at it a target of around 195 and 210 in the next few trading weeks with a stop of 175.
Okay, so those are some stocks. Vishal, hi, good to see you in. A lot of heavyweights are hitting fresh highs as well, whether it's Reliance, which is at a fresh 52-week high today. There's ICICI Bank, which is at a fresh record high as well. Do you think any of these names can build on to their gains in the near to medium term? And if yes, which ones would you be tracking? Would you expect to see more gains?
I would go with ICICI Bank because, as I said, Bank Nifty is the top performer right now, and I like sector specific. So ICICI Bank still has some room, which I guess if we can look at targets around more than 7 to 10% in the next few trading sessions. So I'll go with ICICI Bank.
Okay, ICICI Bank is what you like and you recommend that on the technical side. Got it. Vishal, thanks a lot for joining in. Appreciate your time here on CNBC-TV18. So that's the technicals of the market. Let's slip into a quick commercial break. On the other side, when we return, we'll throw the spotlight on the big cement deal that has taken place. In case you're wondering about more details on that, do stay tuned in.
Remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Welcome back. Let's go on to the big news of the day. In a confirmed news break and further consolidation in the cement sector, Ultratech Cement has picked up a 23% stake in India Cements. The stocks are flying. India Cement is up 9%. Ultratech is now up close to about 3%. Prashant is at the big wall to tell us more. Prashant.
Well, thanks very much for that. It's a big deal, and this happened this morning in the cement space. We at CNBC-TV18 were the first to report that Ultratech has bought over 20% stake in India Cements via the block deal which happened in the block deal window between 8:45 and 9 o'clock. Now, Ultratech in a statement has confirmed this and more. Let me actually get you the details of what this actually all means. So cement major, Ultratech, the largest cement company in the country with about a 25% overall market share, is buying into South India-based India Cements. Ultratech has put just under 1,900 crore rupees to work to pick up 23% equity stake in India Cements. Remember, there are two large shareholders. One is the Radhakrishnan Damani and a sort of family, which owns a little over 20%. And then there is, of course, the promoters who own around 28% in the company. Now, this works out, just under 1,900 crore investment works out to 267 rupees per share, which is slightly higher than what the stock closed at yesterday. Remember, yesterday we had a 15% rally in the India Cement stock. So the deal this morning happened at a slightly higher price as opposed to the last closing price. Some more details in terms of the companies themselves. Now, India Cements has an overall cement capacity of 14.45 million tons per annum, and it is majorly present in the southern markets, South India markets. What about valuations of the deal? So, at 267 rupees per share, Ultratech equity investment is valued at $85 per ton on an enterprise value per ton basis. This indeed is lower than what it would cost if you were to actually go ahead and put a new cement plant. That's essentially lower than the replacement cost. Now provided that this 23% stake in India Cements is just a stepping stone into future further consolidation of Ultratech's holding in India Cements, what does this do to Ultratech's own capacity? Now, currently Ultratech has a capacity of 20.5 million tons capacity in southern India. This is, of course, excluding Kesoram Industries and the capacity there. With investments in India Cement and Kesoram combined, Ultratech will more than double its capacity in South India to 45 million tons per annum. In terms of market share, this would translate a 22% regional market share for Ultratech as compared to the 10% before these transactions. Remember that the two top players, essentially Ambuja and Ultratech, between them in the southern markets are expected to control 35% of the total capacity there. Now, just to look ahead, India Cements, apart from the cement capacity which I already outlined, also has large land bank reserves, which indicates optionality, right? Growth optionality if they want to do expansion, etc. India Cements, by the way, also has renewable energy and shipping assets in South India, all of which a player like Ultratech can put to good use. So there you have it. Ultratech, the largest cement player in the country, adding another important asset to its kitty and really moving towards its stated goal of reaching a long-term capacity goal of 200 million tons per annum. Back to you.
Okay, thanks a lot for that. Well, Mangalam is also joining in now to give us a detailed outlook on the kind of consolidation that we've seen in the cement sector, especially in southern India. Mangalam, over to you.
Absolutely. So if you just take a look at the southern India itself, in the last 2 weeks, there's been, this is the second deal. In fact, on June 13th itself, the Adani Group went ahead and bought Penna Cement for a little over 10,400 crore rupees. And there's also the second deal between Ultratech and India Cements in this year itself. In April, India Cements actually sold its grinding unit, a 1.1 million ton grinding unit in Maharashtra, to Ultratech for about 315 crores. Now, Ultratech's overall capacity is close to around 150 million tons. India Cement is about 10% of that at 15 million tons. What happens in South India? South India, if you just take a look at the large players there, Ultratech currently, with the expansion plans that they have all for FY25, is close to 27 million tons. Kesoram is around 11 million tons. Of course, Ultratech has gone ahead and bought Kesoram as well. If you look at the Adani side of things, ACC Ambuja has 7.1 million tons, whereas Penna Cement is close to around 14 million. So you add all of that, it's about 21 million out there. India Cements by itself is 13 million tons. So what is it likely to be going forward? That is something we'll be watching out for in terms of positioning. Most on the street believe that, consolidation for the top 5 players will see a big increase in the southern part in particular. What we also need to know is what would be the likely synergies, because India Cement currently has an EBITDA per ton of close to around 172, whereas Ultratech for the same is a little under 1100 rupees itself, and the deal was valued pretty similar to what the Ambuja Penna deal was, at around $88 per ton on an EV basis. Ultratech by itself trades at around 238. So what are the kind of valuation synergies that it can derive once it goes ahead and decides to increase more stake in the company or not? But that's something that is left for Ultratech to decide going forward currently, because it is classified as a financial investment. So the 3 big questions that we are asking: how does Ultratech derive synergies from India Cement? What happens to India Cement's promoter family stake? And what happens to all the other south-based players, the potential targets and the potential acquirers? All are those things that we'll be watching out for.
Thank you very much for that. Get into a break. On the other side, we'll take the cement discussion forward. We'll also talk markets. Jyoti Vardhan Jaipuriya, Valentis Advisors, joins in on the other side. Stay tuned.
Measured. We are going to see spending, but there's going to be a dislocation of spend, and it's going to be in certain ways self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they're within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers.
Welcome back. As promised, let's invite Jyotivardhan Jaipuria from Valentis Advisors to talk about the markets and the way forward. Jyoti, can't not begin this conversation by getting your view in on cement. So first, take us through what we've seen right now. Another step towards consolidation. The big two are only getting bigger, the Adani Group and the Birla Group in cement. What does this mean? And is there any opportunity, any play, large cap, mid cap, south-based?
Yeah, so Vima, if you think of the few conversations we've had in the past on cement, we have been very clear that one of the main reasons why we like cement is consolidation in the segment, and we will continue to see consolidation. The way we are playing it is that 2 ways you can play it, right? The people who acquire, which are all the large companies, or the people who get acquired. We think there's more value actually buying the people who get acquired, because most of the deals like this deal probably happened at around $85 a ton. So we think most of the deals will happen between 85 closer to maybe even $100 a ton. And there are a lot of smaller companies trading at lower than that. Then that's where, you can make a bigger bang for the buck in terms of share price. Otherwise, of course, some of these large companies which are buying out and they'll be big, that will be another way to play it long term, because they'll continue to be winners in the space.
So you're saying that companies like Ultratech Cement, despite the rally that we've already seen, Jyoti, there is still more scope for these names in the longer term?
See, the longer term, Sonia, the scope is there, because essentially what will happen is, as there's a consolidation in the sector, and we've seen this across the world, as after this consolidation, let's say the top 5 players end up owning 75% of the capacity. There's a lot of pricing discipline which comes in. And after that, you stop seeing prices not going up. What we've seen in the last 6 months in the cement space is, one, the demand has slowed down. So because, after the model code of conduct came, tenders from the government started to slow down. And second is, pricing has been lagging, and we have hardly seen a price increase for the last 6-9 months. So this whole consolidation helps to, seal up that pricing. So now in South India, you have the 2 biggies who've taken, 2 of the smaller players. So to that extent, probably there'll be a bit more consolidation happening in South, and we'll see some pricing discipline coming in the South also. So I think overall over the next few years, it will be a sector where you'll see a lot of demand growth and, better price discipline, simply because it will be a more consolidated sector.
Okay. Do you still maintain that it's the domestic focus, domestic oriented sectors that one should look at? Because it's been a theme which is running in the market and stocks have done very well. So from here on, where is the opportunity? Have you made any recent purchases?
Yeah, so we continue to stick to that. We are looking at some of the, more external facing, Like we had added pharma a year ago, and now we are looking quite closely at actually the chemical space because that sector lagged for the last 18 months. We're seeing, some drawdown of the inventory at the dealer level, but I think it's still, probably 3 to 6 months away before things start to look good there. We generally tend to buy stock prices early, so maybe in the next quarter we'll be looking at adding to cement in our portfolio. The other thing which is more domestic facing, which we've been buying, has been the banks. So banks have been laggards in the last 12 months, and the banks is one space which actually in the whole market, which is not very cheap, the banks are looking relatively much cheaper. So there are temporary problems, but because you're getting them at good valuations, banks is one space where we've been adding to our positions.
Would you be adding at all to IT? Because IT seems to be a laggard, underperforming. But at some point, is there value there?
So yeah, Sonia, we've tried. We kept looking at IT. It shows up on our screens all the time because, it's underperformed, it's underowned, it's, undervalued now. But, we're still a little skeptical of the demand environment in IT. And that's the reason we've not taken a meaningful position there. But it is something which, I think at some point, all of us will adapt to IT very quickly because when the turn comes in the sector, then, because it's been so underowned and it's done so badly, you probably have some space to do well. But one other concern on IT I'll point out, and this is something which we've been discussing a lot with the experts, is the AI. And will AI mean that for the Indian IT companies on a very permanent basis, it means that the demand environment will be slow because you probably need lesser number of people to do the same work once AI becomes more mainstream.
And what is your view on that? Whether, yeah, go ahead.
So frankly, our view is that AI will start hurting. So on a longer term basis, it is the Indian companies will have to change, what they're doing. But, in some sense, the whole outsourcing model will probably get into a bit of question mark. We'll have probably slower demand coming in the outsourcing model. So to that extent, some of these stocks and the sector itself will probably see a bit of derating because the demand environment for IT outsourcing will be slower for a longer time.
So a quick, we're running out of time. So if you do play IT, it's just a tactical call. Structurally, long term, you're not very bullish on the prospects of Indian IT companies.
So, they'll have to reorient themselves because they'll be working IT. So what they'll probably have to do is that the volume will go down, but, your value will go up because what you end up doing is, higher value addition work in the AI space. At the same time, the way they kept adding people, they'll probably keep adding much lower people in that period.
Okay, Jyoti, we'll leave it at that. Thank you so much for joining us. Appreciate your time here on CNBC TV18. By the way, the market is doing very well. Don't lose sight of that. After the big rally we've seen in the last many days, we're putting on some more weight. The Nifty is closer to the high point of trade. The mid-cap index is up 200 points. So when we come back from the break, Kaitav Shah, the lead BFSI analyst at Anand Rathi, will be joining in to discuss the MFI sector. Stay tuned.
And major ISVs, it takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Unifor, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Unifor?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company. Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible
a lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at NVIDIA today. And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with NVIDIA becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well,
Welcome back. Let's talk now about the NBFC and particularly the microfinance sector. In a recent note by Anand Rathi, they've said a sharp correction in the microfinance sector and stocks offers a lucrative entry point for investors. To talk about the way forward, the key triggers, potential headwinds, we have Kaitav Shah, lead BFSI analyst at Anand Rathi, and also the author of this note. Kaitav, thank you very much for speaking to us on CNBC TV18. First, just lay out the context for us. You believe what we're seeing right now, the external headwinds, provides an attractive entry point. So how bad is the stress first, if you could quantify that?
We think that the stress is very selected. It's not across the board. It's not structural in nature. There have been certain events like the election wherein there is definitely some loss in collection efficiencies. But we think this is transitionary in nature. This is not going to last for a longer time. If you combine this with the fact that the government has been focusing a lot on financial inclusion, there are perhaps several catalysts that could play out over the course of next 1 to 2 years in terms of improving rural livelihoods, which can eventually improve the collection efficiencies for microfinance. As a sector, microfinance has done its job very well of reaching to the ground level. And we think that there is continued scope for expansion in both in terms of growth and penetration here.
Okay. Thanks a lot for joining in, Kaitav. Appreciate your time here. Some of these MFI, actually most of them are trading near their bear case valuations. Since you believe that the stress is not very high and these stocks are at bear case valuations, is the risk reward favorable for most of these stocks?
Absolutely. That's what we think, that with the stress already being priced into the valuations to a bigger extent, I think you now have a beneficial risk reward ratio.
Okay, so you would want to talk about, which are the companies that have the maximum growth and valuation potential?
We're not talking company specific, but in general, rural specific themes, rural financing themes, we should do well from here on, whether it's through the microfinance, through the small finance bank, both should do well according to us.
So within rural financing, right, there are different pockets as well. There are companies that finance to, say, commercial vehicle makers, some of them to tractor manufacturers as well. Within themes, where do you, even within rural under that umbrella, where do you see the maximum potential now?
At this point in time, we see a lot of potential in the microfinance sector.
Okay. But Kaitav, going back to the worry in the market, right? After what Ujjivan Small Finance Bank had to say, they brought down their growth guidance. They spoke about higher credit costs. The fear is that there may be such, more companies coming out with this kind of an assessment. Have you spoken to all the other companies, and what has been their feedback on the ground?
So Anand Rathi Institutional Equities had the privilege of hosting a lot of these MFIs a couple of days back. I think the big takeaway for us is that the credit costs are normalizing. So what we saw perhaps a year ago were very low credit costs. Typically, the cycle that you see for a small borrower, small ticket size borrower, is very different than what you will see for the normal middle class or upper middle class who take loans. If that is the case, then you have to be aware that the credit cost will be slightly higher than in other asset classes like your housing loan, your vehicle finance loan. And given that context, you are still not very high in terms of that cycle where it worries us. This is more normalizing according to us as a house, and we are not overly worried. I think structurally they should come back.
Okay, thanks a lot, Keta, for joining in and giving us your quick take on the MFI sector. Appreciate your time here. Well, that's the word coming in on the MFI sector. Let's just quickly take a word on the market as well. Looking very good at the moment. Lot of stocks seeing fresh 52-week highs. So interesting there. We were talking about how Reliance and ICICI Bank are sitting at fresh highs. You also have Axis Bank, by the way, which is at a fresh 52-week high right now. It is now up 0.5%, but the gains this year for Axis Bank have been almost 17%, and big move this month as well, an 11% move. LIC Housing Finance, Inox Green, KC International, PB Fintech are a couple of other names which have hit fresh 52-week highs today. Not taking away from some of the pharma names as well, names like Suven Pharma, Wockhardt, sitting at fresh 52-week highs. So there is plenty of action, especially in the broader markets as well. For the headline index, the Sensex just shy of the 79,000 mark, and the Nifty holding pretty just below 24,000. With that, it is a wrap on trading hour. Stay tuned. Halftime report is coming up next.
It shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now NVIDIA is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast NVIDIA is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy, well, implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today? As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India. The latest challenge that you're up against is the US government, looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute.
Ultratech picks up 23% in India Cements for 1,885 crores in what the company describes as a financial investment. The deal likely gives a prominent investor an exit and opens up consolidation possibilities.
Dr. Reddy's is set to buy a top global nicotine therapy OTC brand from Haleon for £500 million. The brand, though not in a high-growth segment, is seen as a valuable buy. The stock gains. Price of the latest 11,340 crore rupees spectrum auction is the higher than expected 3,500 crore spent by Vodafone Idea. Bharti bought spectrum worth 6,900 crore rupees, while Jio spent about 1,000 crore rupees. Market regulator SEBI is expected to consider norms for holding companies, criteria for stocks inclusion in F&O, and bringing finfluencers under the regulatory ambit at its board meet today. Hello and welcome to Halftime Report. I'm Sonal Bhutra. With me is Manglam Malu, and today is a busy day. Not only in terms of stock-specific action, but the markets as well. We hit another record high. It was 23,975. We've come up slightly from those highs, but there's nothing to complain about for the bulls for sure. The mid-caps are doing well, up 0.5%. Bank Nifty, which has been continuously contributing to the gains that we've been seeing, is up around 0.1%. And we do have the big names like Reliance Industries contributing to the gains we are seeing. And it's the monthly options expiry, so there could be a lot of volatility.
Well, it's just half a day and it seems like there's been 3 or 4 days of news already with, of course, the big news of the day that came in from the cement stocks. Just the last couple of, last 20 minutes or so, we've seen a bit of a pickup in the IT space, and that's actually led to the Nifty move off lows once again towards the higher end of today's trading range so far. So the IT index comes up for you. That is something we'll track as, we move into July series tomorrow. And at the same time, it also brings with it the first quarter results. So we'll keep an eye out on this space, the IT index at the high point. Let's begin, however, with the big news of the day. It's a confirmed news break. We told you first, and now it's official. In further consolidation in the cement sector, Ultratech picks up 23% stake in India Cements. Prashant joins in to tell us more. Prashant.
It's a big deal, and this happened this morning in the cement space. We at CNBC-TV18 were the first to report that Ultratech has bought over 20% stake in India Cements via the block deal, which happened in the block deal window between 8:45 and 9 o'clock. Now, Ultratech in a statement has confirmed this and more. Let me actually get you the details of what this actually all means. So, cement major, Ultratech, the largest cement company in the country with about a 25% overall market share, is buying into South India-based India Cements. Ultratech has put just under 1,900 crore rupees to work to pick up 23% equity stake in India Cements. Remember, there are two large shareholders. One is the Radhakrishnan Damani and a sort of family, which owns a little over 20%. And then there is, of course, the promoters who own around 28% in the company. Now, this works out, just under 1,900 crore investment works out to 267 rupees per share, which is slightly higher than what the stock closed at yesterday. Remember, yesterday we had a 15% rally in the India Cement stock. So the deal this morning happened at a slightly higher price as opposed to the last closing price. Some more details in terms of the companies themselves. Now, India Cements has an overall cement capacity of 14.45 million tons per annum, and it is majorly present in the South India markets. What about valuations of the deal? So, at 267 rupees per share, Ultratech equity investment is valued at $85 per ton on an enterprise value per ton basis. This indeed is lower than what it would cost if you were to actually go ahead and put a new cement plant. That's essentially lower than the replacement cost. Now, provided that this 23% stake in India Cements is just a stepping stone into future further consolidation of Ultratech's holding in India Cements, what does this do to Ultratech's own capacity? Now, currently Ultratech has a capacity of 20.5 million tons capacity in southern India. This is, of course, excluding Kesoram Industries and the capacity there. With investments in India Cement and Kesoram combined, Ultratech will more than double its capacity in South India to 45 million tons per annum. In terms of market share, this would translate a 22% regional market share for Ultratech as compared to the 10% before these transactions. Remember that the two top players, essentially Ambuja and Ultratech, between them in the southern markets are expected to control 35% of the total capacity there. Now, sort of just to sort of look ahead, India Cements, apart from the sort of cement capacity which I already outlined, also has large land bank reserves, which indicates optionality, right? Growth optionality if they want to do expansion, etc. India Cements, by the way, also has renewable energy and shipping assets in South India, all of which a player like UltraTech can put to good use. So there you have it. UltraTech, the largest cement player in the country, adding another important asset to its kitty and really moving towards its stated goal of reaching a sort of, a long-term capacity goal of 200 million tons per annum. Back to you.
Okay, Prashant, thank you so much for bringing us all the details of this big story today. We'll do one thing, we'll slip into a short break, but we'll continue to put focus on this big deal in the cement sector. We'll connect with Mangesh Bhadang of Centrum Broking and Sandeep Parekh of FinSec Law Advisors to understand what it means for the investors and industry as a whole. Stay tuned.
I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the Content Authenticity Initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of
Welcome back. You're still tuned into Halftime Report. Let's continue to put focus on the big story and the deal in the cement sector. UltraTech will acquire 23% stake in India Cements. This move will help UltraTech strengthen its presence in South India. To discuss this and more, we have Mangesh Bhadang, the Senior Vice President Research at Centrum Broking, and Sandeep Parekh, founder of FinSec Law Advisors, joining us now. Gentlemen, good afternoon. Thank you so much for joining us. Mangesh, let me come across to you first up. What is your view on this particular deal? There's been a lot of consolidation happening already in the sector. What would this mean?
Hi, thank you for having me. So, see, this is for UltraTech. They have taken this 23% stake, which is a non-controlling stake in the company, just to secure the asset, in my opinion, because the existing promoters are not willing to sell further stake in the company, but a very large investors were already present, and they have sold their asset. So that puts company in a relatively better position. But I would not say that this would lead to consolidation, because as I said, they still don't have the controlling stake in the company. The cost of acquisition for this transaction is relatively fair, or in fact slightly on the higher side, in my opinion, at almost $88, $87, $88 per ton. And if they have to go for open offer in future, and if the price is higher than this, then I would actually term it as a slightly expensive deal for the company.
That's interesting, Mangesh, you say that. But then the question is that because it's recognized as a financial asset on their books, and there is no commentary around whether there would be an open offer at some time in the near future, etc., how does Ultratech then derive value out of this deal? And what happens, how do you look at this for India Cement shareholders?
See, for India Cement shareholder, I think it's a win-win situation. The reason being, as I said, currently only a large investor has exited, and the existing promoters do not have a very large stake in the company. So they have 28%. So even if they would have only acquired the 28% from the promoter, that would have triggered the open offer. But in this case, because the stake is below 25%, it doesn't trigger the open offer right now. So at the time of open offer, probably the existing shareholders should get some more value out of it. But currently, I don't see that, that is, apart from this, if this stock can trade at, say, above $90 or higher valuation. And given the current scenario, I don't expect them to give a premium valuation, or probably go for an open offer at this price.
Okay. How does Ultratech derive value out of this?
So in case of Ultratech, in my opinion, it would help them do is, it will thwart the entry of Ambuja in a very aggressive way in these markets. So they currently are, even though it's a fragmented market south, they still are number one player in this. And with Kesoram acquisition, they have very high market share that they have derived in the Karnataka market. With this, if this acquisition goes through and they get a controlling stake, they will have a further or higher share in Andhra market as well. So cumulatively, Ultratech, Kesoram and India Cement, they would be around 30 or more than 30% market share or capacity share. So that is something, which will help, which will give them a very good hand in future in terms of dealing with the, vagaries of the dynamics of the industry.
Okay, we take that point, Mangesh. We'll come back to you in just a bit. Sandeep Parekh is also joining us. Sandeep, I wanted your take first on the deal, and we are seeing increase in share of ownership control. There's significant shareholding by larger players as well. Any impact from the CCI angle? What do you make of this entire deal?
Hi. So I think, so probably a significant first step in the acquisition of the company. And when I say that, obviously, when a financial investor invests, it can be a financial investment. If a cement company is acquiring 20 or 23% of another cement company, I think the intent seems to be reasonably clear that at some point they will want to acquire the entire, they want to digest the entire company. And then obviously consolidate it through an M&A process, at which stage the CCI question that you raised would arise. At this stage, of course, it doesn't arise, number one. And number two, at this stage, even the takeover open offer does not arise because the stake is below 25% and it's not a controlling stake. But it's also important to know that, besides the fact that 28% is owned by the promoter, if you see the public domain, you will see that 46% of that stake is actually pledged. Those shares are pledged with lenders. So, there is some kind of sensitivity there in terms of what the promoter has, even though, the promoter controls 28% of the voting rights. Some of it is more fragile than the numbers that point out, really, because nearly half of that is pledged with lenders. So I think it seems like almost certainly seems like step one towards a larger goal of acquiring the company. But that process is much more complex and much more expensive. So I think we'll wait for that to kind of play out in terms of both the CCI approval and the open offer, which will need to come at that point.
Right, gentlemen, just to hold on to that thought, because as we were talking about that big deal, the market has hit a fresh all-time high. As you can see at the bottom of your screen here, the studio, the Nifty has crossed that 24,000 mark. We were talking about that rotund number. Not only has the Nifty crossed that 24,000 mark, the Nifty Bank too has crossed 53,000. So markets at all-time high. We have the Nifty at 24,000, the Nifty Bank at 53,000. Leading the Nifty higher in the last 15 minutes or so has been the IT index. So the IT stocks, all of them come up for you at the high point of trade. Alongside that, we have HUL and the Nifty Bank itself seeing some traction coming by from the likes of HDFC Bank and the bigger private sector banks.
And it took 23 sessions for Nifty to reach the 24,000 mark from that 23,000 mark. It's the second fastest rally that we have seen for those 1,000-point range. So again, it was, you said it's halfway through. Looks like it has been a longer day than that. But definitely Nifty at 24,000, it is maintaining those levels for now. But again, it is the expiry day. So we'll have to see what happens in the last 1 hour of trading session. There could be volatility. But again, as you were pointing out, for the FNO setup earlier in the morning as well, there has been a lot of long positions taken over by the investors as well.
So a lot of call writing at 24,000, typically what that tells you is that maybe there could be some congestion. But on the other side, if we sustain above these levels from current levels as well, there could be some case of short covering as well. As of now, what we are looking at for the market, a 1,380 point gain is what we entered today's trading session with. Now that has extended all the way up to 1,500 points. So with this move, not only is the Nifty at 24,000, Nifty Bank at 53,000, this month so far, or this series so far, the gain on the Nifty has been 1,500 points, and the FII long exposure too has increased from 13% at the start of the series to around 67%. So that's about the market setup. Yeah. Another day, another record high, and these milestones keep coming by. But let's go back to our conversation. Mangesh, I wanted your thoughts on what happens to all the other South-based players now, larger entities who are looking to increase their presence in South, or the existing large entities in the South. Because while we're seeing a lot of traction in a lot of cement stocks as a rub-off today, one of them which is actually underperforming is Ramco Cements, which is down about 1.5%. Two deals back-to-back, big deals in the South by larger players. Is there a worry?
Yeah, so see, as I said, South has always been a fragmented market. And what we have seen is that all these companies used to operate in their own regions and, generally used to have relatively better pricing discipline there. For the past 2 or 3 years, that has gone for a toss, and all the regional small companies which used to be slightly bigger companies in that region, those have started now becoming smaller and smaller. So I think eventually you'll find that 2 or 3 years down the line, Ultratech and Ambuja would actually have a very commanding share in those regions and will dictate the terms. And on top of it, Ramco is in a situation wherein not only the profitability is lower, but their leverage is at an all-time high. So that is something should weigh on the stock for some time, in my opinion.
Okay, all right. We take that point, Mangesh. The cement space continues to be in focus. Sandeep, Mangesh, thank you so much for joining us today and speaking to us about this particular deal. And this has been a big one, so thanks for your inputs today. We'll do one thing. We'll slip on into a short break with the news that Nifty is just very close to the 24,000 mark. But we'll keep continuing to discuss the market fundamentals and stock-specific news. We'll slip into a short break. When we come back, we'll connect with Rajan Sethuraman, the Chief Executive Officer at Latent View Analytics, as company's extended timeline for completion of Decision Point Analytics acquisition.
We could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally takes 3-4 months time, but sometimes they can take 1 or 2 months more also.
Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are
We're all seeing a lot of confetti here because the Nifty has hit 24,000. What a day it has been. 23 sessions is what it took. Among the fastest moves that we've seen on the Nifty, a 1,000-point move. It was in this month itself where we saw Nifty hit that 23,000 mark once again, and thereafter it's continued its march forward. We've seen some big contributions coming from names like HDFC Bank and Shriram Finance, etc. It was yesterday that Reliance moved higher and moved to a fresh record high. That's the one which is contributing to its up move right now as well. IT has been underperforming. Now it's picked up. So with all these engines firing, let's see where it goes. But speaking about IT itself, let's shift focus to latent view analytics. The company has extended the timeline for completion of its first tranche of Decision Point Analytics, the acquisition that it made, by about 120 days. So Rajan Sethuraman, who's the Chief Executive Officer of the company, joins us now. Rajan, thank you for joining in. First up, if you could explain that what exactly has led to this change in the timeline or delay in closure of this acquisition, and has there been any impact on this or change in the financial terms?
Not really. No impact on the financial terms or anything. It is just the normal course of digging through the details. I mean, given that they have operations in LATAM, it has meant that we need to understand some of the numbers and stuff better. At this point in time, I would say that we don't have any kind of flags or anything, right, that we want to raise. It's going as per what we expected it. It is just that some of the numbers and the information has been, it's taken some time. We are confident that we'll be able to close it in the next few days. I know that the time frame that we have taken in terms of informing has been a little longer. But the overall plan itself is not delayed significantly, so we are expecting that we'll close it fairly quickly.
Okay, so there is no risk of deal falling through, according to you. In that case, Mr. Sethuraman, can you give us a sense of when will it starting contributing to your consolidated numbers? You had indicated from Q2 is when revenue contribution will come in, or will it shift to the second half? And in that case, does it mean your revenue growth guidance of 25 to 30% growth continues?
Yeah, we are expecting that the consolidation will start happening from Q2. We're not expecting any push out from there on. In fact, if things go well, no, it should be for the full quarter itself, right? So that's where we are at this point in time. The organic growth guidance we had given earlier was kind of similar to what we did last year. I would say that we are in the same thing. I mean, somewhere around 16 to 20% is where we have from organic standpoint. Inorganic, of course, we will know better. The signs are very strong, though. In fact, both the Decision Point and the Latent View teams, the front-end teams have been working very closely together. And we have been able to take them into a whole bunch of our accounts with the new RGM and Beagle GPT capabilities. And they have been able to do the same thing, right, with our supply chain and R&D innovation capabilities. So things are looking fairly promising at this time, right, in terms of the synergy benefits coming through as well.
So what happens to this 25 to 30% target because of this deal, extending? And since you're saying that there is a possibility that you get the entire quarterly revenues for the second quarter, that implies that maybe the deal would, be done in the next couple of days itself, right?
That's true. So we are expecting closure in the next few days. At least that's the information that I have based on the interactions we have been having so far. So hopefully, most of the quarter's earnings we should be able to consolidate.
Okay, and that one and a half month consolidation that you were expecting earlier in the first quarter itself, that hasn't come by. So how much would the impact of that be in your overall sales for this year?
So last year they did about $12 million, so roughly $1 million per month. I mean, we were expecting that we will have about a 25% growth on that number. So if you take that, about a month's impact would be to the tune of about $1.25 million. So approximately $2 million is what the impact would be, right, for the 1.5 month delay.
Okay, all right. So let's also talk about the other aspects of your business. Quarter 4 was tepid because of some decisions getting delayed, right? So one of them could be this particular deal as well. What is quarter 2 looking like so far? And I'm sorry, we are not into quarter 2 yet, but what is the idea in terms of demand going forward? For quarter 1, you were looking at 67% quarter-on-quarter growth as you were pursuing some larger opportunities. Are they on track now?
So the opportunities are there, but I had alluded that the sluggishness is something that we were witnessing, right, when we did the quarterly earnings call. We have had a few closures which are in the $500,000 mark, but there are also been delays, okay, with some of them. So I'm expecting that the first quarter itself will be. While the growth will be there, in terms of actual revenues, we'll be able to share it better right after we close the quarter and the numbers. Second quarter, we feel that it will be better than the first quarter. I mean, there should be a pickup on the back of some of the closures that we have had, right, which have come later in the first quarter. So the revenue pickup should be there. Overall, for the year, as I said, right, we are probably looking at somewhere between a 16 to 20% kind of a number.
So how much lower will the first quarter be versus the 6 to 7% QOQ target that you had?
We'll be able to confirm that only after we close the numbers, Mangalam. So I can't comment on it right now, but it will be a tad lower than that 6 to 7%.
And what about the exit margins of 25% that you have? Would you maintain that?
No, I mean the exit margins. You mean from the last quarter of the last year?
From the last year to the end of this year.
Yeah. No, first quarter is always impacted by wage hikes and compensation adjustments.
Which is why the entire year is what I'm looking at.
For the entire year, I think we should be good. Okay. I mean, we will probably be closer to the 23% kind of a mark. I don't know whether we'll get to the 25%. It also depends on the revenue uptick itself. As we had said earlier, the investment profile, that is not going to change significantly in terms of what we are spending on the front end and the marketing. So operating leverage will start kicking in as the revenue trajectory picks up. So at this point in time, based on what we see, we should be good for a 23% kind of a margin, right? Close to that kind of a.
Okay, all right. You had also formed a partnership with NVIDIA on the generative AI tech stack. Is there any revenue which we can attribute to this? And is this something which would come by in the first half of this fiscal, or otherwise it could take more time than that?
Yeah, I mean, I don't know whether we can attribute revenue already. I mean, in the first half of the year, potentially there will be opportunities that we will close that will lead to revenue in the second half of the year. There have been 2-3 pilots that we have done along with NVIDIA tech people and architects helping us with their tech stack. There is at least one real opportunity that is looking like it will get closed in the next 1-2 months itself. We will know better, right, as we close some of those conversations. I mean, of course, the key here is to validate and then confirm that the combination of the NVIDIA GPUs and their AI tech stack would be the right decision for the client, given the particular use case. And NVIDIA has also been guiding us what kind of use cases, right, will make sense. So this is something that we are evaluating, right, in those pilots and the POCs that we are executing. So hopefully something in the second half of the year.
Okay, all right. So we'll touch base with you, of course, after Q1 numbers and when there is more clarity on this NVIDIA deal as well. Mr. Sethuraman, thank you so much for joining us today and answering all those questions. That's the word coming in from Latent View Analytics. Time for a break now. Aditya Agrawal, Head Research and Investments at Invest for Edu, will join in with some trading strategies on the other side. Stay tuned.
and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube.
Welcome back. You're watching us here on Halftime Report. And in case you've just joined in, moments ago we broke that 24,000 mark on the Nifty and the 53,000 on the Nifty Bank, and we were at all-time highs. We're still around those levels itself. Understandable profit taking from those levels is what we're seeing right now. Importantly, it is also the series expiry for June. This is for Nifty and all the other F&O stocks which are trading. What's interesting right now is with the market having crossed a record high, there are 3 things I'll be watching out for. One, the Nifty IT index, which has just woken up and begun to contribute ahead of all the big events in July series, starting with the results and starting with IT results itself. Let's see where that goes. IT index is at the high point of trade. Yesterday, we saw signs of life coming by, and Reliance was the top contributor to the Nifty yesterday, has moved well in today's trading session as well, at a record high for that stock too, up around 1% right now. The third thing you'll be watching out for is HDFC Bank. Remember, 2 days ago, we saw a big move on HDFC Bank. Yesterday, HDFC recovered from the lows but ended in the red. And right now as well, it's petering out a little bit. It's flattening. So if that moves in the second half, maybe we see an upper move in this market. If not, then maybe, there is the kind of congestion that we're talking about at key levels for the Nifty itself. 24,000 call, that's the mark that we're looking at. The 24,000 call is extremely active. These are options that expire today. For a premium of almost 50 to 70 rupees, levels upwards of 24,050 could be difficult to sustain from an expiry standpoint. That's what call writers are positioning themselves for. But at the lower levels, there is an equally strong support at around 23,900 itself, because look at the 23,900 put. The premium is all but eroded, just about 20 rupees remaining. So 23,880 to 23,900 would be an important support. The mid-cap IT stocks, along with the large cap IT stocks, we have the mid cap IT stocks too, which have moved from the lows, and currently all of them at the higher end of today's trading range, the intraday charts would tell you that, even if they're about 1.5 to 2% gains, it is a significant recovery that we've seen from the lows.
Yes, we have. And IT, as you pointed out, continues to be in focus for sure. Aditya Agrawala, Head Research and Investments at Invest4Edu, joins us on the show. Aditya, good afternoon. Another record, another day, and this is something we've been saying for the last couple of trading sessions. What are the charts suggesting now? Could we continue to stabilize at these levels or maybe inch higher from here?
Good afternoon. Thanks for having the show. It is that kind of a market wherein we are hitting record highs every trading session. What is interesting to notice is it's the benchmark indices which is hitting a new all-time high along with the Bank Nifty. If you take a look at the broader markets, it's gone into a lull phase now, more of a consolidation that we are seeing there. So it's a handful of stocks, to be honest, which are driving the markets on. So yesterday it was Reliance, day before yesterday it was HDFC Bank. And I think this move by a handful of stocks is likely to continue. Like today we are seeing buying in the IT space. And if TCS and Infosys, both of them start to inch higher along with HDFC Bank, as Mangalam was pointed out in the later half of the trading session, we could be in for another 50-100 point up move, maybe on the Bank Nifty and 50-point move on the Nifty as well. So 24,000 is what I'm eyeing closely on the Nifty. If I have to take a fresh buy on Nifty at current levels, I would definitely not take that at moment because past 4 trading sessions we have seen a massive up move, and there's a bit of I would say overbought levels on intraday charts and maybe a negative divergence building up on intraday charts. So I would just avoid taking fresh long on the Nifty per se. But yes, Bank Nifty is still going strong, and I think if it sustains above 53,000, Bank Nifty can scale levels of 53,200 to about 53,400 on the upside. And I think it's time PSU banks can also look attractive from current levels. So along with private, I think so PSU banks will also look attractive. So more than Nifty, I think so I'll bet on Bank Nifty to outperform from here on, continue that up move that it started this week.
Okay, and what would the individual names be? You said PSU banking names. That is something you would like. Are those names from that particular space?
So I've got a home finance company. Repco Home Finance is looking very interesting to me on the chart setup. It's broken out freshly from a consolidation pattern, so I think it offers a good risk to reward at current levels. As we speak, I think stock is trading at days high. So at current levels, still I would be a buyer in the stock. Look for a target of 620 to about 630 on the upside with a stop loss at 530 on the downside. Second has to be from an IT space because clearly I think it's time IT will make a comeback, and the large cap IT stocks should outperform from here on. So HCL Tech is something which is looking interesting because the TCS and Infosys have already shown some kind of an up move in trade today. I think HCL Tech is something which can move higher from current levels. So 1530 will be my target on HCL Tech, 1410 will be my stop loss, and a fresh long on HCL Tech is recommended at current levels.
All right, thanks a lot for that, and wish you a happy expiry, so to say. But when we started the show, we said that. Sorry, you were saying something? Okay.
No, I just wish the same to you.
It's been a day full of a lot of news, and we've been talking about, we're just halfway through the day, and a lot of news has already played out. But in the next half, we'll have some more playing out. Market regulator SEBI will hold its board meet later today and is likely to discuss new entry criteria for single stock F&O and may bring out regulations for unregistered finfluencers as well. Yash joins in with more details of that one. Yash.
Well, Mangalam, absolutely. The second half promises to be as interesting as the first half for the markets. That's because SEBI's board meets today, and what makes this meeting very interesting are the 3 important agenda points which SEBI will have on its plate to discuss today. The first one would be with respect to delisting regulations when it comes to investment and holding companies. Remember, the draft paper on this one has been out for quite some time. In November is when it was discussed the last time at the board, but SEBI required more information and hence it got delayed. The second important point for discussion would be regulations for finfluencers, essentially financial influencers, and the third one would be to discuss the entry criteria, rather tighten the entry criteria for inclusion and exclusion of stocks into the F&O category, single stock F&O category. To start with the most important one, that is the criteria for single stock F&O category. What SEBI is looking to do, it is looking to make an upward revision in the eligibility criteria for stocks to come into the F&O space. SEBI wants these stocks which are more liquid, have more market market-wide average participation to get included, and stocks which are not liquid to exit out of this particular space. And for this particular thing, SEBI might make an upward revision on three important criteria. First one is the median quarter sigma order size. Second one is the market-wide position limit, and the third one is average daily delivery value of these particular stocks. Now, there's an interesting report from IIFL Securities which suggests that about 18 to 22 stocks could move out of the F&O category, and about 70 to 75 stocks could become eligible to enter the F&O category. The second important point, as I said, delisting of investment and holding companies. SEBI will relook at these delisting norms. Now, the intention here is to ensure that these investment and holding companies get their intrinsic value at the time of delisting for their investors. Finally, for finfluencers, SEBI's intention is to break the revenue model which they have. Any kind of referral fee by market regulated entities to these finfluencers could come under SEBI's regulation, and that could be stopped from the market regulator's side.
Oh, yes. So important updates there, which are expected from the SEBI's meet today. Thank you, Yash, for joining us today, and we'll get back to you as and when there's some finality on some of these points as well. Let's slip into another break. When we come back, we'll talk about individual stocks. PI Industries and Dr. Reddy's will be in focus. Both of them have made an acquisition. We'll discuss that in greater detail. Stay tuned.
First access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher.
Welcome back. You're still tuned into Halftime Report. 117 points higher on the Nifty. It has come off from that 24,000 mark, but really nothing to crib about there. It's a mile off. It's mildly off from the highs of the day. Couple of names, especially from the IT pack, which are at the day's high. HCL Tech, for instance, is at the day's high. Followed by TCS, Infosys and Tech Mahindra. So IT is really surging and contributing to the gains that we've been seeing right now on the Nifty as well. We also have BPCL, which is surging and is at the day's high. Now remember, from the levels that we've seen this 1,000-point surge, BPCL is actually down 8%. So some uptick in that particular name as well, up 1%. Asian Paints is the other name. So some of these consumption names also making a comeback. Asian Paints and HUL, both of them at the day's high. So these are a couple of names that you should keep on your radar from the Nifty pack. But in the broader markets as well, we are seeing a lot of action. For instance, PI Industries, it is doing well in trade today. It offered to acquire the company called Plant Healthcare, and which is a leading provider of novel patent-protected biological products to global market. Now remember, it's an acquisition in the biologic space, something that the company has been talking about, and it is an acquisition that the company has made after 1 year. The total consideration of this acquisition is £32.8 million or 350 crore rupees, and PHC has consolidated revenues of $11 million with margins or gross margins of 60%, but it has made a loss of $4 million. This is as on 31st December 2023. Remember, PI Industries has cash of around 3,900 crore rupees in its books as on FY24, and they have been talking about using this cash for acquisitions itself. Brokerages like this particular acquisition. Jefferies has a buy call with a target of 4,750 rupees on the share. They say acquisition would give annual revenue potential of $75 million. Valuation is attractive based on new product traction as well. This is a growing space in which PI Industries has made an acquisition. Centrum says that this will strengthen PI's biological portfolio. However, this will be EPS decretive because the losses that the company makes. But going forward, they expect it to be profitable as well. So good acquisition, and that is something that the street likes.
Good acquisition, street likes that. The stock up around 2.5%. That's on PI Industries. But another acquisition that is on our radar is Dr. Reddy is set to buy top global nicotine therapy OTC brand. Ekta joins in with more details. That also the street likes, with the stock up around same amount as what PI Industries is.
Well, yes, the big news for Dr. Reddy's is that they will be acquiring Nicotinell and its related brands from Haleon PLC for around £500 million. Now, this is basically a nicotine replacement therapy. The total revenue of the portfolio was around £217 million in CY23, which compares to around £200 million in 2022 and £201 million in CY21. Valuation-wise, it works out to be around 2.3 times revenue and 9.2 times EBITDA. The key markets for them with this acquisition will be UK, Europe, Australia, as well as Japan. Now, for the impact in terms of this particular acquisition, the entire category of nicotine replacement therapy is growing at around 5%, but the acquired brands have roughly 25% market share. So the company, Dr. Reddy's, will get a good foothold in terms of the market and will become the second largest player in key markets. It will also enable Dr. Reddy's to gain access as a global OTC anchor brand, which is basically an over-the-counter anchor brand. Now, the company also expects to generate around 25% EBITDA margin. But the negatives is that the acquired portfolio has been growing at less than mid-single digits. So that's a key concern based on the revenue that I had highlighted earlier. Also, the deal will exhaust around 80% of Dr. Reddy's existing net cash on books, which is a worry according to some analysts. So one will really need to see what the category growth will be going forward, what Dr. Reddy's plan will be within this category, and when other pharmaceutical companies are really diversifying into specialized assets, etc., they're looking at consumer healthcare. So that would be a key question to keep in mind.
Ekta, thank you so much for explaining the details and the contours of the deal. It's all about acquisitions today. But time for a break. On the other side, Manisha Gupta joins in with Vipul Shah, Chairman of Gem and Jewelry Export Promotion Council. Stay tuned for that conversation.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence it will be all about governance and earnings growth.
Welcome back. Well, market has picked up pace yet again. Nifty is above the 24,000 mark, 164 points higher on the Nifty right now, 0.7%. So it is actually at the day's high as we speak, crossing earlier higher levels as well. What has led to this? A lot of these IT names, as we've been pointing out, some of the banking names have also started contributing to the gains. We have something like an IndusInd Bank, which is surging right now. And this R itself in the Nifty pack, we've seen some of these names, the likes of LTI Mindtree, M&M, Kotak Mahindra Bank, contributing to the gains that we are seeing on the Nifty right now. Bank Nifty has also picked up some pace, though it is below the 53,000 mark for now, a mark that the index crossed just a while back. But again, it's that time of the year when all the sectors are having consultation meetings with Finance Ministry ahead of the budget 2024 and making a case of what they want from budget as well. To gain the insights about the gems and jewelry sector's wish list, my colleague Manisha spoke with Gem and Jewelry Export Promotion Council's chairman Vipul Shah and started by asking about industry's expectations. Listen in.
First of all, we are thankful to the Finance Minister as usual every year. We have been always consulted as an industry body, and we had an opportunity to meet them personally and present the industry's issue. And we had put it forward that even they are aware that the industry is struggling right now. We are facing challenging times currently. And if you see the gems and jewelry exports, like almost 50% comes from the diamond segment. And the diamonds have almost dropped last year by almost 28 to 30%. And even in the beginning of the first quarter, we have challenging times and we are down by almost 14 to 15%. So that was our concern. And for the same, we requested the government that we need to make sure that we need to have this sale in special notified zone. So the Section Z, if we can have a safe harbor rule, which we have been always pleading, and I'm sure that this time, looking into the struggling industry, this might be looked into. Then another thing which we asked is for reinstating of diamond impress license. The diamond impress license was it's an import. As an exporter, when you have to export to all your different countries and your buyers, normally they would like you to take some 5% rejections or such. And because of this new beneficiation laws of these mining countries, where certain goods are cut and polished overseas, so certain mix you need it for the jewelry over here. So we have requested on an average of last 3 year exports, 5%, we are 5% to import duty free these polished goods. So that will help for our mix over here and that can help to boost our exports. And that was already prevailing, but when there was zero duty, it was removed. So when it is again, there is a duty for diamonds, we have asked to reinstate. And there is a positive outlook also for the same.
Okay.
Another issue.
Mr. Shah, I was going to ask you about the import duty because that is one thing that has been a long-standing ask. Does that continue to feature into the consultation?
Yes. As far as the duty on the gold and silver is concerned, and that is where we have again, as usual, always pleaded for bringing down the duty to 4%. There are various reasons all the time. We have always been giving it. But government, as you know, they are having their own issues as far as current as far as surging imports. So their concern is always on the current account deficit. And when it comes to reduction on duty on gold, they think twice before doing so. But yes, looking at from the exporters' point of view, our challenging point is that a lot of working capital is being blocked into this gold duty as such. So for that, if that could be relooked, that would really support the export industry. So I'm sure there was a patient listening for the same, and let's hope for and cross our fingers that they will be looking into it and surely try to do something on that lines.
Oh, absolutely. Did lab-grown diamonds in any sense feature within this conversation?
Yes, as far as lab-grown diamonds was concerned, as you are aware, there are two processes which is taking place for lab-grown diamonds. One is the CVD diamonds, that is carbon vaporization deposits, and one is the HPHT process. So that is a high-pressure, high-technology process. So this where India is having an advantage is on the CVD diamonds as such. So what we have requested that to have a separate code for this CVD as well as HPHT. The reason for the same is that we would want to see how much imports are taking place coming from China as far as HPHT is concerned, and since it is being produced in our country. So going ahead, if we have data with us and if this is segregated, that really will help us to monitor and make things more easier for our country and our exports to go coming for this year.
So, Mr. Shah, we've spoken about diamonds and we've spoken about all kinds of diamonds, but what's your sense on platinum as well? Because that is an area where I remember having conversations with you last time where you were wanting some changes as well.
Yes, that's a very good question, Manisha. Actually, if you see it, since the prices of gold has gone up, and we have been noticing that the platinum exports have also risen. So the main thing is we are seeing that these exports are taking place from SEZs, and we want our members to also make sure that that DTA also all the members to start exporting this platinum jewelry where there is an opportunity. But the problem is that the tariff rate is not fixed in platinum, where there is no structure as far as duty drawback is there as far as what we have in gold and silver. So this is the first time which we have put it forward, and the finance minister gave a proper hearing to this. And also I personally feel that very soon we'll have something favorable as far as duty drawback is concerned for platinum. And then again, we will see boosting exports taking place from DTA as well.
All right, that's the budget wish list from the gems and jewelry sector. With that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead. Stay tuned.
GST had certain advantages of avoiding multiplicity of taxes or tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of
what is known as a biofilm on the teeth. And the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's
Record run continues. Nifty mounts 24,000 for the first time ever. IT and healthcare lead the charge while PSUs drag today.
Ultratech Cement picks up 23% in India Cements for 1,885 crores in what the company describes as a financial investment. The deal likely gives a prominent investor an exit and opens up consolidation possibilities.
Dr. Reddy's is set to buy a top global nicotine therapy OTC brand from Haleon for £500 million. The brand, though not in a high-growth segment, is seen as a valuable buy. The stock gains on this news.
And the surprise in the latest 11,340 crores Spectrum auction is the higher than expected 3,500 crores spends by Vodafone Idea. Bharti bought Spectrum worth 6,900 crores while Jio spent about 1,000 crores.
Market regulator SEBI is expected to consider norms for holdcos, criteria for stocks inclusion in F&O and bringing fin influencers under the regulatory ambit at its board meet. That's today. Hello and welcome. You've tuned into Business Lunch. I'm Nisha. With me, as always, is Sonia. So, Sonia, what an eventful day it has been in the market. And 24,000 levels for Nifty 50. It mounts for the very first time. But, of course, the streak of reaching the record levels and that momentum really continues. A shade below that 24,000 level at the particular moment on Nifty 50. It's trading at 23,950 odd levels with a gain of about 80 points. When we talk about Sensex, that's gaining about 270 odd points. There was a dip in the market, but then there's a strong recovery from that very point. So therefore, the momentum is built. But Bank Nifty, that is on the flat line with a negative bias, and the mid-cap universe too is on the flat line. Advanced decline ratio is in favor of the declines, and on top are the two Aditya Birla Group companies, Ultratech as well as Grasim, in terms of percentage gainers today, Sonia. And lots of news development in cement space also is keeping the market excited today.
Absolutely. I mean, look at the market, right? It's taken 23 sessions for the Nifty to climb from 23,000 to 24,000. Such has been the kind of, growth that we've seen in the market. It is an amazing dream run that this market has seen in the last 6 to 12 months. No two ways about that. Climbed every wall of worry. Today, the cash market volumes are quite high. In fact, almost 99,000 crores in terms of just cash market volumes. And it's just 1 p.m. We have the rest of the day to go. So very good looking screen. The Bank Nifty is flat today though, but it has seen major participation in the last many days and weeks. But let's begin Business Lunch with the big news of the day. In a confirmed news break, in further consolidation in the cement sector, Ultratech Cement has picked up 23% stake in India Cements. Prashant is here to tell us more about that. Prashant, over to you.
You know, it's a big deal, and this happened this morning in the cement space. We at CNBC-TV18 were the first to report that Ultratech has bought over 20% stake in India Cements via the block deal which happened in the block deal window between 8:45 and 9 o'clock. Now, Ultratech in a statement has confirmed this and more. Let me actually get you the details of what this actually all means. So, cement major Ultratech, the largest cement company in the country with about a 25% overall market share, is buying into South India-based India Cements. Ultratech has put just under 1,900 crore rupees to work to pick up 23% equity stake in India Cements. Remember, there are two large shareholders. One is the Radhakrishnan Damani and a sort of family which owns a little over 20%. And then there is, of course, the promoters who own around 28% in the company. Now, this works out, this just under 1,900 crore investment works out to 267 rupees per share, which is slightly higher than what the stock closed at yesterday. Remember, yesterday we had a 15% rally in the India Cement stock. So the deal this morning happened at a slightly higher price as opposed to the last closing price. Some more details in terms of the companies themselves. Now, India Cements has an overall cement capacity of 14.45 million tons per annum, and it is majorly present in the southern markets, South India markets. What about valuations of the deal? So, at 267 rupees per share, UltraTech equity investment is valued at $85 per ton on an enterprise value per ton basis. This indeed is lower than what it would cost if you were to actually go ahead and put a new cement plant. That's essentially lower than the replacement cost. Now, provided that this 23% stake in India Cements is just a stepping stone into future further consolidation of UltraTech's holding in India Cements, what does this do to UltraTech's own capacity? Now, currently UltraTech has a capacity of 20.5 million tons capacity in southern India. This is, of course, excluding Kesoram Industries and the capacity there. With investments in India Cement and Kesoram combined, UltraTech will more than double its capacity in South India to 45 million tons per annum. In terms of market share, this would translate a 22% regional market share for UltraTech as compared to the 10% before these transactions. Remember that the two top players, essentially Ambuja and UltraTech, between them in the southern markets are expected to control 35% of the total capacity there. Now, just to look ahead, India Cements, apart from the cement capacity which I already outlined, also has large land bank reserves, which indicates optionality, right? Growth optionality if they want to do expansion, etc. India Cements, by the way, also has renewable energy and shipping assets in South India, all of which a player like UltraTech can put to good use. So there you have it. UltraTech, the largest cement player in the country, adding another important asset to its kitty and really moving towards its stated goal of reaching a long-term capacity goal of 200 million tons per annum. Back to you.
All right. Thanks so much, Prashant, for those details, and many, many congratulations on that big news break. And it also signals that the consolidation in the cement sector is really intensifying. And there are two big players, Aditya Birla Group's UltraTech and Adani, which recently entered this particular space. Now, Manglam is also joining us to give us a detailed outlook on the cement consolidation, especially in the South India. Tell us, Manglam.
Well, you spoke about, the consolidation in the cement space of two large groups. What's interesting is that it's intensified more so in the southern part of the country itself, because it's just 2 weeks ago that Adani Group bought Penna Cement for a little over 10,400 crores. And it's also the second time this year that UltraTech is dealing with India Cements, because in April, UltraTech bought the grinding unit of 1.1 million tons capacity in Maharashtra from India Cement for about 315 odd crores. Now, in terms of capacity, how do they fare up? UltraTech has about 150 million tons of capacity, whereas India Cements has just about a tenth of that. But it's in the southern part where, India Cements dominance could give a strategic entry for UltraTech Cement. Why do I say that? Because UltraTech Cement currently has around 27 million tons in terms of capacity out there. Add to that Kesoram of close to 10.7 million tons. India Cement, the investment in that puts the foot in the door for another 13 million tons. Whereas ACC Ambuja, which has close to around 9 million tons, with Penna Cement expanding, goes to 25 million tons as well, 23 million tons. So that is something we'll keep an eye out on. The three big things we need to watch out for. One is, how does UltraTech derive value out of this? Because synergies, India Cement has an EBITDA per ton of 172, whereas UltraTech has close to 1100. Secondly, the valuation gap between UltraTech and the others. The deals have been done at around $85 to $88 per ton on an EV basis, whereas UltraTech itself trades at around 238. So for the street to actually ascribe that re-rating to India Cements, there has to be more than just a financial investment. So that brings us to what happens from here. How does UltraTech drive synergies from this investment? Secondly, what happens to India Cements' promoter family stake? And thirdly, what happens to the other south-based players? Because in all the cement stocks which are buzzing around, one which is underperforming is Ramco Cements. That too has around 15 to 18 million tons of capacity out there, but with two big deals happening in the southern part of the country in just the last 2 weeks. Can its dominance be challenged is something that the street is looking at.
Okay, we did speak to a whole host of experts to understand their view on the cement sector, the large consolidation that has been taking place over the last many weeks and months, and what this deal means particularly for UltraTech and India Cements. Listen in to what they had to say.
On cement, we generally are positive on the broader infra space, including cement. Obviously, it plays into both the housing and the manufacturing sector. Sequentially, there could be a bit of softness in there because of the construction activity slowing down and the monsoons and all. But I think in general, we still like the sector. Without getting into single names in here, we still like the largest cement player within our coverage in terms of our buy rating. We have a sort of more neutral rating on the rest of the names. So we do think that with the consolidation going on, the bigger players should benefit, and we are constructive on the stock in particular. But as I said, within the broader sort of building materials and infra space, that's where our pecking order lies.
With this acquisition, UltraTech will be a dominant player in South because it has already acquired Keshoram earlier. India Cement valuation will be around $60-70 USD ton. So which is reasonable compared to the replacement cost. And over a period of time, once UltraTech goes for open offer and acquire the remaining shares, so it will be a majority shareholder in the company. And after that, UltraTech will do all the necessary things to utilize the capacity of India Cement, because India Cement is currently not underutilized because it will not be able to utilize its capacity fully. So I believe that over a period of time, it is a good over a period of time. This synergy will play out with UltraTech acquiring India Cement.
It's a great opportunity for the minority shareholders of India Cement to lock in an exit till the time they get any kind of clarity, because I don't feel that the deal value would be any better even if they were to go ahead and acquire the remaining stake and come out with an open offer and all that. So I think this is a good time for minority shareholders to actually exit. Given the deal valuation and given the quality of assets, I don't expect UltraTech to pay any penny more for the remaining stake also. And so I think, even if they were to launch an open offer tomorrow, the stock will trade at a discount to the run-up to that open offer.
All right, so those were all the big comments coming in on that big play by UltraTech in India Cements. That's a big story for the day, but we'll slip into a short breather on Business Lunch. More news and updates on the other side. Don't go anywhere.
Especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more, because also availability of toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So,
you're watching Business Lunch on CNBC TV18. Good going for the market, but let's talk about Tata Motors that held its 79th annual general meeting yesterday. In conversation with CNBC TV18 Shailesh Chandra, the managing director of the passenger vehicle and electric mobility vertical spoke about the comprehensive game plan for EVs going ahead and his expectations from the passenger vehicle segment. Listen in.
I think the competition is going to be really good for the EV industry because there will be a lot of buzz in the market about electric vehicles. There will be combined marketing spend. We have expanded our reach to multiple places, not only in terms of our sales outlet but also service. This year we are going to launch Curve EV as well as Harrier EV, and subsequently you'll have Sierra EV and many other products which are going to come. So I think we have a very comprehensive plan. Financial year 22 and 23 were very strong growth, double-digit growth for the industry. We saw moderation in the financial year FY24 where it came down to roughly 8.5%. Typically the secular growth rate for PV industry is in between 6 to 7%. We believe that this year, because of the last 3 years of very strong growth, there will be a moderation this year. This can be therefore anywhere between 3 to 5% growth rate. That's how I see PV industry. It will be more skewed towards the H2. H1 will be slightly more challenging as compared to H2. Post monsoon things should be better and post the festive season. So that's how I see the industry.
And there's more from the company. Well, Girish Wagh, the executive director of Tata Motors, also spoke about the capex plans and industry growth and the expectations from the union budget. Listen in.
In Tata Motors commercial vehicle business, we have given a guidance of around 2 to 4% of the revenue will be our capital expenditure. Over the years, the amount that we have been spending on advanced technologies addressing the mega trends of autonomous, connected, electrification, software, digital has been consistently increasing. And I think in fact this year more than 40% of our capital expenditure will actually go on these technologies and developing our products and services in alignment with these trends. As far as commercial vehicles is concerned, the government's push on the infrastructure has been very, very beneficial. So we expect the government to continue that, and that's the stated intent also. Secondly, I think the government has also been very supportive on electrification with both demand and supply side incentives, whether it is FAME, PLI, GST. So we expect those also to continue.
And in some important corporate developments, S.N. Subramanian will take over the role of the chairman for both L&T Group's listed companies, LTI Mindtree and L&T Tech Services, after A.M. Naik stepped down. Speaking to CNBC-TV18, the newly appointed chairman said he sees positive signs from the companies this quarter and they will continue to grow with the right kind of leadership.
There are green shoots, there are positive signals. I'm sure it will reflect on the results. That's the way one should see it. The way our IT companies are doing, 10 to 12% growth. One of the best performing mid-tier companies, now they're majors also. As we just mentioned, the 5th largest in market cap and 6th largest by revenue, and we continue to grow. Right. Both the companies have the right leadership and the right kind of atmosphere to grow. They're well recognized by the clients. We started some new business like L&T Green and L&T Semiconductors, so spending a lot of time on that. We are more in the design aspect of it. If the design does well, tomorrow we may look at contract manufacturing, but we are not going to invest in a foundry or an OSAT or such as a facility. That is not in the cards. So we are more on the intellectual part of it, that is the architecture, the concept, the design, And tomorrow, if some client wants us to assist them in contract manufacturing, we'll look at it seriously. But very clearly, we're not entering into any investment in foundries or OSAT or anything like that. No.
All right, let's shift focus to the regulation in the pharma sector. Indian drug makers came under global scrutiny after a number of manufacturers were caught selling spurious or substandard drugs. In fact, my colleague Ekta Batra discussed the issue with Rajiv Raghuvanshi, the Drug Controller General of India, and began by asking him about the action that the regulator was taking to improve the manufacturing practices in the country. Take a listen.
So we are doing these risk-based inspections. A lot of things are coming out, and they are being addressed as per the need of a regulator. And we see lots of companies are actually doing improvement, and many of them are in process of changing. But we see the needle is moving on the ground. So that's a very positive sign.
Okay. When was the last complaint that you probably got from an international manufacturer when it came to Indian drugs manufactured?
So the major one was sometime last year, July. And since then, it's a regular process. WHO keeps on releasing these international complaints. But good part is that since July, nothing major has come. Couple of them which would have come are there minor regular ones. So we are very happy about it.
Okay. The issue with the cough syrups, the pediatric cough syrups, do you think that it was a global supply chain issue, or do you think it was limited to India?
Well, India is part of the global supply chain. So it was part of global supply chain, of course.
But was it a lack on our manufacturing?
I won't say lack. It's a question of some porous supply chain, and the specifically that propylene glycol supply. So there were some issues on supply of propylene glycol. That has been plugged, and that's the reason why we are not getting issues.
Okay, all right. So that issue has been plugged. You spoke about risk-based inspections. How many inspections have you all probably conducted in the past year odd, and what was the percentage that came out as an issue?
So we would have done about 600 of them, both between the testing labs and the manufacturing units. And good number of them had issues, and some of them had serious issues, some of them had minor issues. So depending on the extent of non-compliance, because we have a framework of critical, major, minor issues. So depending on that, we take our action.
Okay, let's take a short commercial break for now. More news and updates to come up on the other side. Stay tuned.
For now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like
Welcome back. You're watching Business Lunch. A quick look at the markets then, and the momentum really continues. 23,970 levels when we talk about Nifty 50, over 100 points gain at the moment. And mid-cap universe, that is also showing a little more participation. So keep an eye out on markets. Let's take you through some of the important national development for today. President Draupadi Murmu today addressed both the houses of parliament, addressing the parliament for the first time since the NDA returned to power for a record third time. Now, President Murmu unveiled the priorities of Modi government 3.0, and she said that the upcoming budget will introduce new reforms. She also reiterated that the government is working towards making India the third largest economy in the world.
All right, let's now shift focus to the T20 World Cup. South Africa made quick work of Afghanistan in the first semi-final of the ongoing T20 World Cup to qualify for their first ever T20 World Cup final. Batting first, the Afghans were bowled out by the South African bowlers for only 56 runs in 12 overs. Chasing, the South Africans only lost 1 wicket and comfortably chased down 60 runs to qualify for the final.
All right, so that was about Africa. But remember that the real action for us is going to be tonight, Sonia. The second finalist for the World Cup will be decided when Team India face off against England at 8 p.m. later tonight. And fans will be hoping for a return to form, and especially from our key players Virat Kohli and Hardik Pandya, while also hoping for Rohit Sharma and Jasprit Bumrah's stellar form to really continue as they face an England side who have won all 5 of their Super 8 matches. So today is going to be an important, day for cricket fans in India. India is in good form. Rohit Sharma, spectacular, master blaster shots in the last one against Australia was something of a spectacle, and I hope that he replays that today.
Okay, let's see. Big day today for all the cricket enthusiasts, but that's all the time we have on Business Lunch. Mid-Cap Radar comes up next.
Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies
who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, you know, just a while back, we were talking about record highs, Nifty above the 24,000 mark. Now there's a wee bit of profit taking from those levels, and it is led by Nifty Bank, which is in the red right now. 8 points lower there. Nifty also off around 80 points from the highs, but volatility again because it's the expiry day.
It's expiry day. Along with that, just keep in mind, you know, there are some NSE index rebalancings. Not too many major flows, but that also is taking an impact as far as the French line indices are concerned. But it's an action-packed show. Let's start off with the top headlines. Stocks continue to trade higher, with Nifty hitting 24,000 in its second fastest 1,000-point journey. Nifty Bank also hits 53,000 level for the first time. IT and healthcare lead the gains, while realty and PSUs drag. Mid-caps relatively underperformed.
India Cements gains over 9% after Ultratech picks up 23% stake in the company for 1,855 crore rupees. The deal likely gives a prominent investor an exit and opens up consolidation possibilities.
Route Mobile rallies in trade after Microsoft and Proximus Group sign a 5-year partnership for digital communication and cloud services.
Whirlpool zooms on the back of reports that German engineering group Bosch is considering a bid to acquire the company.
CSB Bank also gains after 1.7 crore shares worth 595 crore rupees change hands in a block deal window. Archean Chemicals slumps after 24.4 lakh shares or 2% equity worth 162 crore rupees change hands in a single block deal.
Okay, all right. Let's talk about the markets in greater detail. 69 points higher on the Nifty, but it's 100 point off the lows of the highs of the day today. We did touch the 24,000 mark and we went above that as well, but now it's retreating from those levels. It's led by Bank Nifty, as I was pointing out earlier, 20 points lower on the Bank Nifty. Nifty IT continues to do well, so it's a lot about large caps in today's market actually. The advanced decline ratio is in favor of the declines right now. Mid caps are underperforming as well. So it's going to be a wait and watch situation today.
Wait and watch situation, especially towards the last hour, expiry related moves. It'll be important to see, how the rollovers also pan out. But this is our special segment in the show, Mid Cap Movers. Hormaz is at the wall to take us to the mid caps that are moving around in the session.
Well, regardless of what happens in the last 2 hours of this trading session, it's been a memorable expiry for the Nifty, almost 1,400 points on the index. And the broader market also seems to have done well for itself, but has underperformed when compared to the index. We start off with some of the movers in the broader markets. And one sector that has dominated all market talk today has been cement. And can't not talk about that now. After this Ultratech investment in India Cements, all other cement companies also are surging in today's session, although most of them are off the highs of the day. Orient Cement, Prism Johnson, JK Lakshmi at one point was up almost 7%, so it's now down to 4% off the highs of the day. The sell-off continues in fertilizer stocks. They saw a bit of a rebound yesterday, but then the pressure of the selling has resumed today as well all of them now at the lowest point of the day. Fact, Deepak Fertilizers, Chambal, GNFC, all of them seeing losses of anywhere between 3 to 5% in today's session. Multiple companies won orders last evening and they are also witnessing some bit of impact on that. KEC International at the lows of the day now, but it's still up 4%. It was up almost 7 to 8% at one point. Ramki Infra is up after that order win of around 130 crores, 3% higher there. Supreme Industries also winning an order. Some stocks doing well on the back of strong volumes in today's session, and Whirlpool, as you just mentioned in the highlights, 9% higher on very strong volumes at a 52-week high there. Route Mobile continues to grow from strength to strength, 13% higher in today's session as well. CEAT is having a good day, as is Suven Pharma with 6.5%. And lastly, some of the stocks that are bucking the trend other than fertilizers in today's session, Indian Hotels, all the small finance banks are under a bit of pressure. Equitas, AU Small Finance, both of them seeing losses of up to 5%. Arkin Chemicals on the back of the block deal, and Amara Raja also witnessing a bit of profit booking today. Back to you.
Okay, thank you so much, Ormas, for joining us as always. And some of them, they've been seeing stellar moves, so some of that profit booking was par for the course. Let's welcome Sameet Chavan of Angel One for a technical check on the market. Sameet, good afternoon. Well, what a stellar rally it has been on the Nifty, 24,000 and watching those levels. But we have come off from the highs of the day. Bank Nifty, after going above that 53,000 mark, has also seen a substantial downtick from those levels. What are the charts suggesting now? Would we see volatility in the second half now?
Good afternoon. Yes, we might see some, expiry factor kicking in the, last 1.5 hours of trade. Nifty has reached its next milestone of 24,000, and if you, data-wise, if you see, FIS started the series, at 13% long-short ratio in index futures, which has shot up to 67%, 70, 75%. It's considered as a, overbought territory. So we might see some profit booking in the first half at least. So from here on, we may not see, the smooth ride that we have been seeing since last many months now. There has been a lot of, sectoral rotation that we have witnessed. Banking, which has been sulking a bit, it has found its mojo back in last couple of weeks, which, clearly provided the much awaited impetus for the Nifty to move towards 24,000. It has been consolidating mid caps. If you see, they have been sulking a bit since last 3-4 days. IT now, IT space seems that it is likely to come out of its recent condition zone. So there is a lot of sectoral rotation that we are likely to witness. But yes, stock specific, theme specific, you may see some profit booking also, at least in the first half of the coming season.
Good afternoon, Sameet. Which are the top individual picks for the day? What is it that you're liking?
See, as I just alluded to, IT, the overall IT space is looking good at least for the next couple of weeks. So TCS, the IT giant, certainly looks quite good. If you look at the daily chart structure, we can see a breakout happening from inverse head and shoulder pattern. Stock has been, struggling to surpass 3880, 3890 kind of zone, and today it has managed to surpass this level. So from here on, TCS can head towards 4,000 or beyond. So at least with a short-term view, one can buy at current levels, stop around 3840, and the immediate target would be around 4,000, 4,020 for TCS. And the other call would be, short call on Indian Hotel. In fact, it has already corrected quite a bit. So in case Indian Hotels gives a bounce back towards say 624, 626, one can go short, keeping a stop around 638, and we expect the stock sliding below 600. 590 is the next level to watch out for as far as the Indian rupee is concerned.
Okay, all right. Thank you so much, Sameet, for joining us with those technical picks. We'll slip into a short break now. Up next, we'll connect with Nikhil Bhandari of Goldman Sachs. We'll put focus on energy sector. The recent report says they expect peak oil demand, which is still a decade away. We'll have that interesting conversation after this short break. Stay tuned.
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now NVIDIA is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast NVIDIA is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy and well implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer.
Welcome back. You're still tuned into Midcap Radar. Goldman Sachs in a recent report stated that peak oil demand is still a decade away. They've also raised 2030 demand forecast on oil. They add recent stagnation in EV sales raises the odds of the EV slow adoption scenario. Nikhil Bhandari, head of ASEAN Equity Research and co-head of APAC Natural Resources and Clean Energy Research, Goldman Sachs is joining us now in the studios to take a few questions on the energy outlook and a lot more. Nikhil, good afternoon. Thank you so much for joining us in the studio. And your trip from Singapore, I hope it's going very well in India. Tell us how it's been, India versus the other markets, and especially on oil demand. We talk about a lot of investments happening in EVs, be it renewables. Do you think oil demand is still here to stay?
Yes, so thank you for having me back on the show, and it's good to be in person here in the studio. So we have concluded that we're about a decade away from the peak oil demand, and more like a plateau thereafter rather than a decline. This is more bullish than some other forecasters who have predicted peak oil demand before 2030 globally. In India's context, we believe oil demand will continue to grow through 2040. Okay. More importantly, it'll be the strongest driver from geography perspective among the large economies in terms of the growth contribution to global oil demand. This is despite we are still quite bullish on electrification and EVs. Globally, we sold 11% of new car sales as EVs last year. We believe this number will triple by 2030. In India as well, we're expecting a rapid electrification of two-wheelers and a gradual electrification of cars as well. The driver why peak oil demand is still away is because of the income growth. When we analyze the long-term pattern of developed market oil consumption relative to income growth, we find at a certain level of GDP per capita, there is a faster acceleration in the oil demand growth. So let me explain. So normally it's assumed that every dollar increase in GDP is a fixed level of oil demand increase, but we think it's an S curve. That there is an S curve when growth hits a certain level. For example, when we are $2,000 to $3,000 GDP per capita, we are maximizing consumption of basic staple protein, basic metals. We get more wealthier, we need more white goods, appliances, air conditioner. These are made of petrochemicals, which are made of oil. And then we go more wealthier, we need more car fleet and also flying demand. So again, India in particular will be in that acceleration phase of oil demand growth over the coming decades. So that should be accounted for in the oil demand outlook.
So you're not really seeing too much of a risk from rising electrification and also the rising mix of clean and renewable energy in the mix. Give us a sense of how you see refining category, how do you see refining margins play out for the entire spectrum?
Sure. So we are seeing limited capacity investments in the new refineries around the world. We have in fact closed 4% of the global refining capacity since pandemic started, while oil demand has returned to 1% to 2% above the pre-COVID level. So there is no spare capacity left in the system, and the newer builds coming in the next 3 years is still quite limited, while in a normal economic growth, we think oil demand will continue to grow at 1 million or plus barrel per day. So we think the refining system will remain stretched and tight in the medium term, compared to upstream oil, where we think it's going to be more range-bound environment of $70 to $90 per barrel, because OPEC has spare capacity, which they can release if demand surprises to the upside. But in refining, we don't have a cap here because the spare capacity is already quite limited.
So does it mean, I know you won't talk individual names, but in terms of themes, does it mean downstream will do better, especially standalone refiners, considering we don't have excess capacity coming in for a while now?
Yes, absolutely. So we are more bullish on refining within the oil supply chain, followed by oil, followed by gas, and followed by petrochemicals. So that's our pecking order in the oil supply chain. In the case of refining, clearly the spare capacity is the least. So indeed, we are more bullish. In the case of oil, we are more selective, and the keywords are free cash flow, access to growth projects, and access to and companies who already have very high profitable project. I think that'll be the key consideration to pick the stocks. But as a theme, we think refining is more tighter as a more broad-based theme.
So you've looked at oil and gas names, both India as well as across the globe. So how does valuation pictures compare? So which ones look more favorable to you, and how do Indian companies compare versus their global peers?
Correct. So as I mentioned, the keywords, in those three keywords, we find more attractive opportunities in the upstream oil space outside India compared to India. That's where our top picks are more housed in. But as we look at our refining sector, we do think and anybody who's a merchant refiner who's selling more refined products at the international price will benefit from this theme. As far as valuations are concerned, the valuations do look little expensive on a cash generation basis on the Indian upstream and downstream energy names. However, that valuation constraint is more limited in the other area we cover, which we discussed last time, is, for example, the clean energy space, the power grid. That's a more unique opportunity in India, more longer multi-decade growth. That's where valuations will probably matter less, given the gestation of growth is even more longer term than the oil demand.
So in that case, you're saying that still some of the oil and gas names are trading at valuations which are maybe higher than the global peers. They are also making a lot of capex plans, be in renewables, be it in clean energy. I'm just speaking about the oil and gas space and the players there. And free cash flow is one of the reasons why you would like or dislike some of those names. Is this the natural progression from here on? Would that be something which would make you positive on that space?
I think where the investments are being made is important. We believe the more unique area of clean energy investments in India is round-the-clock renewables, because India's got two advantages. They've got a fully integrated grid, and they've got more sunshine than several other economies. So it makes a case where you can set up virtually different renewable facilities of solar, wind, storage in different locations connected to the one integrated grid. In that context, the bigger opportunity is in manufacturing of the upstream supply chain, which is the bottleneck. We are currently importing a lot of solar module and solar supply chain product, and we are also importing the battery product. So this is a core area where a lot more investments are needed in India, and it fits well in the broader India's stronger economics argument of renewable, round-the-clock renewable story. The bottleneck needs to be solved, which is the clean energy supply chain. So as long as the investments go in that direction, I think a growth multiple can be applied in that case. But if the investments go in an area where economics are not as strong for India in a unique way, probably the free cash flow drag will become more top of mind for investors.
What would those areas be where you do not see investments turning into profitable avenues?
I think it's still a little early stage in terms of making a profitable economic case for hydrogen at this point. For example, we don't have an economic argument of hydrogen in most parts of the world today. Green hydrogen I'm talking about. Right. So again, that's an area which is still needs to be tested whether economics can be achieved. So that's one example, for example, where investments.
Two quick follow-up questions. One is, you spoke about the opportunity of renewable energy. How would you play that theme? Which are the sectors? What kind of companies will you look at? And secondly, when you're talking about renewable, there is always the problem of evening power peak, which the grid is not being able to meet. So how do you see a solution to that?
Sure. So firstly, we need the biggest opportunities are where the bottlenecks are, right? That's where investors then make returns. The immediate bottleneck we've been talking about for the past year is the power generation itself. Given we've added a lot of renewable capacities in the last 7 to 8 years without storage, and India's electricity demand has been growing at a very rapid pace. So power generation is the immediate bottleneck, followed by to accommodate more round-the-clock renewable to solve for India's growing electricity needs, we need to overbuild the grid because when you have 100 megawatt coal energy, you have one cable connecting it to the grid. When you have 3 different facilities to make same 100 megawatt round-the-clock energy, solar, wind, storage, you need to draw 3 cables connecting to the grid. So we need to overbuild the grid, and that is going to be an important opportunity in the medium term, as we last time discussed. And third is the supply chain itself that we need to build, solar and batteries, to make so much round-the-clock renewable. So it's there's immense amount of opportunities in India clean energy space across generation, grid, and the supply chain for clean products.
There have been a lot of talks, investments in storage especially, because we do have round-the-clock sunshine, but not round-the-clock storage available right now. But thank you so much, Nikhil, for coming down and speaking to about different themes, what's happening in the clean energy space and otherwise in the energy space as well. It was a pleasure speaking with you today.
Thank you so much for having me.
Thank you so much.
Thank you.
Okay, all right. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. So stay tuned for that.
Distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible.
Welcome back to Midcap Radar. This is our special segment, Midcap Spotlight. Mangalam will focus on Jubilant Foodworks. Mangalam, a few upgrades coming in. Our brokerage is turning positive on this name after quite a few years of some underperformance seen.
Well, that's what the sense one gets with regards to the brokerage activity around Jubilant Foodworks, and the price tells you that as well. From the lows, we have seen a bit of a rally in the stock in just the last couple of months as well, notwithstanding today's move. So today's note coming in from HDFC Securities says that after being negative for about 2 years on the stock, they've upgraded the stock to add from reduce. They believe that the company has done significant work in improving the dine-in experience. Remember the introduction of value for money lunch feast that they've had at around 99 rupees. The management had alluded about that as well, would reduce or help stemming the reduction in sales that we're seeing in dine-in. And they're also looking at lower capex per store by about 15%. So that should aid their metrics going forward as well. And it was only earlier this month where they reached the 2,000 store mark on Domino's. They've upgraded the stock by also adding 40 rupees per share as a value for DP Eurasia, which the management has alluded will be PAT positive already. So as a result of which, their target now stands at around 685 rupees. And this is the second brokerage in the last couple of weeks itself. Earlier we had Macquarie, which removed the company from its marquee sell list, citing potential upside to same-store sales growth going forward. And earlier this month, when we spoke with the management, they did allude to things improving on the ground as well. They said that they see momentum in LFL growth in the first quarter, which will continue. The 99 rupee offering for dine-in should arrest the LFL sales decline. They also see like-for-like growth in FY25 to be positive throughout the year, and dine-in decline will be arrested in this year itself. All of this with margins bottoming out and the DP Eurasia business being PAT accretive is something that the company did speak about, along with possibly faster growth than competition in this year, indicating market share expansion. And then you have the optionality of Popeyes as well. That would give you another 100 crore revenue in FY25. So all these factors coming together, maybe with a spate of underperformance in this stock, the street is now looking to bite into this pizza.
Okay, bite into the pizza. We'll see whether they do that or not. But thank you so much, Mangalam, for joining us. By the way, the mid-cap index also is lower by 40 points. So the advanced decline ratio is in favor of the declines. And that particular line is favoring more towards declines right now. So we just thought we'll update you on that one because it is at the day's low right now. But a lot of broader market movers, Whirlpool is one of them, on the back of reports that German engineering group Bosch is considering a bid to acquire the company. Upasna is joining us with the details here. Upasna.
Thanks so much for that. Well, according to reports, Bosch is weighing a bid for Whirlpool Corp according to the reports, and this move would boost Bosch's market position in the household appliance market at a time when competition with Asian rivals is heating up according to Reuters. In May 2024, Bosch CEO, that is Stephen Harting, indicated that company was looking at few bigger acquisition, indicating either entering into a new business or a global deal. Whirlpool in recent years has been aiming to grow its customer base by expanding in smaller appliances and other kitchen gadgets as it grapples with a slowdown in the growth. Well, it is also important to note that Whirlpool Corp, that is the US-based parent of Whirlpool India, has sold 24% stake in the Indian entity earlier this year, that is around February 2024. Now, coming to Whirlpool India, Kotak has given a sell recommendation on Whirlpool India with a target price of 1350. It says that the Whirlpool's improving market share, product mix and a strong peak season, particularly for mass and economic refrigerators, bodes well for the company's outlook, that is for financial year 2025.
Thanks so much for that, Upasna. Whirlpool doing quite well in the session today. Let's now shift our focus to another stock that's doing very well in session, PB Fintech or Policy Bazaar. The stock surges after Citi has issued a buy call on the stock and has raised the target price. Yash is here with more details.
Well, Vivek, of course, in a weak market, PB Fintech is the one which is gaining in trade. Quite interesting note from Citi on PB Fintech. The rating that they have on the stock is buy, and interestingly what they've done is that they've raised the target price on the stock to 1600 rupees from the previous 1435 rupees per share. There are certain qualitative comments which Citi has put in its note. They say that the business momentum strength and successful execution of the digital strategy by the company warrants a re-rating. They've raised the EPS multiple on the stock to 20 times FY32 estimates versus 18 times. And they say that PB Fintech is the preferred alternate stock or investment to various insurance companies. Citi, interestingly, has opened a 90-day positive catalyst watch on the stock. According to them, the first quarter is likely to reflect sustained growth in fresh retail and term insurance premiums. Second one, continued improvement in the point of sale person, sales, continued improvement in the motor portfolio when it comes to the premium growth. The fourth important trigger is sustained improvement in the overall EBITDA margins of the company. And finally, the fifth one is with respect to Paisabazaar and the revival that they expect in the disbursements on the Paisabazaar side after a weak Q4. There are two risks to this upside trajectory which they mentioned in the report as well. The first one is a slowdown in the underlying premiums for PB Fintech, and the second one is higher than expected margin or the brand spends which the company is expected to make.
Okay, all right, 3.5% higher on PB Fintech. Thank you so much, Yash, for joining us with all these details. Nifty also has picked up a little pace, but that will continue to be the focus today. But that's all we have on Midcap Radar today. When we return, we'll put focus on big Ultratech India Cements deals. Stay tuned for that discussion.
For customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Hello and welcome to this special show. A very large deal has gone through this morning in the cement space. This morning, we at CNBC-TV18 were the first to report that Ultratech has bought over 20% in India Cements via a block deal. Ultratech, in a statement, has confirmed this and more. We're going to discuss this from all possible angles. We will have our colleagues. Mangalam, of course, is right here. Mangalam is going to sort of present the show with me. And we'll have Hormuz, who will also be with us in just a bit from now to talk about potential other M&A candidates out there in the cement space. We'll also have some experts joining in. Pankaj Tibrewal is founder of Ikagai and, of course, needs no introduction, veteran money manager. We have Nirmal Bang's cement analyst Jyoti Gupta, as well as Rajesh Ravi of HDFC Securities, who's also with us. Pankaj, Rajesh, Jyoti, great to have all of you with us here as well. You know, what I'm going to do is I'm going to just take 90 seconds to tell you about the deal itself, because it happened today. It's a big deal, and sort of jump straight into what has happened. So UltraTech, the largest cement company in the country, has bought into India Cements. They've bought over 20%, 23% to be precise, via a block deal. UltraTech, in a statement, of course, has confirmed this. They've spent a little over $200 million towards this, making this purchase. You know, as I said, this went through the block window, so to speak. If you can sort of quickly tell you about the capacities which are involved. India Cements has a capacity of about, has a total capacity of about 14.5 million tons, which potentially now, with UltraTech sort of putting the foot in the door with a 23% stake, gets access to. Of course, it's a non-controlling stake at this point in time. We don't have confirmation whether there perhaps is going to be an open offer at some stage, whether they will want to increase their stake. In terms of valuations, in terms of what they've paid, it works out to a EV per ton of about $85. And, you know, we always compare it to whether the deal is done above or below replacement cost, which is how much will it take if you go out and build a new cement plant. I mean, you know, this looks like it's a decent deal. It's below replacement costs. Now, you know, this 23% stake that UltraTech has taken into India Cements looks like a stepping stone into future further consolidation of UltraTech's holdings. What does it do to UltraTech's own capacity? Currently, UltraTech has a capacity of 20.5 million tons in southern India. This is excluding Kesoram Industries. Now, with India Cements and Kesoram, it will more than double its capacity in the southern part of the country. Total will be about 45 million tons per annum. This indicates a 22% market share in South India for UltraTech. Earlier, market share was about 10%. Top two players, which is Ambuja and UltraTech, post this deal will control about 35%. Top five players, 65%. So we're looking at sort of more and more consolidation really coming through. There is also, I mean, other optionalities involved, but you know, that's for the future, because, as I said, it's a non-controlling kind of stake. But it could, of course, lead to a higher stake sometime in the future. The promoters, of course, still very much there at India Cements. India Cements has large land reserves, gives the optionality for expansion at some point in time. They, of course, also have renewable energy and shipping assets in southern part of the country as well, which UltraTech can put to good use, as it's shown with some of the earlier acquisitions. So this is, I mean, a quick bit about the deal itself. Let's quickly sort of welcome in our guests who are with us. I'm going to start with Pankaj first. Pankaj, your quick thoughts as a money manager who's seen many cement deals in your careers, you know, at Kotak and elsewhere. What do you make of it? What did you make of it? And does this sort of look like a deal where UltraTech eventually will go, you know, the full way, or this is just a foot in the door and saying, well, we are there, and to kind of show its intention at this point in time? Go on.
So, good afternoon, Prashant. From a industry perspective, if you look at the cement industry has traveled quite a distance over the last decade. Over the last 10 years back, the top 5 cement players in India used to be about 40% market share. As we speak today, it's moved about 55 to 60%, somewhere between that, the top 5 guys. And consolidation has played a very important role. And I think the way forward over the next couple of years will be more consolidation definitely on the cards. However, as we speak at the ground level, the near-term benefits of consolidation have not been seen. The prices have been extremely weak at the ground level. And over the last decade also, the pricing CAGR, if you look at, has not been able to beat inflation in the cement industry. So it's medium-term, long-term positive, but in the near term, the pricing in the cement industry has been extremely weak. And that reminds me, in 2003 to 5, if you go back and recall, there was a price war which happened between the erstwhile L&T when they used to own cement and Ambuja. And that time, both the companies sold at below their variable cost. And as a result, the smaller players in Gujarat belt had to close down for almost 6 months and they never came back again. The worry is that in the urge of taking market share, and to consolidate and grow their market share. The pricing has been kept extremely weak, and that's something which one needs to be worried about in the near term. The demand has been extremely strong over the last few years. Even in this year, the demand has been very, very strong. But how does that translate into profitability is yet to be seen. Pricing is extremely weak. So medium term positive, but near term we need to be careful on the pricing front, which is not so great in the cement industry.
Right, fair point there, Pankaj, and let's welcome Jyoti as well as Rajesh as well. This question comes to you, Rajesh. You know, in light of this deal, how do you view stocks from three places? The first one is from the standpoint of Ultratech itself. Now that they've gotten a foot in the door, how do they derive more value out of it in the very near future? How do you ascribe this deal into your overall, assumptions? That's point number one. From an India Cement shareholder standpoint, where do you see this going, and what your stock call would be out here? And then the third thing would be the region itself. You know, the southern part of the country, we have seen a lot of smaller players out there which could be bouncing on hopes of acquisition, them being acquisition candidates. And then you have one large player, Ramco, which is underperforming because in just the last 2 weeks, two big players have made deals here in the southern part of the country. So from an India Cement standpoint, from an Ultratech Cement standpoint, and all the other standpoint, where do you stand on this, Rajesh?
Hi, good afternoon. See, first coming from an Ultratech perspective, given that the other big player, Adani, has been aggressively in terms of M&As, Ultratech had to take some stands. They have already guided to go to 200 million ton capacities over the next 3-4 years. I believe this is one step towards that. This 15 million ton, obviously, this is just phase one, the strategic acquisition of 20%, 23%, and I believe this should be followed by the promoter stakes coming through. If that is, that would be the thought process in my view for Ultratech. And at least by acquiring this, this 23% stake, they have blocked out other big players eyeing into India Cements. So this asset, primarily, if you look at the assets or the operating assets are not great because these are very old assets, almost 30 year plus. Most of the plants are 30-year-old plus and extremely inefficient. They would require a lot of cash infusion to bring them into meaningful, margin space, which would mean to bring them back to 600 to 800 rupees EBITDA margin. That itself would require a decent amount of capex. The limestone reserves and other infrastructure and land bank is what ultimately has to be spelled out. Or what is the opportunity which Ultratech would get whenever they get hold of a majority stake. So this is from Ultratech perspective. Now, second angle from Ultratech, this acquisition will increase Ultratech, including Kesoram capacities in south, to close to 55 odd million ton, which would be closer to around 30% of the total installed capacity. They will go south heavy for sure with these two major acquisitions coming through. So that they will have to again balance out in other markets. If you look at from the minority shareholders of India Cement's perspective, this deal, the announced deal, comes out close to $90 for a company where the operating assets are extremely fragile and weak, and most of the value for the buyer is coming in from the non-core assets, and that is where we believe that's a good price which is offered. I don't see prima facie anything going north of $90. Even for Ultratech to bidding for the promoter stake at more than $90. Most of the other deals have gone through at similar price. Coming to the market overall in South, and as even Pankaj Tibrewal sir mentioned, he himself is a veteran, and it's honor to share the dice with him. And I totally agree. See, while in medium term, this 55% capacity market share of the top 5 player will go to 65%, and that will happen over next 1-2 years. And medium term to long term, the outlook is indeed from that is where the pricing predictability will improve. The pricing CAGR in the past 10 years is hardly, last 5-6 years is hardly 1-2% CAGR, and that has been the bane for the industry. At least that will go away. The predictability will improve, and margin profile should look up. But that is a medium term, 2 year, 3 year down the line.
Got it.
In the near term, there is pressure which the industry has to, though the pain will sustain in the industry near term.
Okay, got it. Jyoti, your first, and well put, Rajesh, well summarized. Jyoti, your first thoughts as well. I mean, I think a lot of viewers want to know whether they'll stay. This will stay just a financial investment at this stage, or will this be, will this eventually, it's a stepping stone for bigger ambitions?
So, to my understanding, I think this is, I think everybody is aware that Adani was also looking at buying India Cement, and I think this is one way of blocking Adani not getting into this deal. Second is, what does UltraTech get out of it? Possibly a billion ton of reserves and a 14.5 million ton of cement with 11 million ton of clinker. However, the thing which is, first of all, it's just a 23% stake. It's a long way to go. Maybe it might conclude by the end of this year. If it does, we'll have to wait and watch how things pan out. There are two plants like Sankari and the Sankari Nagar, which are actually, the reserves are not quite great. And the plants are not, the only benefit that I see is that possibly the plants have been underutilized around 29-30%. So if they were to, and of course, there's a huge cash infusion which will be required to kickstart the plants, at least at optimal levels. Thing that I see for UltraTech is possibly strengthening their position in the south, and possibly some sort of price sanity is expected to come going forward. So apart from that, yes, I think if he has put foot in the door, then obviously he's going to the objective has to be to take over major stake eventually,
yeah.
which I believe should happen.
Okay. But both of you, both Rajesh and you, Jyoti, agree that there has to be more investment to bring the assets and bring the assets up to a level where, it can generate industry level EBITDA per ton, etc. Let's, Mangalam is going to now give us a detailed outlook on some of the consolidation we've seen in the southern part of the country. Mangalam.
Absolutely. This deal is announced today, and if you just take a look at the last 2 weeks itself, this is the second deal which has been announced in the southern part of the country itself. Not too long ago, earlier we got the announcement that Adani Group has gone ahead and, invested in Penna Cement for a price of close to around 10,422 crores. What's interesting is that it's also the second time UltraTech and India Cements are coming together this year for a deal. I mean, it was in April where UltraTech went ahead and bought India Cements Maharashtra unit for for about over 315 crore rupees for 1.1 million tons. If you look at the capacity right now, India Cement on an operational capacity is about 1/10 of UltraTech. But here's where things get interesting. If you look at the southern part and you look at the two major factions here, we have UltraTech, which has close to 27 million tons capacity. This is what is operational as of end of FY25. Kesoram about 10.7. India Cements is about 13. And then you have, the Adani Group, ACC 9 and Penna Cement close to around 14 million tons as well. So what does this do to the entire market is something that we'll have to keep an eye out on. Secondly, what does UltraTech do to, improve India Cement's operating metrics? FY24 EBITDA per ton for India Cement was just about 172 as against UltraTech, which was closer to 1100. So how do they, maximize the operational performance out here is something we'll watch out for. This, of course, is if they go ahead and decide to increase their stake further and invest in the company, be in the driver's seat, so to say, as well. The other thing that will happen to UltraTech, if at all they go ahead in the driver's seat, is the valuation unlock, because UltraTech itself currently trades at close to around $238 per ton on EV per ton basis. India Cement itself is close to 88. So that big differential will have to, be taken care of as well. And finally, the deals which are being done are close to around 85, somewhere between $70 to $90 per ton on an organic capex basis itself. So that leaves us with basically three questions. One, will there be an open offer for UltraTech coming in from India Cements? What does UltraTech do to perhaps go ahead and derive value? Secondly, what happens to India Cements' promoter family stake? And thirdly, more importantly, what does this do to the market on the whole? The other South-based players who are looking to get acquired, or the other players who are looking to acquire some assets as well?
Well, that's beautifully summarized. Maybe I can just toss it to Pankaj. Pankaj, as you start to deploy some of the sort of money, you start the deployment process, and I think you already started, right? Is cement on your radar, Pankaj?
So I think industry structure-wise, I think cement is in a very sweet spot.
Okay.
And just look at some of the maths why consolidation is the biggest agenda for all the large cement companies in India. Even if you take 7 to 8% growth in demand, you need to double your capacities over the next 9 to 10 years. And if you look at the supply side isn't catching up over the next decade in terms of whatever plans have been announced. And the biggest bottleneck there is the limestone mines. Except South India, you look at the other places in India, and please don't forget that cement is a regional commodity. It's not a pan-India commodity. So you need to have limestone near to your factories. And except South India, there are not too many mines which are available for the expansion which will happen. And second, if you speak to the equipment suppliers, which is FL Smith and others, they are not taking any incremental order. They are full on order books. So I think that the over a period of time, organic supply may not catch up with demand. And most of the large players understand this part. And probably they are trying to secure in some of the smaller names, regional names, wherever they are getting a foot, along with infrastructure and limestone mines from a next decadal perspective. So I think my expectation is more consolidation should be there over the next few years. And smaller players will find it difficult. Maybe 2-3 million plants, 5 million plants may not be as relevant in today's context as it was a decade back. So I think you will see more deals emerging in this space as you move ahead.
More deals emerging. That'll be interesting because over the last 7 years or so itself, there have been more than 15 or 16 deals in this space, Pankaj. So what we'll do is we'll let you all hold on to your thoughts. We'll take a short break, come back on the other side. We'll focus on the deal, the other prospects and other aspects around this announcement that was made today as well.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential
You're watching us here on this special edition of the big cement deal. Well, Penna done, Andhra done, India Cement's done. The question is, who can be the next potential acquisition target among South Indian cement companies? Hormaz joins in with more. Hormaz.
You know, every time something like this, a deal of this sort happens in
any sector for that matter, almost every other company from the sector starts to buzz, and that's what is happening with all the other cement companies today as well. And similar to what we are seeing, lined up some potential acquisition targets, mostly in the southern part of the country, because spoken to experts as well that most of the southern companies are currently dealing with financial duress, so could be some potential acquisition targets there. Sagar Cement is the first one. Incidentally, this is the one that acquired Andhra Cements from insolvency proceedings. Currently has a capacity of 10.5 MTPA, clinker capacity of 6.5, has plants in Telangana, Madhya Pradesh, 3 plants in Andhra and a unit in Odisha as well. Been an underperformer so far over the last 12 months, only 16% higher, and trading at an FY25 EV to EBITDA multiple of 9.2 times. NCL Industries is the other one, where cement is not the only business that it does, but 85% of the company's revenue comes from NCL Industries. 2.7 MTPA capacity, plants in Telangana and Andhra, up 24% over the last 12 months, and trading at an FY25 EV to EBITDA of 6.2 times. The third one, KCP, and KCP was in focus because of other reasons all through the month almost. 4.3 MTPA capacity, both of its plants are in Andhra Pradesh, and that was the reason why it was in focus. 132% over the last 12 months, most of which has come in the month of June, and trading at an FY25 EV to EBITDA of almost 9 times. And lastly, Orient Cement, we've had conversations with the management. They've categorically said that they are not on the block, but 8.5 MTPA capacity, a clinker capacity of 5.5, presence in 11 states, plants in 3 states. The stock has also doubled in the last 12 months and trading at an FY25 EV to EBITDA of 9.2 times. So 4 potential acquisition targets in focus. Let's see which one comes up next.
All right, Holmas, thanks a lot for putting that beautifully, those acquisition targets, and which one comes up next. We have, the experts with us. Let's go back to Jyoti. Jyoti, I wanted your thoughts on 2 things. One, again, which of these names seem investable right now on hopes of there being a deal out there, or is that a trade that you would not want to make right now? And the second thing is that alongside capacity, we've, looked at limestone as well. When it comes to the Adani Group versus Ultratech in the southern part of the country, where do they stand when it comes to limestone reserves?
To your first question is, one, all the 4 assets that have been discussed, I don't think any of them are investable. In fact, there are others which are under this discussion. Ongoing discussion is there on other assets. And I believe you will see a few more deals happening by FY25, maybe 3 or 4 deals. Concluding by FY25.
I would rather, sorry to,
I would rather reserve the right to reserve my comments on naming any target as of now. But yes, they are currently.
No, not deals, but which would be investable ideas on, on the back of any potential deal?
I mean, if you look at Tamil Nadu Cement, it's a good asset. Tansum is one of the assets which is there. There is, in fact, I think My Home is another one which is there. And there are other 2-3 assets which I believe would be investable. Of course, within My Home, I would not look at Mela Cheruvu, but I think Jaya Jyoti still has got good reserves. So, yeah, I think for any cement company, reserves is the key thing. So, and to that extent, if I compare Ultratech and Ambuja, Adani is struggling. They do have reserve deficit, and that's the whole reason, why these acquisitions are happening. If you look at Penna itself, Penna again has something close to like a 1.2 billion ton of reserves, very good reserves. Because when I was in Lafarge, we were also looking at this. I've done DD of almost most of the assets while in Lafarge and CRH. So Penna has good reserves, and Ambuja, the key issue with Adani is they don't have reserves. So. Yes, while Ultratech is quite, they have good reserves across.
Yeah. But this is done now, right? I mean, India Cements is no longer in play, Jyoti, right? With this 23%. I mean, that's now...
No, it's not there.
It's not. In terms of cement capacity, Rajesh, where do both groups stand overall, on an overall basis, Adani and Ultratech?
So if I look at... on an overall basis, I'll just give you the numbers. Adani, just hold on, please. Post this deal, this Ambuja Ultratech would be close to 180 odd million ton, assuming, if you had this India Cements capacities in it, whereas Ambuja on a consolidated basis, that would be close to they would be crossing somewhere 95 million ton odd, with the Penna cement deal getting onboarded around. So see that for Ultratech, the target is 200, crossing or touching 200 over next 2 to 3 years, which with this they are on track. And Ambuja was targeting for 140 million ton. With Penna and other acquisition and a few greenfield, which they have announced, greenfield, brownfield, they are on track to touching 140 million tons.
Okay, got that. Had more questions, but I think we're completely out of time. So Pankaj, Jyoti and Rajesh, great to have all of you with us here on this special program.
All right, on that note, what we'll do is we'll take your leave. Stay tuned to CNBC TV18 for more news and updates. That's all we have from the big cement deal.
The most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming.
The yen has fallen to a 38-year low, and that is something which is causing nervousness in the Asian markets.
Nasdaq was up 0.5%. So, AI-led optimism. Amazon was the mover yesterday, 3.5% gains on the stock, 7.06 crore shares, which is 20%, a little over 20% of India Cement's equity.
For now, the first tick on the index is a tad bit in the red, down about 40-odd points. Makes sense to see what both Ultratech and India Cements are doing at the moment. Ultratech Cements is up, but not too much.
Licensing pact that we have with GIP, it's a pretty comprehensive relationship.
June 28 is an important day for India's bond markets, for rupee, interest rates, and indeed the Indian economy. Starting June 28, Indian government bonds enter JPM's Global Bond Index for emerging markets.
Flatlining for the benchmark indices, it's gotten a bit choppy.
इस बार भी महिलाओं ने बढ़ चढ़कर मतदान में हिस्सा लिया है.
CNBC TV18 were the first to report that Ultratech has bought over 20% stake in India Cements.
69 points higher on the Nifty, but it's 100 point off the lows of the highs of the day today.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell, the last hour coming up here. We're coming to you from the CNBC TV18 Motilal Oswal Studios. It's been a very, very busy day. The markets got, 50 odd points. But Rima and Mangalam, I was just looking at from the gap down that we had, all of the moves, you add up all of the ups and downs and ups, it's totaling about 500 points. 500 index points on the Nifty, and there's about 50 to show for it as we start the last hour.
Classic expiry day, right? That's what you call it, because we've seen near 1,400 points in terms of gains this series so far, which is the best since December 2023, if I remember. And now with levels coming to rotund numbers, you had 24,000 on the Nifty, you had 53,000 on the Nifty Bank. Maybe the street is going into July series ahead of the big events in July series a little light.
And we've managed to clock in so many gains in an election month where we had so much volatility. It almost feels like, that big slam dunk, that 5-6% move is long forgotten and markets have just been marching on. But we have the budget to look forward to. But not to forget, guys, this is also the day that the Nifty's hit 24,000 for the first time ever. And as the ticker team had pointed out, it took us only 23 sessions, which included the election day, to get from 23,000 to 24,000. And the big difference is in the last 1,000 points is large caps like HDFC Bank, Reliance Industries have come to the party. Today also Reliance Industries is holding up in the green, but the biggest contributor has been IT. And the Nifty IT index today has hit a fresh 3-month high. It's a 1.5% gain on that. So it's been busy and momentous for our markets.
There's a match also today, right?
8 o'clock.
There was a match.
There was a match.
I'm surprised no one said India-England.
India-England is in the evening. In the morning, there was South Africa-Afghanistan, and South Africa thrashed Afghanistan. So the beauty is that for the first time in the last 7 occasions that South Africa has reached the semi-finals of any ICC event, the first time they're going on to the finals. So let's see how that pans out. I mean, it's one of those days where you're not even done with half the day, the calendar day, and news worth nearly 4 days has played out.
I'm just happy it's a T20, so I can actually watch it. It will get done. Imagine if it was an ODI and you...
It can be as long as an ODI if it rains. Who knows?
Fine.
Don't be a damn chances of rains.
All right, we'll talk more about cricket as we go along, but... Actually, I just want to say one thing. Broader markets are looking a little weak today, and that is very, very clear. So it's almost 3:1 declines to advances. Nifty's up 50 points, but look at the market breadth. You got about almost 2,000 stocks which are lower and about 700 stocks which are higher. So it's really one way, and the divergence actually is only growing. Pull up the Nifty small cap index, if you will. It's down a full 1%. So, I mean, if it is about single stocks and and it's been about that, portfolios, etc. I think it's not exactly the best of days. Mid cap index also is down, so keep that in mind. Now, it's absolutely, I think it would be nice if you get a little bit of consolidatory kind of price action, because it has become, especially after what we've seen this week, which has been so good, a little too one-sided. And sometimes when that happens, and we were talking about that same time yesterday in terms of FII positioning in index futures, it's just one indicator. It's swung from extreme pessimism to a bit of extreme optimism in the extreme zone broadly, and that is just a signal sometimes. So we'll see. But we're at about 23,930 on the Nifty right now. Let's tell you what trades you can take specifically with Mitesh is with us. Mitesh, good afternoon. Good to have you here. So just weigh in on everything you heard and, of course, what you're watching. What are the trades?
Prashant, I think the Nifty hit 24,000 has come off from there a little bit. Again, the trend isn't under threat, but it's a sluggish move. So I would be willing to take some profits. Trade the stop loss tighter now to about 23,800 and see how it goes. This is on the spot. On the trading side, NTPC is a buy with a stop at about 365 for targets of 385, while National Aluminum is on the selling side. Keep a stop at about 185, look for targets of 172.
All right. What's also interesting is that today in the broader markets, like you were pointing out the weakness, one interesting trend is earlier we would get any PSU or rail-related stock or defense-related stock announce an order win, and we would see a big jump in the stock prices. On the other hand, today, there were order win announcements that came in from KEC, that stock is doing well, but it's currently off the highs of trade, so currently at the lower level of today's trading range. In the meanwhile, we also got orders from RVNL. RVNL won some orders from government agencies, etc. That stock too has moved to the low point of trade. So
EMS also, I think EMS also won an order,
and
that's in the red right now.
So that just tells you the mood of the market right now. Having said that, you said the moves around the lows and the highs were close to 500 points. We're not done yet. Why do I say that? Because 24,000 call has a fair amount of writing. So every time the Nifty makes a move towards that 24,000 mark, we can see some congestion. But at the lower level, the 23,900 put has been equally active. So even when we started the show, the Nifty was closer to 23,910, 23,920. From there, we've seen a good 30-point up move. So both the lower and the higher end of the markets are keeping each other busy. It's a tug of war, which explains the kind of moves that we're seeing.
Absolutely, and we'll discuss this. Maybe not done. A few more moves left before we call it a day. By 3:30. Mitesh, anything else jumping out at you in terms of obvious trades apart from what you've mentioned?
As I said, I think today's expiry day, so today's move is somewhat biased in the sense that it could actually go the other way tomorrow. So I would be rather today be more quietly taking trades, and therefore I'll stick to whatever accumulation from these two.
Then maybe we'll chat again at about 3:10 or so. Thanks very much, Mitesh, for that. PB Fintech is what we want to talk about. Stocks up about, I think, 4-5%. Citi is issuing a buy call, and they're putting out some reasons for it as well. Yash is here with details. Yash, over to you.
Well, as you rightly pointed out, PB Fintech is surging in trade today in an otherwise weak mid-cap space. And that is on the back of this interesting report which has come from Citi on PB Fintech. The rating is buy. And interestingly, Citi has increased the target price to 1,600 rupees a share from the earlier 1,435. Qualitatively, what Citi is saying is that they expect business momentum and strength to continue. Successful execution of their digital strategy at PB Fintech is something that they're looking out for. They've raised the EPS multiple also to 20 times FY32 estimates versus 18 times. Also, what they say is that PB Fintech is the right alternate plan for the other general and life insurance companies. Citi, in its note, has opened a 90-day positive catalyst watch on PB Fintech. They say that the first quarter is likely to reflect 5 important things. The first one is sustained growth in fresh retail health as well as term insurance premium. The second one, continued improvement in their point of sale person margins. The third one is a strong growth in motor insurance premium. Fourth one is sustained improvement in their overall EBITDA margins for the first quarter. And finally, revival in the Pesa Bazaar disbursement business, which was actually weak in the fourth quarter. They've also highlighted 2 negative risks to their upside estimation. First one is slowdown in their underlying premiums, and the second one is higher than expected marketing and brand spends.
Right, Yash, thanks a lot for that. So that's about PB Fintech, the stock up around 2.5%. Meanwhile, we are also seeing some traction in names like macro tech developers. Over the last couple of trading sessions, there was some profit taking in the real estate pack, but now it seems to be picking up once again. So macro tech developers is the one that should come up for you. The other one that's interesting is Raymond. It's moved about 3% off lows, still sitting with a cut of about 1%. It has been a big mover all through this week, this month, this year, and today is the annual general meeting. So, it may be starting anytime anytime now, so to say. So we've seen a swift recovery from the lows. Let's see how that pans out as well. Let's welcome Devin Choksi, who's the MD at DR Choksi Finserv, joining us now. Devin, good afternoon. It will not be proper if I don't start my question with your thoughts on the cement space and the big announcement that was made this morning, the deal that happened.
Yeah, good afternoon, Mangalam. Well, I think the important part of this entire activity of consolidation which is happening between the 2 large groups, the Ultratech and the Adani group, I think, which is comprising of ACC, Ambuja, among other smaller companies which they have acquired. I think it's very clearly defined with the 140-45 million tons capacity that Ultratech had before they acquired the stake, which probably I think took them to the larger one. I believe that they followed this particular process of Adani Group's narrative, wherein they said that I think they want to, or they aim to achieve 200 million ton capacity in 4 to 5 years from now. And that's where I think both these large groups are trying to create the presence which is matching as far as I think the geographical aspect of presence is concerned. As such, in the commodity business, I think if you probably play your math right, in the sense that I think on one side, I think you take the market share in respective regions. And on the other side, I think you have managed the cost well, which to a greater extent advantage goes to the ACC Ambuja in particular. I believe that I think the players would probably try and play the consolidation game. And fortunately today, if you see some of the smaller players, even they cannot be called so small, I think 10, 15 million metric tons of capacity already available with them. And they are available at EV per ton of somewhere around 80 to 110 kind of a numbers, including I think companies like Ramco Cement, which is otherwise a very strong group, is still available at I think a valuation which is far more cheaper compared to the ones at which the ACC Ambuja quotes, or maybe I think Ultratech quotes, which is far more about $250 per EV per ton. So from that particular perspective, you are getting an opportunity to consolidate at lower levels. And as a commodity, I think this commodity is likely to play out well, given the thrust on expansion in the country, infrastructure expansion in the country that we are having at this point of time.
Devin, is Eureka Forbes a company that you've looked at?
Not really. I think haven't been seen. I think for some time at least now.
Okay.
Got that. Devin, just a quick couple of points. Specific names, right? PB Fintech, you heard Yash just outline what the buy recommendation from Citi, the move that we're seeing today. Any thoughts here?
So yeah, Prashant, the good part is that I think the company has come out of red. So at least I think that is the last quarter's performance, which is suggesting that I think they are now working in profits. And then that is another good part, that I think most of the new age companies, the fintech companies, are basically working hard for making the money, and probably that is a good part here. Both the properties, the Policy Bazaar and Paisa Bazaar properties, both these properties are probably, I think, working well. In Policy Bazaar in particular, given the kind of larger amount of saving and investment funds in the hands of individuals, I think the more amount of insurance contribution will continue going forward as well. In fact, we are seeing the new business premium growth of around 20% for most of the insurance companies. And given the kind of strength that this company has created through the digital framework, I believe that I think they have the advantage. If they continue to remain in profit, probably I think the re-rating should be seen on cards. Other fundamentals being equal, I believe that I think the growth opportunity would be significantly higher, given the kind of increase in the wallet share as far as I think the individuals are concerned in buying the insurances, be it health insurance or be it even life insurances.
All right, Devin, Eureka Forbes has now moved to the high point of trade. They had an analyst day yesterday. So the key takeaways that people were looking at on Eureka Forbes was increased penetration of the products that they sell. We all know it as the company that sells AquaGuard, but now they're looking at, value-added cleaning solutions like vacuum cleaners, etc. as well. The penetration in India is close to around 6%, if I remember correctly, for AquaGuards and some of their products, the categories that they're in. And that for something like a China and even, countries like Philippines, etc. are in 20s, mid-20s to higher 30s, etc. So the penetration game is what the management is looking for. And from an FMCG standpoint, the only thing that the street is betting on here is what Pratik Pota does. Pratik Pota was, the man who turned Jubilant Foodworks around and then moved on to Eureka Forbes.
But he's been with Eureka Forbes for a while, right? I think
he's been about two and a half years. That also included the pandemic, right? So a lot of people gave the longer rope of the pandemic and a different category too, from consumer brands to consumer durables out here. So let's see how that pans out.
But the stock has not done anything.
The stock has not done much.
In fact, in the last 1 year, it's down 15%.
Yes. Yeah. But speaking about Jubilant Foodworks, let's talk about that because, there have been increasingly positive commentary coming in from brokerages on Jubilant Foodworks itself. And today comes from HDFC Securities, which says that after 2 years of being bearish on the stock, we have upgraded the stock to add. Why is that? Because the company has taken significant steps in improving the dine-in experience. They've added the 99 rupee value for money lunch feast as well. And they have a target of reducing the capex per store by about 15%. So they've upgraded the stock from reduce to add, target at 685 rupees, which also ascribes 40 rupees per share as a value for DP Eurasia, the acquisition that they had made earlier as well. And it was just earlier last week where we had Macquarie removing the company from its marquee sell list, citing potential upside risk to the like-for-like growth itself. And a few days ago, the company had opened its 2000th Domino's store in India. And we had spoken to the management. They spoke about improved LFL growth in the first quarter. The 99 rupee offering that they made for lunch should arrest the decline that we've seen in sales in the dine-in business. And the delivery business will continue to do well all through FY25. We'll see positive growth. Margins have bottomed out. They are likely to grow faster than competition this year as well. And DP Eurasia, which HDFC is ascribing 40 rupees per share to, will be PAT accretive in this year as well. The optionality here is Popeye's Chicken. That will cross about 100 crore in revenue this year too. So that's about Jubilant Foodworks.
I didn't know about this 99 rupee plan.
That's
not
lunch,
plan,
right?
lunch
Most
plan.
times lunch dine-in does not happen for us. We are more of the delivery lunch guys because we can't leave market hours and go for a lunch at Domino's.
What's the most popular, highest selling item for Eureka Foods? It's still the...
it's still the
Aquaguard.
Close to 60% of their
60%?
But you know, water is such a big theme. I'm presuming that even, purified water is going to become a really big... theme going forward.
Purified water, but more importantly, purified air. Because, I was looking through their presentation. It was a 91-slide presentation. One of them spoke about how the air quality has worsened year after year. That was scary for us, but also lucrative for the air purifier business, which is in low single digits in terms of their revenue contribution, but is growing very fast.
Talk to people in Delhi. I know somebody who's got an air purifier in pretty much every room. And it must be
I know people who've got an air purifier even in the car, though there's an AC there.
I mean, let's take a quick commercial break here. I think Devin is still with us. We continue the conversation here on the other side. Stay tuned.
AI/ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. 24,000 has been breached once again. We had hit it about an hour and a half back. Then there was a bit of profit-taking sideways move. And once again, there's been a sharp up move in the last few minutes. Look at the Nifty CPSE index. That's the one which is, seen a spike up in the last few minutes. Some buying has emerged in metals too. So the Nifty Metal Index will also come up for you on your screen. In terms of the large cap names, Tata Motors, in fact, the Tata Group stock. So Tata Motors and Tata Steel higher in trade. We spoke about metals. You add a I think even a JSW Steel to that list. And in the, CPSC basket, it's ONGC, which is trimming some of its losses. So the gains are only getting stronger. The mid-cap index now has flattened out. It was down 0.5%, but now it's back in the green and is absolutely flat. Banks have not participated in the last 10 minutes. It's been more about metals and few of the PSU stocks. PI Industries is surging in trade. The company has made an acquisition. Sona joins in for more on that. Sona.
Thank you for that. Well, yes, PI Industries, after 1 year, has gone ahead and made an acquisition. This is in the biologics segment. The company's Plant Healthcare PLC, which is a leading provider of novel patent-protected biologics products to global markets and has its markets in US, UK and other areas as well. Now, the consideration is £32.8 million or around 346 crore rupees. This is an all-cash deal that the company has entered into. PHC had consolidated revenues of $11 million with gross margins of 60%, but they made losses of $4 million. This is as on 31st March 2023. Now, this is an all-cash deal, and remember, PI Industries has cash of around 3,900 crore rupees in its books, most of it which was raised by their QIP. The brokerages, they like this particular acquisition. Jefferies is a buy call on the stock. They say the acquisition would give an annual revenue opportunity of around $75 million, and valuation is also attractive considering the product traction that the global market is seeing right now. Centrum says that yes, this acquisition shall strengthen PI's biologicals portfolio. However, at the start, it would be EPS decretive due to the losses that the company sees, and it is still at a nascent stage, but there is an opportunity to grow it from current levels, and that's why they are positive on this name.
Okay, thank you very much for that. Deven Choksi is still with us. Deven, is this a promising acquisition for PI Industries?
Yes, absolutely. I think the more important part is that when you have India manufacturing operations, which is quite competitive in the global space, and when you have global registered the products, which is significantly important for any companies which are in this business, be it UPL, be it PI, be it anybody else, I think they will probably find a merit-based approach wherein on one side, the registration of the product and the market exists. On the other side, you have got the manufacturing, which is quite competitive on the cost. I think that exists. So if you marry both, then definitely I think it's a profitable activity per se. Though this acquisition, in a way, I think we are not yet completely gone to the economics of it so far. But I believe that I think the directional call that they've taken in bringing their presence into the European markets particularly, I think it's remaining positive. So yes, I think this company, as such, I think company is operating with a good amount of financial discipline. They have cash in balance sheet, and then they go for acquisition. So invariably, I think they get the advantage of buying the asset at a price because they have the cash in the balance sheet. So we like this particular approach for this company as well.
Got that. Deven, Reliance Industries, of course, something you track pretty closely. Third day on the trot. Moves, of course, it had come off a little bit, so it's come back up to about 3,060 levels. Just what's the dominating driver here? Do you think it's the same telecom tariff increase expectation which is driving this, or it's something else? What's your sense?
So other fundamentals being equal, Prashant, I don't think that many things have changed as far as the narrative of the fundamental is concerned. Yes, I think we continue to believe that there is going to be a significantly higher case for increasing the ARPU, and so would be the improvement into the profits of the telecom venture per se. Currently, which is growing at around 20% odd kind of a growth, could possibly grow in about 20% plus kind of a growth, I think, if they increase the ARPU, and given the kind of connectivity that they have established in the ground in the mobile. So that is definitely distinctly possible. But to me, I think the current surge in the stock price is largely because of the fact that the additional amount of money has started coming in, and it has started coming into the frontline stocks. So earlier you saw the likes of NDFC Bank pulled up the entire banking space as a whole, and at the same time index weight also is higher. So to a greater extent, allocation of money started happening in different other stocks because of the new inflow. And Reliance was lagging behind for quite some time. With the new allocation of money coming in, the large caps like Reliance, I think, had to move. That's what we are seeing. As such, I think we believe that given the underlying strength of the retail business, as well as I think the business of Geo platform, and soon to be announced the renewable business, which will go on a commercial scale, we believe that the underlying potential for unlocking the valuation as far as Reliance Industries is concerned, remains extremely high in next 2 years.
All right, so positive on Reliance Industries. Reliance hit a record high yesterday, continues to do well in today's trading session as well, among the top contributors to the frontline index, which now has moved about 100 points from the time we started this show. They've been, just hanging there. We're seeing big moves in a couple of these power-related PSUs as well. So we have NTPC, which has moved to the high point of trade. Giving it company on the way up is Power Grid as well. And then from the broader markets, we do have some of these, MNC industrials which are doing extremely well. So Siemens has now begun to move higher. ABB India is doing well. And then the EMS plays or, the manufacturing plays like Dixon Tech, etc. are surging too. I wanted your thoughts in particular on names like Siemens and ABB. They've been moving well. A lot of them have seen decent moves this month itself. And every time they've been, looked at as companies that trade with a high premium to the other peers as well. What are your thoughts here? Would you look at any of these?
Well, I think, yes, agreed that the valuations have always remained higher. But on higher valuations, also the quality of the business has actually always improved. And that is what is significant. Though these companies, I think, would probably trade or they remain undervalued for some more time, till the time I think the market gives the momentum. It has happened. But the fact today is that I think they are having on one side the visibility of larger amount of order book. Given the fact that a significant amount of thrust is there in the areas of infrastructure, be it power or power-related utilities, or be it railways, wherein I think these companies have significant presence as well. I believe that I think the visibility for earning has remained extremely sharp in the coming times because of the order book that they're carrying. Though the valuations are expensive, I agree. But when market gives corrective downside, that's the time when you buy probably with a margin of safety. I believe that I think if you ended up buying in the fall, probably I think 20% odd kind of return is definitely expected out of such kind of companies in your portfolio.
All right, Deven, we'll leave it there. Thank you very much for your time and thanks for staying on for an extended bit today. Appreciate it. So that's Deven Choksi with some perspective. By the way, it's some really fast-paced moves, and it's changing so fast that you risk getting it wrong by the time you look at it and report on, say it out loud. Because we were up 160 points, which is basically from 230, exactly from when we started. The market has rallied 100 points. So 230 on, 100-point rally on the Nifty. 160 points is what that basically translates into. And something similar on the Nifty Bank as well, if you can look at it and see. Nifty Bank has been very, very subdued, so not very much at all on the Nifty Bank. I don't think we're seeing big moves, but the Nifty itself, it is really something, a sight to behold, just because of the sheer sort of large moves that we've been seeing.
So the expiry-related moves, Prashant, you said 500 points in terms of a move that we've seen.
I think that's 600 now.
That's become 600 now. And Tata Motors, that's the stock which is seeing a big surge as we speak. And the 3 p.m. move on the Nifty has definitely happened on the way up itself. There was a fair amount of call writing at the 24,000 call on the Nifty. So if we can, just once again pull up the call of 24,000, the one that expires in just 30 minutes from now, it will be interesting to see whether there is some more short covering which is likely there, because when we started the show, the premium was close to around 30 rupees. Now the Nifty is at 24,040. So those guys are obviously out of the money right now, and we'll perhaps see some more short covering if the market sustains at levels out here itself. So the next 15 minutes will be very interesting. But Tata Motors, that's the one that we were talking about. A big spike is what it's seen. Held its 79th annual general meeting yesterday. In conversation with CNBC-TV18's Shailesh Chandra, the managing director of the passenger vehicles and electric mobility business, spoke about the comprehensive game plan that the company has for electric vehicles going ahead.
I think the competition is going to be really good for the EV industry, because there will be a lot of buzz in the market about electric vehicles. There will be combined marketing spend. We have expanded our reach to multiple places, not only in terms of our sales outlet but also service. This year we are going to launch Curve EV as well as Harrier EV, and subsequently you'll have Sierra EV and many other products which are going to come. So I think we have a very comprehensive plan. Financial year 22 and 23 were very strong growth, double-digit growth for the industry. We saw moderation in the financial year FY24, where it came down to roughly 8.5%. Typically, the secular growth rate for PV industry is in between 6 to 7%. We believe that this year, because of the last 3 years of very strong growth, there will be a moderation this year. This can be therefore anywhere between 3 to 5% growth rate. That's how I see PV industry. It will be more skewed towards the H2. H1 will be slightly more challenging as compared to H2. Post monsoon things should be better, and post the festive season. So that's how I see the industry.
Girish Wagh, the Executive Director of Tata Motors, also spoke about the capex plans, the industry growth and the expectations from the union budget. Listen in.
In Tata Motors commercial vehicle business, we have given a guidance of around 2 to 4% of the revenue will be our capital expenditure. Over the years, the amount that we have been spending on advanced technologies addressing the mega trends of autonomous, connected, electrification, software, digital has been consistently increasing. And I think in fact this year more than 40% of our capital expenditure will actually go on these technologies and developing our products and services in alignment with these trends. As far as commercial vehicles is concerned, the government's push on the infrastructure has been very, very beneficial. So we expect the government to continue that, and that's the stated intent also. Secondly, I think the government has also been very supportive on electrification with both demand and supply side incentives, whether it is FAME, PLI, GST. So we expect those also to continue.
That's interesting. You know, I just want to quickly highlight two other names, right? We mentioned Reliance Industries. The market's right there, 150 odd points. But IT will be first off the block with earnings, and there is expectation that there'll be it'll be a little better in terms of a quarter, the first quarter, and Infi is up 2% as we speak, and you got TCS which is coming up with a decent gain as well at this point in time. So this is some of the other stuff which is moving on as far as large caps are concerned. Some more important sound bites from large companies, and this is coming in from Mr. S.N. Subramanian, who will take over the role of chairman for both L&T Group's sort of listed technology companies, LTI Mindtree and L&T Technology Services as well, after A.M. Naik stepped down. My colleague Shilpa had the opportunity to speak with him on the sidelines of the AGM yesterday, and I just want to play out a quick soundbite for you. Listen in.
There are green shoots, there are positive signals. I'm sure it will reflect on the results. That's the way one should see it. The way our IT companies are doing, 10 to 12% growth, one of the best performing mid-tier companies, now they're majors also. As we just mentioned, the 5th largest in market cap and 6th largest by revenue, and we continue to grow. Right. Both the companies have the right leadership and the right kind of atmosphere to grow. They're well recognized by the clients. We started some new business like L&T Green and L&T Semiconductors, so spending a lot of time on that. We are more in the design aspect of it. If the design does well, tomorrow we may look at contract manufacturing, but we are not going to invest in a foundry or an OSAT or such a facility. That is not in the cards. So we are more on the intellectual part of it, that is the architecture, the concept, the design. And tomorrow, if some client wants us to assist them in contract manufacturing, we'll look at it seriously. But very clearly, we're not entering into any investment in foundries or OSAT or anything like that. No.
That is S.N. Subramaniam, the new chairman of LTI Mindtree and L&T Technology. And he also spoke about, of course, semiconductors business. But since we're on the subject of IT, there are two brokerage notes on IT companies. The first one is HCL Tech, where Macquarie has an outperform rating on the stock. It's a marquee buy for them, and they've raised the target price by 6%. Now, the key reason for the increase in target price is their margin expectations for next year and the year after. FY26 and FY27 have gone up. The reason is HCL Tech's margins came under pressure for the last 2 or 3 years, from FY20 to FY24. And that's because of rapid expansion in their workforce. But now what Macquarie is arguing is that a lot of the incremental workforce has been the fresher hiring. So the overall cost
of the employee will come down as the revenue, starts expanding, and therefore, in their estimates, that FY25 margins will remain subdued, but in FY26 and FY27, aided by higher utilization because you've added on low-cost employees, freshers, their margins will expand. Kotak Institutional Equities has written on Coforge. They've initiated coverage on the stock with an ad rating. Their target price is at 6,000, and they're saying that strong growth will continue. They're factoring in a 20% EPS growth from FY24 to FY27, which is driven by about a 12% organic growth and some expansion in their margins. They're valuing Coforge at 30 times forward multiple, FY26. That said, even though they are anticipating, a 20% EPS growth, Kotak does believe the company's own ambition of hitting $2 billion in revenues and 150 to 250 basis points of margin expansion appears to be ambitious. There are some risks that they've also highlighted. One is key man risk. Now, a lot of the turnaround which Coforge has seen in the last last few years has been on account of, Mr. Sudhir Singh, who is the new CEO of the company. He came on board a couple of years back, and the growth of the company, saw a massive jump up. So there is a key man risk associated with Coforge. Two, close to more than 70% of their revenues coming from BFSI and travel. Therefore, high vertical concentration. Third, M&A integration related risks of Cigniti acquisition, because they've acquired Cigniti for its, the Fortune 500 clients, 28 of them. They need to integrate them well, make sure they can cross-sell to derive the synergy benefits from it. And fourth, now that Bearings is completely exited, they do not have a promoter, so you need to make sure that there are corporate, adequate checks and balances, corporate governance standards are maintained in the absence of any promoter. So that's about, two IT companies, since IT is, one of the leading sectors of the day. But let's now focus on Godfrey Phillips, the company's family feud case between son Samir Modi and mother Beena Modi. Samir Modi has received a big relief from the Delhi High Court. Ashmin joins in with the detail. Ashmin, first, even a little bit of the background.
Well, there has been trouble brewing within the promoter family as well as the boardrooms of KK Modi Group companies and the likes of Godfrey Phillips. Now, what's important is that on May 30th, Samir Modi had attempted to get himself involved, be party to the boardroom proceedings. And there, Samir Modi has alleged that he was roughed up by the PSO of his mother, Beena Modi, that the other boardroom members were participants. They were watching. They did not intervene, makes them participants. To that end, Samir Modi has also filed an FIR. He's also moved the court for monitoring that investigation. The court has directed for CCTV footage to be secured. But independent of these proceedings, Samir Modi moved another application before the Delhi court. And in this application, he points out that this dispute that occurred, this incident that occurred on May 30th, is indicative of a larger dispute brewing within the family, and that he anticipates two major concerns. He brought to the court's attention two major concerns. The first is that he anticipates that on account of this dispute, he's likely to be thrown out of the board of various KK Group companies, including Godfrey Phillips. That's one. The second is that he has invested considerable energy, time and money behind growing the retail division of the company, the Godfrey Phillips, which is 24/7. That 24/7 is growing, is sprouting up across various cities. That is the second concern that he highlighted, that he anticipates that Godfrey Phillips will actively try to run the retail division into the ground by refusing to pay the vendors, the salaries, even the electricity dues. Now, it is in response to this that the Delhi court today has passed ex-parte orders granting relief to Samir Modi. Ex-parte orders have been passed restraining Beena Modi as well as the board of directors as well as the group companies, that number one, Samir Modi cannot be tossed out of the board. That simply cannot happen. The other key relief that has come his way is that this business, or the retail division of 24/7, cannot be discontinued, cannot be shut down, cannot be run into the ground. What's also important is that Samir Modi has extended an olive branch, saying that he hopes that this dispute between the family members can be settled via talks, can be settled via mediation. That is something that the Delhi court has taken on record, but importantly, has deferred the hearing in this matter to the next month of July. Again, important to point out, these are ex-parte orders. So Beena Modi, the board of directors, the company members were not heard today in these proceedings. So that is something we'll need to watch out for. But for now, certain relief coming in for Samir Modi, cannot be thrown out of the board, and 24/7, the business has to be continued by Godfrey Phillips.
All right, 24/7 business has to be continued by Godfrey Phillips. Not a big immediate impact on the stock, but this is definitely an imponderable that we'll keep an eye out on. Nashmit, thank you for bringing us updates on that one. We'll take a short break. On the other side, we'll get you what the dealing rooms are saying in our special Tea Street Chatter.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
You know, it's a big deal, and this happened this morning in the cement space. We at CNBC TV18 were the first to report that Ultratech has bought over 20% stake in India Cements via the block deal which happened in the block deal window between 8:45 and 9 o'clock. Now, Ultratech in a statement has confirmed this and more. Let me actually get you the details of what this actually all means. So, cement major Ultratech, the largest cement company in the country with about a 25% overall market share, is buying into South India-based India Cements. Ultratech has put just under 1,900 crore rupees to work to pick up 23% equity stake in India Cements. Remember, there are two large shareholders. One is the Radhakrishnan Damani and a sort of family, which owns a little over 20%. And then there is, of course, the promoters who own around 28% in the company. Now, this works out, just under 1,900 crore investment works out to 267 rupees per share, which is slightly higher than what the stock closed at yesterday. Remember, yesterday we had a 15% rally in the India Cement stock. So the deal this morning happened at a slightly higher price as opposed to the last closing price. Some more details in terms of the companies themselves. Now, India Cements has an overall cement capacity of 14.45 million tons per annum, and it is majorly present in the South India markets. What about valuations of the deal? So, at 267 rupees per share, Ultratech equity stake.
Welcome back. The Nifty now closing in towards that 24,050 mark, nearly 0.75% in terms of gains coming by, and that is despite the Nifty bank still being in the red. So we are now seeing some pickup in a couple of these auto names. So M&M is one of the stocks that has moved higher. We have Adani Ports as well, Adani Group stocks doing well too. And we've seen a sudden pickup in a couple of these FMCG heavyweights as well. So ITC is one of them that has recovered from the lows, and from the broader markets, FMCG names that are doing well include the likes of PNG. So that's the one that should come up for you, up around 5%. And, all the others which are surging, Kalyan Jewellers for one, up around 5% as well. Good time to get in what the dealers are saying right now. Nimesh joins in with all things from the D Street Chatter. Nimesh.
Hi Manglam, so another strong day for the markets, but the breadth is quite weak in today's market and the mid-cap has relatively underperformed. That's been the trend of this week and that continues today as well. So it's a large cap led rally in the Nifty and to some extent in the Bank Nifty as well. Having said that, again, the trend seems to be that the FIs are net buyers, and I understand there's going to be a market at close basket buying as well in select Nifty names. So that's going to add to the FI data, and on top of it, there is a Nifty rebalancing as well. So today's number will not be very clean to read because there is Nifty rebalance, there is MSCI, MOC flows, as well as the large blocks where the promoter entities were sellers. So again, that will add up to the institutional data. But the big sector of the day is clearly cement. We've been talking since morning on the back of a large M&A which Ultratech announced and a potential consolidation. We've seen big moves in the cement stocks, and there is a bit of buying interest as well. But broadly the feedback is that this last leg of the rally is largely led by the large caps, and now you're seeing some bit of underperformance in the broader market stocks.
What about stocks, Nimesh? What's the buzz that you've picked up on individuals' names?
Well, Rima, it's all about blocks and more blocks, right? So most of the names that I'm mentioning are part of the stocks with large blocks. The first is Arvind Fashion. The stock is under pressure today, down 5%. There's a large block in the morning trade, nearly 25 lakh shares. I understand the promoter entity was a seller and leading domestic AIF was a buyer there. So disclosures could be interesting. The second name is Styrenex. Earlier it was known as Ineos Styro Solution. Large block in that stock. Well, the stock is recovered, but even there was a block of more than 7% equity changing hands. Again, the promoter entity was a seller and some large domestic mutual funds and a few large HNI investors were buyers in that block as well. The third is where I'm hearing potential block deals. So the first one is AU Small Finance Bank, virtually a day's low, but the anticipation is that it could be a large PE stake sale in AU Bank. And the second large deal could be in Polycab. Again, in Polycab, while the stock is under pressure today, there is an indication that the promoter entity could be a seller in that name as well. So these are the two potential blocks. Add to this, there is a bit of anticipation that maybe Bharti Airtel could happen either today in the last 15-20 minutes or early tomorrow morning. So again, Bharti is something to track as far as block is concerned. And the last name is HDFC Life. After a long time, some bit of interest seems to be back. So today there are very strong buy flows, expect high delivery volumes, and looks like some bit of FI interest is back in HDFC Life at these levels.
Okay, AU Small Finance Bank and Polycab, that's interesting. So these are potential blocks. I mean, could happen even today. I mean, post-market hours, we'll know. I mean, many of these happen very quickly. Nimesh, on Bharti, what are you hearing specifically?
Prashant, so I highlighted this a couple of days back as well. So indication is maybe Syntel will be a seller. They've sold in the past as well. And again, Syntel could be a seller in the Bharti Airtel block. So that is something to track. The indication is, I mean, at least from a market point of view, the feedback is there is a bit of depth now, which suggests that the block can happen in the last few minutes of today's market, or maybe tomorrow morning as well.
That's a very large block, right? I mean, I think they own about 3%.
Oh yeah, exactly. So Syntel has been a seller in the last 1 year in Bharti at every levels, and now again the indication is that maybe Syntel will sell further because the stock is also rallied pretty hard, right? So, but again for telecom overall in general, Prashant, the other important thing to track, which now every sell-side analyst has been writing, is the tariff hike, and the indication is that maybe that's around the corner. It's not a question of now whether it will happen. Now it's a question of only as to when it will happen. So again, there is a lot of chatter with regards to telecom and to the fact that maybe some tariff hike is around the corner.
And AU Small Finance Bank, I think there was a board meeting today where they were going to consider a fundraise via QIP. So board is meeting for a fundraise, but simultaneously bankers are working on a block deal. Nimesh, thank you very much for that. Mitesh is with us now for a few BTST calls or STBT. Mitesh, in this market, it's only, buy today, don't sell tomorrow?
No, I think BTST, guys, we should follow the discipline. You buy and sell tomorrow and then shift to some other stock. I think that's the way to do it. SRF looks very good to me. So 24.40 should be the stop loss. 2,500 could be the target for tomorrow. And the other one which I like is Petronet, which I will give a BTST with a stop at 318 for targets of 324.
Right. Just before we let you go, do you have a view on Avenue Supermarts? Now recovered a strong bit from the lows, actually, currently at the high point. Nearly 4% of the lows. It's zooming ahead. It's seen a good recovery from its 52-week low as well. And, ever since the company has announced that it will increase the pace at which it opens stores and also look at Q-commerce as an opportunity, the street seems to be liking that. We've seen a bunch of brokerage notes as well. The other one, when we talk about quick commerce, you can't keep your eyes off Zomato. Every dip out here is being bought into as well. It's not too deep. Zomato is the other stock that should come up for you on the screen. Currently higher, spiking. Both Zomato and DMart, if you put together, the move has been pretty similar in terms of the way the chart looks. What are your thoughts here? Is there any trade in either Avenue or Zomato?
So, Zomato, I don't have a very clear trade as of now. The trend is up, but from a trading, risk-reward equation kind of view, DMart or Avenue Supermart looks very interesting. Keep a stop below 48.60 here. I think this could retest the 5100 level, which it tested a couple of days back, and maybe even go higher. So, very positive chart.
Okay, thank you very much for that. Ambrish Balika is also with us now. Last 10 minutes to go to wrap up what's been another very strong session. And week to date, we're now inching towards a 2.5% rally. Ambrish, afternoon. We always look forward to your stock pick. Which one is it today?
Today's pick is PG Electroplast. That's an EMS provider which is fully backward integrated. And they manufacture a range of equipments right from air conditioners to washing machines, LED televisions, air coolers, bathroom fittings, as well as automotive components. They have 7 manufacturing facilities here, and they cater to about 70 Indian and international brands. The company has grown 10 times in the last 8 years. In fact, the revenue has grown from 263 crores to in FY24 at 2,747 crores. The order book also is extremely robust. I'm expecting an EPS of about 100 for FY26, and here my target price is 4,000.
All right, Ambrish, thanks a lot for that. Just stay on. We'll take a short break, come back. We'll continue our conversation with you and also, look at market closing. It's been a phenomenal series, almost 1,600 points in terms of gains, and now we're quickly moving towards that 24,100 mark on the Nifty. So the last hour blast definitely belongs to the bulls. A lot of short covering is what we saw on the 24,000 call on the Nifty. So expiry moves clearly playing out. We'll cover all of that after this short break.
Valued at $85 per ton on a enterprise value per ton basis. This indeed is lower than what it would cost if you were to actually go ahead and put a new cement plant. That's essentially lower than the replacement cost. Now provided that this 23% stake in India Cements is just a stepping stone into future further consolidation of Ultratech's holding in India Cements, what does this do to Ultratech's own capacity? Now, currently Ultratech has a capacity of 20.5 million tons capacity in southern India. This is, of course, excluding Kesoram Industries and the capacity there. With investments in India Cement and Kesoram combined, Ultratech will more than double its capacity in South India to 45 million tons per annum. In terms of market share, this would translate a 22% regional market share for Ultratech as compared to the 10% before these transactions. Remember that the two top players, essentially Ambuja and Ultratech, between them in the southern markets are expected to control 35% of the total capacity there. Now, just to look ahead, India Cements, apart from the cement capacity which I already outlined, also has large land bank reserves, which indicates optionality, right? Growth optionality if they want to do expansion, etc. India Cements, by the way, also has renewable energy and shipping assets in South India, all of which a player like Ultratech can put to good use. So there you have it. Ultratech, the largest cement player in the country, adding another important asset to its kitty and really moving towards its stated shuru.
Welcome back. The Nifty is comfortably above, 24,050 with a 200-point up move. One story which the market is waiting to play out is on the telecom side and tariffs. Even Nimesh was talking about it, and it appears to be a matter of when and not if. Ambrish, now the question is that we've been expecting a 15 to 20% tariff hike for a while now. How much of it is in the price? Assuming we get one in the next few days, will we still see a positive up move on the stocks?
Although for the last couple of days we've been expecting this hike, but I don't think it's still there very much in the price. I think as and when it's announced, I think we'll see a decent up move, especially for Bharti as well as Vodafone, because that's one stock which has been on the move. And a hike in tariffs will be extremely positive for Vodafone.
Yeah, with biggest delta, right? Actually, let's just take a quick look at what all these stocks are doing right now. I think I saw Indus Tower, which has moved to the high point of the day. It's up about 3.6%. Idea has moved to the high. You can just have these up quickly. Indus Tower 3.5 higher. Yeah, there you go on your screen. Pull up Idea, sharp spike. It's moved to the high point of the day, about 4% up, almost. I was joking how Idea at 18 is now an adult. It's now almost 19. So it's a sharp move coming through there. Bharti, of course, it's a big one. So 2% higher, 1485 on Bharti coming through right now. Look at Bharti Hexacom. Bharti Hexacom, of course, it's seeing a bit of a move on the other side. Reliance is not seeing any incremental moves, but yesterday was a very large move for Reliance, and it's third day of gains coming through, 3,064 on Reliance. If the hikes do come, whenever they come, and we've been Reema's been, of course, highlighting this for the last fortnight or so, Amrish, but some are saying, well, this would be the first. So, the first hike could be whatever, 15, 18%, but then it kicks off the process of more hikes in the future. So,
absolutely.
Is that the way you would look at it?
Yeah, because see, till date, for a long time, we've not really had an official hike. Whatever ARPU improvements we were seeing across all the players was more due to a better mix than real hikes. So, this hike from that point of view will really improve the revenues as well as, as well as the bottom line in a major way, because whatever increase in revenue, I think straight away goes to the bottom line, because, with these, hikes, your expenses don't go up in the same proportion. So most of it will come to the bottom line. So from that point of view, I think it's extremely positive, which we've been waiting for a long time. And like I said, across it is positive, but I think more for Vodafone.
All right, we're looking at markets to close in just 2 minutes from now. As Ramesh said that, there could be perhaps a large trade on Bharti in the dying minutes of trade. If not today, then maybe tomorrow. So just keeping an eye on Bharti as well. The stock's suddenly taken off at the high point. Tariff hikes, is something like you guys were just talking about. But, it's the bulk deal that we'll keep an eye out on for Bharti Airtel as well. Just 2 minutes to close. Let's see whether that happens right now or maybe sometime in the near future.
That's a bit, but if it's, I don't think it's happened now. Volumes are, you'll see that. It's a big one, very, very big one. So, we'll of course keep track of it. So telecom spikes once again. The market, the Nifty looking very strong, almost 200-point gain today. We were talking about the sum total of all the up and down that we've seen. Guess what? It's about 800 points for the Nifty. So just an incredibly volatile day just on the index. Nifty Bank quieter just in terms of moves, sheer moves, not at all comparable. And of course, I don't think there was any improvement, even though whatever else was happening on the broader market, in the Nifty, there's been no improvement really in the broader market. So advanced decline is still sharply negative. 900 stocks are higher and about 1700 stocks are lower. And the small cap index will end about 0.6% lower. And the mid cap index also will end. The mid cap index will end about 0.4% higher. But market breadth is negative. But once again, I think can't take away from the simple fact that very, very vibrant markets and lots and lots of activity through the course of the day. Lots of blocks, a big deal. What more can you ask?
There were lots.
The expiry. Add to that the expiry.
But there were lots of stories today. The big one, of course, was cement and the purchase of, the purchase by Ultratech Cement of a 23% stake in India Cement. So cement stocks were on fire. IT, which has been a laggard. Now, year to date, the Nifty is up 10.5%, but the Nifty IT index just turned year to date positive. In fact, it turned yesterday. So IT, which was a laggard, has now come back to the party. Reliance Industries continue to maintain its momentum, 1% gain today, but close to about 5.5% for the week so far. On the broader market side, you've had India Cements, of course, the big gainer. Whirlpool was higher. Macrotech Developers, Mazgaon. You had Root Mobile, which spiked up on pretty large volumes. Lots of action, though the advanced decline ratio was a bit disappointing at 1:2. One stock gaining for 2 in the red. It's a wrap and closing bell from the entire team. Thank you for watching. Don't go anywhere. Markets Forward comes up next.
A long-term capacity goal of 200 million tons per annum. Back to you.
So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence it will be all about governance and earnings growth.
GST had certain advantages of avoiding multiplicity of taxes or tax on tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
A strong session on Dalal Street with the Nifty scaling yet another peak, tops the 24,000 mark for the first time ever. Nifty Bank also rallies and hits 53,000 for the first time. IT sector led gains. Infosys, TCS did very well. Marginal underperformance once again, as we've seen through the course of the week, by the mid-caps.
Ultratech Cement picks up 23% in India Cements for 1,885 crore rupees in what the company describes as a financial investment. The deal likely gives a prominent investor an exit and opens up consolidation possibilities.
Dr. Reddy's is set to buy a top global nicotine therapy OTC brand from Helion for £500 million. The brand, though not in a high growth segment, is seen as a valuable purchase. The surprise in the latest 11,340 crore Spectrum auctions, which closed yesterday, is the higher than expected 3,500 crore rupees spent by Vodafone Idea. All eyes now will be on the impending tariff hikes, which are expected any time by the telecom companies. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to wrap up the day, but more importantly, try and prepare you for what is up next, the next trading session. I'm Prashant, with me my colleague Rima Tendulkar. Hi.
Hi, and such a big day, right, for a market. So many stories, and we're going to be with you for the next 20 minutes with all the big news, key developments, top corporate voices, the events to track ahead. But first, the market action. I know in the morning it was the cement deal which stole the limelight, but by the end of it, you couldn't take your eyes off the ticker, 24,000 and closing comfortably above it.
You know, I was just, Rima, seeing, so it was not just one session, it was, I think, 6 different sessions. We started with a 60-point gap down. Then we had a 170-point gap up. Then we had a 130-point sell-off. Then we had a 160-point gap up, a pullback. Then we had a 100-point sell-off. And then we had a 130-point... Guess what the total is? About 800 points.
Incredible.
So, I mean, 800 points intraday sort of swing on the Nifty. And it was not bad. I mean, by close on a day-on-day basis, we had 0.75% to show for it, which is about 200 points. So, it's very, very good going. And this week is turning out to be fantastic once again. Just a few other things before we move forward. There was a big cement deal, as Reema said, right in the morning, happened in the block window. And that, of course, sparked a rally in some of the smaller cement stocks. We've been highlighting some of this. IT has come back. IT is first off the block with earnings. So, and there's been just general expectation that this quarter will be better as compared to the previous one. Infosys, TCS, etc. did well. PSU banks, if you want to look at a cohort of stocks which did poorly, was maybe PSU banks, some profit booking. Now, advanced decline was negative, clearly negative. But I have to say that if you just sort what was down by volumes and what was up by volumes, you still have to give it to the gainers, because volumes it's a long list of volume-led gainers, whereas if you kind of do the same thing on the downside, you kind of fizzle out after the top